of profit, primarily coming on account of commodity pressures in India. Not really too much of a surprise. In May, we had guided the street saying that we will have a better margin performance in second half compared to first half. And it's broadly playing out that way. Commodities had peaked in May, June. They started kind of coming down thereafter. So we are seeing the peak of commodity costs. Consuming costs are much, much higher than replacement costs. And hence, first half margins are bound to be under pressure because of that. But we definitely see our margins get back into a normative range by Q3 onwards.
Okay, all right. So normative range by Q3 is what you're saying. Okay, in terms of the overall demand scenario for soap, because that has been the overhang. Even if you see the overall performance, it's been a good volume growth, and barring soap, it's been mid-teens, which is not the case in any other FMCG companies, right, Mr. Malbari? But there's something that's not working in the soap space, and one of your peers has managed to do well in the segment. What is it that's not working, and what is the kind of strategy in place that you're going to adopt to help this particular segment grow?
No, you're right, Mahima. I think if you look at the India growth, if you are to kind of just exclude soaps for now, it's been actually a stellar performance. We've kind of hit mid-teens across the range of portfolio. All our categories have actually done well. Hair care, hair color, household insecticides, everything is kind of sequentially kind of moved up. So very, very happy with the rest of the performance apart from soaps. Soaps has been a severe case of a lot of pricing going in because of the commodity costs and rebalancing happening. Grammages have been titrated downwards. There have been multiple changes on this front. And we do see stability kind of coming in, I think, in the next few months, because we would have kind of peaked in terms of all the increases which had to be passed on. And hence, again, from a Q3 perspective, we do see an improvement. It will be a sequential improvement from here on. Possibly we are seeing the most difficult kind of quarter in terms of both soap margins and volume titrating in favor of price.
Okay, all right. In terms of the international business, because I was looking at what you said in your con call plus your press release as well. Indonesia has been the pressure point, right? Because there's flat volumes. There's also revenue degrowth of around 4%. But Africa business has done well, and to a lot of extent, that has kind of offset the negative performance of Indonesia business. But just want to understand as to what's not working there. From what I understand, that your pricing there is higher than people selling the same products there. Is that correct? And if yes, do you think that lowering the prices might not be the right approach? But then what is it that you're going to do to bring back the kind of volumes and revenue growth in the Indonesia segment?
Sure. So I think before we deep dive into Indonesia, if you were to just look at the larger international business, the last 2 years has been actually a very good performance for us on the way we reshape the profitability of the international business as the complete business together, moving from 10% to close to like 17-18% improvement on margin. So the margin profile has become quite good. It's become a healthy business for us internationally, and now it's about growing in profitability. During the course of this quarter, we did face some kind of a macro headwind. The overall growth have slowed down in FMCG in Indonesia. And to top it off, we did see some kind of a competitive pressure on pricing. We do see these as temporary blips. I don't think this is going to kind of sustain for long. So in a few months, we should start getting back into both top line and revenue and EBITDA growth in Indonesia. So it's in some segments we are seeing some extra pricing pressure, but these things kind of settle down in a few months' time. Don't see a structural issue on that front.
All right, so that was the management of Godrej Consumer, and welcome back. You're watching Ask Profit here at NDTV Profit. I am Mahima Vajrajani, and with me is Alex Matthew. Now, in terms of just to give context of the Godrej Consumer overall, like I mentioned, it's been a weak quarter in terms of where margins stand, but volume growth has been good, and soap business and the Indonesia business is kind of the overhang when it comes to the overall business. But that's with regards to where Godrej Consumer is concerned. Let's try to pull up the chart and see how it's doing in trade today. Not doing much, down by about 1 to 2%. There you go. It's come off, in fact, from its low point, trading around 0.8% lower. But in terms of markets, Alex, a tad bit of pressure, right? Nifty 50 down by about 0.6 odd percent. The bank Nifty also seeing cuts of about 50 basis points, down by about 0.5 odd percent. In terms of the advanced decline ratio, let's try to pull that up because that's going to be interesting. The pressure is more in broader markets right now, a tad bit more than where the benchmarks are. There you go. There was a point in time when there was divergence, but that graph is interesting because it's widening by the hour. So that's interesting. In terms of sectoral performance also, let's try to pull that up because
most sectors are in the red.
Most sectors are in the red. So the pressure continues. I think it's only the media which is in the green, and it's almost flat. So the sectors also under pressure, but broader markets are a tad bit more under pressure.
No, 100%. And actually, there are quite a few stock-specific actions today. I was going to ask you about Kalyan, but we will talk about it. I'm sure somebody has a question on this. And by the way, standard format, the way that you can get in touch with us, the number on the top of the screen is where you can message us, as quite a few of you have already done, and the number on the bottom of the screen is where you can call us. By the way, we've got Sameer Dalal of Natwarlal and Sons joining us, as well as Nilesh Jain joining us this morning to answer all of your questions. Good morning to the both of you, gentlemen, and thanks so much for taking the time. Let me start with the first question on Dr. Reddy's laboratories, okay? And this is from Mr. Ekambaraya, who's writing in from Hyderabad. He's holding at a level of 1,200, which is more or less where the stock is currently at. And considering that their exposure to the US is significant, he wants to sell it and buy something like a Persistent or a Worry Energies or a Suzlon. And by the way, from that list, Worry also has exposure to the United States. But given the current context, Sameer is wondering whether to do that, whether to sell out of Dr. Reddy's laboratories because he's not really making too much of a loss and move to one of the stocks he's mentioned.
So no, I don't recommend he sell Dr. Reddy's, right? So I think valuations are relatively inexpensive. The worry that everyone has that Donald Trump is going to put a certain amount of taxes on the pharma space, I think that's a bit overdone for the simple reason that India is predominantly a generics manufacturer. And generics to a very large extent will not have a problem because we are actually helping him bring the prices of medicines in the US down, right? If you also look at the kind of ANDAs and the filings that are there from Dr. Reddy in the US market are quite large. Also, secondly, US is not the only market. Yes, it's the biggest market, but they also cater to Europe, the rest of the world, India operations, all of those. Those will all continue as normal. Given the valuations are not very rich, given the fact that we believe the growth opportunity still is extremely strong for the pharma space over the longer term, we would suggest staying invested. And to the question, you rightfully said Bharti Energy also has some amount of exposure to the US, and so does Persistent Systems, right? Even IT companies have a lot of exposure to the US. So it's not like he's going to be able to wash his hands of the US exposure that is there, but I highly doubt that pharma is going to bear the brunt of anything. Even when these 50% tariffs have been put in place, you can very clearly see pharma has been one of the sectors that has been spared because he realizes the value of it. So stay invested. I think there is more money to be made in Dr. Reddy's.
I just realized that tomorrow is Raksha Bandhan and, it's exciting times. Kickstarts the festive season, if you will. And it's such a beautiful event, right, where you expecting, and I'm sure that are you going to tie a few Rakis tomorrow?
Yes, for sure.
So,
my brother was here from US, so yes, of course, it's going to be a good day.
So you're looking forward to the gift that you're going to get.
I'm looking forward to the gift, yes. I've selected my gift already.
You've selected your gift. Oh, is that how it goes? All right, so on this occasion, and I'm pretty sure that a lot of our viewers tuning in, like Mahima, are not really going to be too happy with getting a stock as a gift, but I'm going to ask it anyway. Because what better to give your sibling than something that's going to appreciate over the course of the next several years. So a quick question to the both of you. Nilesh, I'll start with you. If you were to buy 2 or 3 stocks today for your sibling to gift it to them, what would they be?
Well, Alex, it has to be a fundamentally strong company as well as the technical structure has to be good. So that's LIC that's looking attractive. We have seen a bit of a consolidation in this particular counter. It is trading at a corrected price. So from here, the risk and reward is also favorable and positionally looks attractive for 1100, 1150 kind of levels on the upside. So LIC, it has a very strong support at 850, 840 zone. So with the stop loss keeping near about those levels, LIC is a buy, and the positional target comes around 1150, 1200. And then the another stock would be Cummins India. Again, a very good setup in this particular counter, a good rounding bottom formation can be seen. Positionally, we are expecting this particular stock to move beyond 4,000 kind of mark, and quite possible 4,300, 4,400 kind of levels can be seen over the years, and the stop loss can be placed somewhere around 3,500. So Cummins India will be another stock.
Both, incidentally, companies that have posted their earnings after market hours yesterday, and both of them had a very good set of numbers to speak of. LIC particularly, you had the value of new business margins improving, and for Cummins you had exports and domestic revenues firing on all cylinders. Samir, what would you pick?
So given we're talking about giving a gift to a girl, I'll pick one stock, which is IGIL, International Gemology India Limited, which is basically the company that does the testing of the gems in for lab grown as well as for natural diamonds. They've got a lot of their setups in place, and as the number of diamonds that get certified keep increasing, the operating leverage will start playing out. The numbers are quite strong, cash flows are good, debt-free company, growing business. So I think that is one great investment that one can make. And again, sticking to the theme, since we're giving it to a lady, I'll give a company called First Cry, which takes care of new mothers' requirements and young children's requirements. Basically, it caters to children from 0 to 12 and maternity. We think, this is a very niche space. Of course, competition is there from the likes of Amazon and Flipkart and all of them, which also sell similar products. But this becomes a very easy place to source your needs for young children. They're developing their in-house brands for clothing, for toys, for diapers, products. And as the in-house brands as a percentage keep growing and the margins keep expanding, and as they keep scaling up their operations, we think First Cry is one of the stocks over the next 3 to 4 years that could be a serious multi-bagger given the operating leverage that sits with it. It's again a platform-based company.
Okay, all right. So IGI and Brainbees are the two counters that Samir has suggested. We've got our first caller for the day. Pradeep is calling us from Visakhapatnam. Pradeep, hi, a very good morning to you. I believe you have a question on AU Small Finance Bank.
Yeah, very good morning to the panel and all of you, and happy Raksha Bandhan advance.
Wishing you the same, Pradeep.
My query is regarding AU Small Finance Bank.
Okay.
But is the right time to pay AU Small Finance Bank or any other bank in banking sector?
Okay, and this is from a shorter term perspective. What's the time period that you're looking at?
Yeah, it is from a shorter term perspective. Yes.
Oh, okay, all right. Pradeep, I'll take this up with Nilesh first, and then also take Samir's opinion on AU Small Finance Bank, because they've gotten approval for being a universal bank now. But Nilesh, your view on the charts first.
See, technically speaking, the stock today have filled the gap area that was seen in the month of July, and we have seen a profit taking at the high levels. But overall, the major structure looks more sort of a sideways to positive. It has a very strong support at 720. So one should keep a stop loss at 720 and stay put. We can expect a gradual up move towards 825 to 840 on the upside. And it is facing constant resistance at 825, 840 zone. That's the major hurdle for this particular stock. A breakout above that will confirm and will open further upside towards 900 to 1000. That's the position target. But purely looking at the short-term trend looks positive. Stay put with a stop loss below 720.
Okay. All right. And your quick view on AU Small Finance Bank, Samir, because they've now received an approval for being a universal bank.
Yeah, so becoming a universal bank has a two-edged sword. So obviously it has its benefits in the fact that they can do more of the lending to the regular corporate loans and, all of those kind of things, rather than only being more focused towards microfinance, lower income housing, lower income, So what it has as benefit is that it gives you more stability in the fact that your loans have probability of lower NPAs if you do your due diligence better for these larger and more prime kind of lenders, but it also reduces your NIMs. So it's going to be a transition. It'll take time. So for the time being, I feel AU Small Finance Bank, while it's going through the transition over the next 2 years, will not see great traction in the fact that NIMs will see compression, profits will grow, but at marginal rates. So I think AU Small Finance Bank for the time being can be an avoid. maybe a year and a half from now, when we see what is exactly how the bank is shaping up, it might turn out to be a better buying opportunity. So I would avoid that. I think there are better opportunities in the banking space.
Okay. All right. By the way, we had a great conversation with Abhizar Divanji this morning on India Market Open. You should find that on YouTube. This was about AU Small Finance Bank, which will likely not be called that for very long. Let's talk about Titan. It was in the news because of numbers. Let's see how it's doing on the charts right now. It's up about 1.3%. Decent set of numbers, if I remember correctly, on Titan. But let's talk about the shorter term perspective, because Kantibhai Mahasuri, who's writing in from Mumbai, is looking for a 5-month time frame. He wants to invest 50,000 rupees in the stock. Would you say that this is a good opportunity to buy, Nilesh?
See, Alex, recently we have seen a good base formation near about 3,300 to 3,320. So that has acted as a very strong support, and we have seen a strong rebound as well. So from here, keeping a time horizon of 5 months, I think one can accumulate this particular stock. We are expecting a gradual up move towards 3,600 to 3,650. 3,650 is again a major hurdle that seems unlikely to be taken off on immediate basis, but that will take some time. So the structure wise looks good to accumulate, buy in a staggered manner, keep a stop loss below 3,300, and for a 5 months kind of time horizon is a buy.
I believe we've got a caller from Gurugram. Manav is calling us. Manav, namaskar. How can we help you today?
Namaskar, good morning to everyone. First of all, I want to congratulate NDTV for breaking out that illegal dabba trading scam. Though I wanted to congratulate much earlier but wasn't able to connect last week. But nevertheless, it's never too late.
Thank you so much. It was meant for, and I'm hoping that you spread the word as well, Manav, because the idea was to.
I shared the story on the social media itself also.
Yeah.
So, my today's query is on Bharti Airtel. Since the promoters have sold a stake in the block deal, so I was also, looking to enter Bharti Airtel. Will it be the right time to enter Bharti Airtel for a long-term perspective view for like 4 to 5 years?
Yeah, that's a good question. The stock is down on the back of that block deal that took place earlier today, 2.7, 2.8% lower. So, Manav, I will take your question to Samir. Samir, on the fundamentals, is this a good opportunity for you to start accumulating? We saw the results not too long back. Nothing to really complain about, but the ARPU growth was not tremendous. I know their target is to go towards 300. They are the highest in the industry right now.
Absolutely, yeah. So the results were good. But actually, you're talking about the ARPUs going to 300. It will take time. You can't expect them to jump, because if you remember when Jio finally started charging, I think the ARPUs had initially started at that point of time at closer to 160. So from 160, they scaled up all the way to 240, which is fabulous. And in the meantime, you got to also realize that apart from the ARPU scale up, they've also had so many new subscriber addition that the operating leverage has started playing out in a meaningful way. Now, the problem for them to some extent will lie in the fact that growth from these for the number of subscribers will start getting limited, because our telephone penetration, mobile penetration has reached actually quite a significant level. And to keep scaling that up is not going to be easy. But where they have growth coming in and where they are also focusing is on the broadband at home. I think that opportunity is still extremely large. Jio has the lead in that, but I think Bharti is doing a great job of catching up there. So I'm a user of the Bharti internet in my house, in my office and things, and I think the service is fabulous. So I can tell you that they're doing a great job of that as well. And I think as that scales up, what you'll see is more operating leverage kicking through. And as the ARPUs go up, you will see their ROEs also moving up, because the incremental cost is not going to be as much. Whatever is there is just the 5G towers that they're laying. Beyond that, it's going to be a lot of positivity for cash flows. Also, if you see the operations in Africa continue to do better, they're getting more traction there. And there also, we believe the profits will keep increasing. So overall, we are very positive on Bharti. Valuations are a little bit rich, which is why also I think the promoters are taking some money off the table. If the stock comes closer to 1750, 1700, yet they would be expensive. I'm not saying they'll be cheap, the valuation, but I think given the duopoly situation that the telecom industry faces, even though there is a third player, I'll stay duopoly because two of them are really driving the market and capturing most of the business. We believe that these valuations can remain in the range of 35 to 40 times earnings. So 1700, great time to buy. Hold it for 4 years. I think there's lots of money to be made in Bharti yet.
Okay. All right, lots of money to be made in Bharti yet. The next question is also a fundamental question, and a quick one on this one. Railtel is the name of the counter, and Afreen from Hyderabad is asking for a fundamental view. Is this a good time to buy the stock, Samir, in your opinion?
Yeah, I think valuations are not so challenging anymore. Company will continue to get its order flow. They're already sitting on decent. Yes, it's been a little lower than what everyone in the market would like it to be. But look, the Indian Railways is going to constantly be expanding. So I think Railtel will get its order share and it'll keep growing. So hold on to it.
Okay. All right. We've got our next caller. Ayush is calling us from Greater Noida. Ayush, hi. A very good morning to you. We just talked about Bharti Airtel. But I believe your question is on Jio Financial. Is that correct?
Yes, correct, ma'am. Very good morning.
Okay. Good morning.
So I have Jio Financial Services stock. 1,000 shares I have. And I have purchased it at 295.
Okay. All right. So yeah, you're looking at this from a longer term perspective, or are you looking at the charts, Ayush?
For shorter period, I'm looking for next 6 months, whatever will be the trajectory.
Okay, all right. So you're sitting on profits of around 25,000 odd rupees right now. Nilesh, do you think he should continue to hold for further upside, or should he book profits right now?
We have seen a good momentum in last couple of trading sessions, although we have also seen some bit of profit taking, but the major structure looks positive. The stock is constantly trading well above its 21-day short-term moving average and also 50-day moving average. That support is somewhere around 310. So looking at the overall setup, looks good to me. One should keep a trailing stop loss at 305 in order to protect the gains that one is making. So overall, we are expecting a move towards 340, 350 from a very short-term perspective. So stay put, keep a trailing stop loss. Structure is looking positive.
Let's talk about MICEL, which is MIC Electronics. It is currently trading at 49.89, if I'm not mistaken. Nearly 50 rupees. There you go. Yeah. And we've got Mr. Subramanian, who's writing in from Bengaluru, who's bought at levels of 65 rupees per share. He's got 1,500. Should he book or should he hold on? Nilesh, what's the view on the charts?
Well, Alex, the structure is looking extremely weak. We have seen a continuation of a lower term and lower term formation. Since last 1 year, the stock is constantly in a downtrend. So looks weak, and we are expecting further downtick towards 45, 40, quite possible from a short to medium term perspective. So sell on rise kind of structure, whatever pullback you get near about 54, 55, use that pullback as an exit opportunity and move to the better options available. This stock is not looking that promising, looks weak on the chart.
Okay, all right. So that's the view with regards to where the counter stands. We've got our next question, and this is from Nagakumar, who's writing us from Hyderabad. And thank you so much for your compliments, Nagakumar. We really appreciate it. He's wanting to invest 5 lakh rupees right now, and he's asking whether he can go ahead and invest this amount in Siemens India or Siemens Energy from a longer term perspective of 3 years, and which one is advisable on the back of better earnings. Samir, I'll come to you on this one. Which one would you suggest? And 5 lakhs is a big capital. Would you recommend him to diversify into some other counters as well? Whatever your recommendations are.
So it all depends on what his investment portfolio is. If this is his first investment in the market, then obviously I'd ask him to diversify. But if he has other investments, then, honestly, if you ask me, I prefer Siemens, the main company, not Siemens Energy, the newly listed one, for the simple reason that I think the traction and the operating leverage and the business growth that is going to come through in Siemens by itself is going to be phenomenal. Valuations are rich. I'm not denying that fact, but we believe that this business will continue to grow. And Siemens being 75% promoter held, given that there are lots of shareholders who just don't want to part with the share. So if you actually look at the free float, it's small. So the kind of premium valuation that it gets, it will probably sustain. So my personal advice is to go for this, but it doesn't hurt to even split your money 50-50 into both if you'd like both these companies. And if you're the first time investor in the market, I would definitely tell you to diversify at least and have 10 stocks in the portfolio and not only 1 or 2.
Okay, on that note, we have to slip into a very quick break. Gentlemen, do stay with us. We'll be back on the other side to take more of your questions, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
You're watching Ask Profit. I'm Mahima Vachar and with me is Alex. The one stock that we're putting spotlight on today is KRBL. Let's try to pull up the stock. It's flying in trade today. It's up 10% as we speak. And this is on the back of the strong performance that it has given in Q1. And to discuss, further as to what's worked this quarter, we are joined by Ashish Jain, who's the CFO of KRBL, joining us now. Mr. Jain, hi, good morning to you and always a pleasure speaking with you. Just wanted to get a sense, it's been a great quarter for sure for KRBL. Just want to understand what's worked, and considering realizations have also improved, what is the volume versus value growth looking like right now?
So always good to talk. Thank you, Mahima. From the quarter perspective, I think on the sales side, two things have happened. One is we've seen strong export growth on a year-on-year basis. This is on the back of strong growth in bulk rice sales outside India. So that's one done well in the first quarter. On the domestic business side as well, we've seen 16% growth in branded rice revenue, right? So both of this has led to a 32% year-on-year revenue from operations growth in the quarter. In terms of volume and realization, so volumes have grown in the quarter and also realization is broadly stable. So overall, strong volume growth with stable realization.
Okay, in terms of the tariff impact, before I go on to further questions with regards to where earnings stand, because you have exposure when it comes to your exports, and exports have done exceedingly well this quarter, and that's almost 30% of your business right now. Just want to understand from the 30%, how much is going to the US and how do you see the tariffs impacting your overall export performance?
Sure. So US is not a very large export destination for us. So to that extent, not a major impact of the tariff, but it's a key strategic market for us. So we do watch the developments very closely. But as of now, very limited impact.
Okay, Mr. Jain, you're also remodeling your supply chain. Just want to understand what exactly you're doing there. From what my understanding is, general trade, deeper penetration, and modern trade and e-commerce, you're trying to gain cost efficiency there. Considering everything, how do margins improve going forward? Is that on the cards?
Yeah, I'll just explain what we tend to do on the supply chain side. See, when we look at basmati as a category, packaged basmati is sold in the country in roughly 7 lakh outlets. Now, when you compare that with the reach that some of the more established consumer product categories have, it's really a fraction. Within that 7 lakh, we reach approximately 4 lakh outlets. So being market leaders, we are still not covering the entire base. So one of the initiatives that we're driving on the supply chain side is to grow coverage in terms of distribution. And that is happening across channels, general trade, modern trade, as well as e-commerce and Q-com. Now, from an efficiency perspective, see, while we continue to drive efficiency in the channel, the focus right now is on enhancing coverage.
Okay. Mr. Jain, one last quick question. Q1 has started on a very strong note. FY25 ending, you did around 5,600 crore top line and around 480 crores in terms of bottom line. What is it that you're aiming at by the end of FY26 in terms of both top line as well as bottom line?
Yeah, so I mentioned earlier, we are looking at 6,000 crore plus revenue as we stand at the end of Q1. We are broadly on track, and rest we'll see how the year goes.
Okay, Mr. Jain, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit.
You're welcome.
All right. On this side of the segment, we're also joined by Rajesh Bhosle, who is joining us from Angel One. Rajesh, hi, a very good morning to you. Your quick view on the charts for KRBL?
Well, good morning. Today we are seeing strong traction in KRBL with very heavy volumes. In fact, if we see charts are continuously moving in a higher top, higher bottom structure, and prices are back to its previous swing. So yes, bias is positive, and we expect this momentum to continue towards 435 to 440 levels. On the lower side, the bullish gap left around 390 will now act as a support. So bias is positive. Dips can be taken as a buying opportunities.
Got it. Okay, so that's the view on KRBL. Arguably the stock of the day up about 10% right now. We've got our next caller, Kiran from Hyderabad. Kiran, very good morning to you. How can we help you today?
Sir, good morning. Good morning to everyone in the panel. First of all the viewers in India following NDTV Profit should be thankful and grateful to you because this is the only show. And I should mention Alex sir always that because if not Alex sir, we cannot expect anyone else.
Oh, that's very kind of you.
Who can take care of this show.
That's very kind of you. I must stop you there, Kiran. It's a team effort, and Mahima and myself are one unit on this, and the team that is behind the scenes. In fact, you can't see all of them, but the numbers that are on your screen, everything that you see that is playing out is because there's a huge team at NDTV Profit that's working together to put this show together. But I'm glad that you are finding it useful. Please tell me, how can we help you today?
Yes, sir. Actually, my query is regarding Infosys, sir.
Okay.
I'm holding 125 shares of Infosys. I would like to hold it slightly on the longer term, like from 3 months to 6 months. I'm expecting the stock to roll back to levels of 1550.
Okay.
If I hold back to the next 3 to 6 months, because in the entire IT pack, being a IT giant, Infosys posted good results. I expected the stock to jump from there like 4 to 5%. I'm expecting a bull run, pullback bull run. I'm expecting, and just my thing is, market is like taking this tariff thing as a pullback, for just the pullback rally, it is taking it as a reason. Is my thing. So I would like to know Samir Dalalkar's analysis on this. Sir.
Got it. I got your question, Kiran. Let me ask Samir. Samir, you heard the question. Infi out of the entire pack, what would you do? He's already bought, by the way, at 1427.
Yeah, the problem is he's only wanting it for a 3 to 6 month period. So 3 to 6 months, I can't determine whether it'll go to the 1550 that he wants. What I can tell you is that the IT sector is continuing to struggle. And, we've been saying this for some time on your channel as well, where the growth numbers of 1 to 5% on top line are nothing phenomenal to speak about. Yes, these companies have a great order book and hopefully the execution of that starts and then we'll see growth moving up closer to the high single digit to maybe low double digit. But the PEs were expensive. For the time being, I think the stock will probably remain in a lull. We are not seeing that much traction. Would I sell out right now? No, because a lot of the negatives have now started to get priced in. The sector as a overall is very under-owned, and any change that happens when it comes to order execution, if it does happen, then you're going to see a lot of people getting in trying to cover up their under ownership when it comes to IT stocks and Infosys, TCS, and the likes. So don't sell it off. But if you ask me 15, 6 months, very difficult for me to say yes. It will probably remain in the range of 1400 to 1480, 1500, I think.
Okay, all right. So that's with regards to where Infosys stands. We've got our next question from Santosh, who's writing us from Chennai. And his question is on Cades. Axis Cades. And he's saying that if he can buy more from a longer term perspective, he's already holding 20 odd shares at 500 a piece. So that's quite a price that he's bought it at, because the stock is currently trading at 1304. So he's sitting on handsome profits. Samir, I'll come to you on this one. From a longer term perspective, do you think he should add more?
Coverage on this one, I'm so sorry.
Axis Cades.
Yeah, he doesn't have coverage.
Acha, he doesn't have coverage. Okay. All right. Then Rajesh, I'll come to you on this one. What are the charts indicating?
So basically, when we see the chart structure of Axis Cades, it generally moves in circuits and the volumes are also very low. So we won't, aggressive positions should be avoided. And in fact, if he wants to buy, it should be on a healthy level. So as of now, I would suggest wait. But if stock slips towards 1200 levels, there we can see some base formation or strong support levels. So 1200 would be the ideal levels to add more, but at current levels should be avoided.
Okay, current levels it should be avoided is the view that Rajesh has on the count. Okay, we've got Murli calling us from Bengaluru. Murli, hi, a very good morning to you. How can we help you today?
Very good morning to you. And my query is on India Glycol, which is quoting comes great. And whether I should buy at the current price because it has a good domestic as well as 2 to 3% domestic and foreign holding. Promoter holding is steady. He said no debt equity is very low, 0.8, and low PE. And recently they are giving a good performance in the last 5 years. Should I buy India Glycol for a long-term viewpoint, or should I buy Global Specialty instead of this?
Okay.
Either one of them.
Okay, I got your question, Murli. India Glycols has earnings today. Is that correct? It came yesterday.
Yeah.
It came yesterday. Not sure, Samir, if you've had the time to look at the numbers. What is your view? Should he enter from a longer term perspective for this counter?
So again, unfortunately, Indian Glycols in the chemical space is a company we don't have coverage on. So
no worries.
I'm very positive. I can tell you a view on chemical sector. We think the long-term view for chemicals is very positive. Yes, we are going through this difficult situation with the US right now where our import duties have gone up. So certain chemicals may become unviable to export there. But I believe that will resolve itself out. And I still believe that the world is looking for a China plus one when it comes to chemical space. India is the next natural participant in that. There are many companies in the chemical space, I think, that can continue to do well. Where valuations, they look optically very expensive at this moment because the chemical prices are down. And when they are down, you see gross margins you don't make the same benefits. Plus, you've not got the volume expansions happening. But going forward, we think all of that will start resolving. There are chemical companies that we like. I can tell you Clean Science is one of them. Their expansion plans really nice. Balaji Amines is another one that we think is a really good company in the amine space that's doing well. They're setting up certain chemicals factories for making for electric batteries, the anode and all. So I think there are spaces in there, but Indian Glycol, no coverage.
Okay. All right. Our next call is from Abu Dhabi. Santosh, very good morning to you. How can we help? Or rather, good afternoon to you. How can we help you today?
Hey, good morning. Good morning to all of you in NDTV Profit. I have a question related to Star Health Insurance. I hold about 600 shares of Star Health Insurance. I had a purchase price of 366. I have a plan to hold it a minimum of 2 years, 2 to 4 years, 2 to 3 years. That's what we can look at. And I would like to get some guidance on this.
Okay. Let me go across to Samir on this one. Samir, Star Health, he's made a decent profit. Should he hold on with the prospect of more?
So we believe the entire space has great growth opportunity, but the problem with health insurance companies is, if you look at their overall profitability, as in their claims ratios and versus the premium earned, is still very high. They work above 100%, most of these companies. So profitability on core business still eludes these companies. Yes, I think the growth is there, and because there is growth and in India, everyone focuses more on growth and then hoping that operating leverages and then stability and pricing powers and all come into play, they will do well. So even though we're not very, very positive per se in the short term, I think one can hold on if he has a view of 3 years, because what will happen is once the traction of growth kicks in, people continue to value these stocks as. So hold on, but don't expect anything phenomenal from this stock.
Okay, all right. So that's with regards to where Star Health stands. We've got our next question on AWL Agri business. Nikesh is asking this question and wants to know if he can hold or sell the counter. He's bought at the levels of 390 and 100 shares is what he's holding. Rajesh, I'll come to you on this one. What are the charts indicating for AWL Agri business?
So if we see the chart structure, last 7 to 8 months, the stock has done nothing. It has been trading in a range with 280, 85 acting as a resistance, and on the downside 240 is acting as a support or base. So as of now, it's trading at its lower end. So with a stop loss of 240, he can continue to hold on to the positions. And on the bounce, on a bounce, 280 would be the resistance. The key hurdle would be T280, which is its 200 DMA as well as its previous swing high. So any kind of for any kind of positive momentum, 280 would need to be crossed. So as of now, hold with a stop loss of 240.
Okay. All right. Very quick question on Vodafone Idea, since we've already spoken about the telecom sector and specifically on Bharti Airtel. I don't think we need to go into too much detail, but Samir, would you at all venture into buy? This is a question from Narayana.
So if you're a gambler and are willing to lose 6 rupees, go ahead and make the punt. But as an investor, I would not. 6
rupees if you're buying just one share, which is unfortunately not something that most people do. Because of the low ticket price, people end up buying 10,000, which is something that you should avoid if you are a fundamental long-term investor. A very quick view on the charts though, Rajesh. 6.6, any prospects on the charts, or would you avoid it even on the technicals?
Yeah, so very cheeky answer by Samir Ji that if you are a gambler, definitely go ahead. Nothing to lose, just 6 rupees. But on a bounce, generally the stock face resistance. So yes, from a long-term perspective, avoid.
Yeah, among the various things that Samir can be called, cheeky is one of them. I've heard that several times in the answers that he's given. But Raju from Bengaluru is calling us. Raju, hi, morning. How can we help you today?
Hi sir, good morning sir.
Good morning. Please go ahead.
Sir, KPIT Technology 800 quantity. In the average price 1,350. In correct loss in profit 1,20,000. Seller holds for technical analysis short term 3 months.
3 months. Okay. All right. So you heard the question on the charts. Then, what would you do, Rajesh, on this one? Would you hold because it's a pretty steep loss?
So as of now, hold on to it. The stock is forming base somewhere around 1160 and 1170. And during the April to May month, the stock had seen bounce from this level. So as of now, hold. But again, on a bounce somewhere around 1340 to 1350, we need to recheck if there is positive momentum. If in that case, hold on to it, or else exit on a bounce towards 1350 levels.
Okay, we've got our next question from Seema, who's writing us from Jodhpur, and her question is on PFC and REC. She's sitting on loss of around 18 to 25% is what she's saying. 18% on PFC and 25% on REC. She's not given us the quantity and the price at which she's bought, but wants a view from the next 2-year perspective. Samir, I'll come to you on this one. What's the view like?
So I'd say hold on to both of them. I think the opportunity for the power sector continues to remain good. There's a lot of traction happening in the renewable space. And at the end of the day, PFC and REC are not agnostic to the fact that they don't have to only lend to thermal plants. They can also lend to these solar plants. And as that scales up and they grow their loan book, we believe the valuations are relatively attractive. Of course, they've always been attractive, but we believe there can be a re-rating plus growth. So I think one can hold on. Unfortunately, I think she bought it when the stock ran up too much. So stay put. I think you will make money if you can. I would say even buy some more at these levels. Both are looking attractive at this point.
Okay, but you would buy evenly, you would split it evenly, or would you pick one or the other?
So I picked PFC over REC for the very simple reason that with PFC being the 51% promoter not promoter, but holder of REC, you are getting to play REC as well, right? Through that. So it becomes easier just for me to manage one. And if I look at the overall, if I take out the value of REC from the value, the holding value, if I subtract it from PFC's book value, PFC, I think, is trading at a book value of 0.8, which is extremely attractive. I think 5 times the earnings if I subtract everything. So for me, PFC is probably an all outright buy.
Okay, all right. PFC over REC is what Samir is saying. All right. We've got our next caller. Pradeep is calling us from Kerala. Pradeep, hi. A very good morning to you. I believe you have a question on Kitex Garments.
Hi, good morning. Hello?
Yeah, I can hear you, Pradeep. Loud and clear.
Good morning. How are you?
Good morning. I'm good.
I would like to know, add more Kitex.
Okay. And this is from what time frame perspective?
No, I know the right situation. One country want to destroy our nation. So this time, as an investor, I would like to buy more and support my country and with some, this kind of garment sector. So I would like to add more.
Okay.
But Pradeep, you're not going to be supporting Kitex by buying their share. You need to buy their products.
Yes.
You need to keep your capital safe. Please ensure that you don't make patriotic choices with your money and lose it in the process. Make fundamentally sound choices. I'm not saying don't be patriotic, but don't do it in this way. You should make smart choices. But I got your question, Pradeep. It's a good thought. So therefore, let me go to Samir on this one. Samir, Kitex Garments, he wants to know whether to add to his holding. He's got at 265, which is a very elevated level. Stock is currently at 171. What's your opinion?
So unfortunately, again, Kitex, smaller company, with 4,000 companies, it's becoming, as a fundamental analyst, very difficult to cover so many. But to add to what you said, hopefully he doesn't invest his money and lose his shirt with Kitex Garments.
Okay, that's the line of the day. On the charts, Rajesh, what would you do with this? There are no buyers in the stock right now.
Yeah, so if we see last 4 sessions continuously moving in lower circuits, so from a technical perspective, generally in such moment we generally say to exit positions. So we expect for stock to further slip towards 145. So definitely avoid counter.
Avoid the counter and try and get out if you can when this... is that the opinion? Would you get out if you have the option, Rajesh?
Yeah, definitely.
Yes, okay. All right, it's time now for the rapid fire round, and this is where we throw as many questions at you as possible. Rajesh and Samir, hope you're ready. First question is on Indigo, and here we're talking about Interglobe Aviation, bought at an average price of 5,180. Would you hold on? Would you buy more? Rajesh, what's the view?
Yes, hold on to it for the targets of 60 to 50.
Okay, Delta Corp is the next counter. Manohar Khair is holding 600 shares bought at 152 a piece. From a longer term perspective, Samir, would you recommend holding?
So I think he can hold on. We have to just wait for the court case to end. If that goes positively, I think this stock has a lot of upside.
Okay. Reddington for the long term, 282 is a buy price. Would you hold? This is a question from Suman. Samir?
I think you can hold on. The company is doing well, growing well, and will do well.
Okay, the next question is from Sri Ganesh. He's asking what's the best counter to hold in the auto space. Samir, he already holds Ashok Leyland and Tata Motors. What would you recommend?
Sona, BLW, Sona Comstar is one of the ones we are recommending very aggressively.
Okay, interesting. NSDL, if you missed the IPO, would you buy now at the current market price? Dr. Manoj wants to know, Samir?
No, not at these valuations. Wait.
Okay, TCS, would you recommend holding? Rajesh, this question is for you.
So can hold down for a short-term bounce towards 3200.
Hariom Karnal wants Hariom from Karnal, Haryana wants to know, Sula bought at levels of 324. Would you sell right now, Samir?
Hold on. I think there is operating leverage that can play out. We have to just see what kind of treaties get signed with the US or Australia for the import of wines.
Okay. Sudhir from Mysuru is asking this question. He's asking on Mazagon Dock and wants to know if you can continue to hold or sell. He's sitting on a loss of 21,000 odd rupees. Rajesh, your view on the charts?
The stock is on support. Hold on. It can bounce back towards 3,000 levels.
Raymond Limited bought at levels of 868. Would you add more at the current level? Rajesh, the question is to you.
So yeah, hold on to it. Again, expecting a bounce back towards 670 to 680 levels.
HCL Tech, very quickly. Samir, would you buy?
I'd say hold, not buy.
Okay, Rama, that question was yours. That brings us to the end of this edition of Ask Profit. Gentlemen, thanks so much for taking the time. And viewers, we've tried and take as many questions as possible, of course, over the course of the last 1 hour. It's understandable if yours got missed, but hopefully you've benefited nonetheless. From Mahima and myself and the team that put the show together, thank you so much for watching. Happy Friday, happy Raksha Bandhan, and stay tuned. This is NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome. Thanks for tuning in to KYC. I'm Harsh Saita and today we're going to be speaking with Kalpataru Projects. It's a strong set of Q1 numbers. It's a very strong FY26 guidance as well that they are penciling in. But here's what I want to know about Kalpataru Projects. And more so, just trying to understand whether this entire TND space could well be something that you could bet on in a safe manner and still get a good growth, and which players could you bet on? But you know, Kalpataru Projects in particular, there have been payment delays that the company has witnessed. So I want to understand whether this can change, this can reverse. Are there any specific segments where they are witnessing this? So that's the other piece. And how much of this is caused by government? What are they doing to shift away from government contracts? So that's the first part. Second, as a result of this, working capital needs are inherently higher. Mind you, in general, in engineering, procurement and construction companies, you will have higher working capital requirements because you will have amounts, chunky amounts stuck up in working capital. That is normal, and therefore your return ratios matter far more. So yes, you will have working capital needs which are inherently higher, yes, but will they continue to increase every year? Is that something that you as an investor should pencil into the cash flow, which will keep a lid with regard to cash flow from operations growing at the same clip as EBITDA will? So that's what I'd want to really understand. The third piece is with regard to water business. Will you see a slowdown with regard to water business? Because this is more government, less private generally. So I want to know if they will ease their focus on the water business at all. They're also doing divestment of non-core, and I'll talk a little bit about that as well. The fourth piece is oil and gas. Now, within the oil and gas space, they're doing a lot of contracts which are export focused and export oriented. That's what they are focusing on. So I'd want to know whether the margins here are better and how large the opportunity is. So if we roll forward, margins in oil and gas versus the blended margin is what I'd want to know. So there are two key factors within Kalpataru projects that I want to talk about. One is the margin number. The second is the ROC. Can the ROC go up, and can the margin number creep up? That's the guidance, and where will that lever come from? So these are the two pieces, and I've just kind of combined the two into one. What stops you from growing at roughly 20-odd%? The order book is quite healthy, nearly 3 times book to bill is what they're currently at, and therefore, given that, you'd want that they can grow at a 20% plus clip for a prolonged period of time. Plus, all of the verticals that they have are strong growing as well. They're well in vogue. Oil and gas is well in vogue. Transmission is well in vogue. So you've got those levers to kind of kickstart and keep growth coming. Debt direction, where do we go in terms of that? And last part is selling of non-core assets. They have some non-core assets on their balance sheet, and in order to improve their ROCs, what they're doing is they're trying to sell some of that. So some of those metrics will start to play out in coming years. How much of that comes onto the balance sheet as cash is what I'd want to also understand. But we'll start off with about the company, and we're missing Anushi today, who generally tracks EPC. But let me do the best I can. Let me start off by explaining what exactly does Kalpataru Projects do. It's a leading global EPC player, EPC full form on your screen. Put it in a nutshell, it executes infrastructure, energy projects in 75 countries. It focuses on power T&D, which is transmission and distribution, buildings, water, oil and gas, railways and urban infra. Again, railways and urban infra is a very interesting high growth tilt to the business. Asset light model is what it focuses on. It scales by managing complex projects and not really owning the asset. So they don't do as much of build, own, operate and the like. So that's not really the model that they follow. They generally follow a model where they receive the money upfront and hand over the asset to the government. That's how they prefer playing this. Let me start off also by explaining what are the types of projects that they take on. So first, within the power T&D space, you'll see the various verticals come on the yellow band on top, and then you'll see a description here. In the power T&D space, they build transmission lines, substations, from engineering to installation. They do in-house design, manufacturing, testing of towers as well as equipment. In terms of building and factory, which is their second vertical, they construct residential, industrial, airports, data centers and factories, of course. And outside of that, they offer design, build, and not just construction. So they also offer that part of the service. In terms of water and irrigation, of course, some part of the contracts here are government predominantly. They lay water pipelines, install treatment, storage, they manage supply. They also handle O&M for water systems. So some of these are of course valuable. Oil and gas. Now this is the new possible vertical where there could be strong growth, especially from the export opportunity. So they're installing pipelines, refinery facilities, terminals, compressor stations, all of that. In terms of railways, electrification, track links, signaling, station development, all of that is what they do. That's the broad brief with regard to the services they provide. Let's talk about the order book now. It's at around 65,000 crore, Q1 FY26 of course. It's at an all-time high. Domestic is roughly 59% odd. 41% is international, and here's the order book to bill. That's the more important ratio, and I'm going to talk about that only till FY25. So that's the broad brief with regard to book to bill, nearly 3 times, and has been the case for the last 3 years. So they've consistently maintained that. That's the run rate at which they've been going. Let me talk about order book mix also, because that will give you a tilt with regard to margins, and we'll discuss margins just for a little bit. You look at the power T&D. This is roughly 41% of the current book size of around 65,000 crore. So around 41% is power T&D. That part of the 65,000 crore. So that part is slightly higher and better margin. Building and factory is 22%. That is also better margin. So around 63% of the book is those two. Then you have water, which is 15%. Oil and gas, which is 12%. Oil and gas reportedly has the best margin, but of course that question I'm going to pose with the company. And urban infra and railways is around 10% odd. So that's broadly the mix of the order book. In terms of water, 15% of the book, the margins may compress a bit, and that's likely because more so because it's government tilted. So you want to take care of that part. And I want to see as to what the commentary says as well. Let's talk a bit about the business model. And the business model in terms of manufacturing, in-house key component manufacturing of transmission towers, scaffoldings, etc. They have a facility in Raipur and Gandhinagar in India for this. Project execution, well, they have a central project management office in Mumbai. And then they have project teams all over at project sites which manage the project. Last off, there's sales and customers, of course. They sell EPC contracts to governments, PSUs, large private developers and international agencies. They do claim high repeat customers due to track record as well as relationships. So that's the broad brief with regard to a Kalpataru Projects International. Now let me talk about the metrics that we will discuss on a Kalpataru projects. We'll start off with the income statement. We'll thereafter look at the balance sheet, cash flow and return ratios. We'll then look at shareholding patterns, street cred, valuation, street coverage, and they've guided also on a couple of factors. We'll talk about that as well. Let me start off with the income statement. Now you look at the top line and the growth there. It's been around 15% 3-year CAGR. The EBITDA is up by around 13 odd percent. Margins are largely steady state between 8 and 9% over the last 4 financial years. FY22 9, FY23 9, 8 and 8 for FY24 and 25. And therefore you're seeing a bit of compression on the profitability. So we're not seeing profits grow at that 15% clip as the top line. It's just a 2% profit growth on a CAGR basis. So you want to see more on that profitability number. Now let's talk about the Q1 FY26 numbers. And this is really strong coming in from a Kalpataru. The net profit stood at 200 crore for Q1 FY26. I'm going to pull out the top line number as well in just a minute. So your top line has grown 35%, mind you, on a YOY basis. Your EBITDA is also up a very, very solid 39%. So you're seeing strong growth across the board where a Kalpataru projects stands, 38.6%. Now margins have come in at 8.5% versus an 8.3% same time last year. So your margins have inched up, and that has aided profitability in a very, very strong fashion. In fact, this will mean that FY26 will be a standout year, and we'll dive deeper and understand whether that is actually possible or not. But given the last 3-year performance, we've given this a neutral. We want to wait and watch as to what the guidance is with regard to margin uptick and profitability going forward. But very, very likely, there could be a bit of turnaround here. But we've been cautious on this one. Let's look at the balance sheet. Equity, roughly a total equity of around 6,500 crore. It's a 20,000 crore market cap company. It's trading at around 3 times book. Your borrowing is around 4,000 crore, but cash bank balance is around 1,800 crore. And I'm sure a large part of that profit as well would have likely come into this cash balance at the end of FY25. You want to keep your eye out on that as well, because that will mean your net debt has come down. And it has. Your net debt to equity has come down to around 0.3 to 0.2 times roughly at the end of FY25. That will likely continue to come down. We'll understand the debt picture better going forward. Let me talk about the cash flow now. So we've given the balance sheet on neutral as well. Want to see more work being done. Even though the net debt to equity has come off, I want also an outlook on the debt. Cash flow. This is where there's been some bit of pain. Your operating cash flow to EBITDA stands at just about 50%. You want this to likely get better, right? And maybe EBITDA is not the right metric because interest cost is also extremely elevated. But even on the overall numbers, you want operating cash flow to improve. The receivables keep a lid and the working capital keeps a lid on operating cash flow. Again, EBITDA, you have interest taxes that you need to discount for when you do CFO to EBITDA, and therefore, and because this is slightly more capex heavy and slightly higher interest cost that it incurs, therefore the CFO to EBITDA number has squeezed. The net cash flow though remains intact, and that is because of the equity raise it has done last year. It also did its IPO a couple of years back, and it also has done a couple of debt raises and debt repayments as well. So you want to know some of those things when you're looking at the net cash flow picture. The return ratios. The return ratios look all right. The ROC number is roughly 16% odd. And as I did mention, there is a possibility for a positive bias to return ratios, but they've been stable. I'll give them that credit. So therefore, the thumbs up. Let's look at shareholding now. Promoters, roughly 33.5% currently. So we've given this a neutral. FIs have increased their stake. FY23 to FY25, they've really increased their stake. DIS 2, the stake has gone up. Public also, the stake has largely been steady state. So that's the broader picture with regard to shareholding. Neutral on this one. Street cred, 1 month stock price action is -6, 6 months is +8, year to date is -15, 1 year is -10. So shareholders haven't exactly made the best returns. The 1 year shareholder is under some bit of pressure. But since 2023, the stock has more than doubled. So over slightly stretched periods of time, of course, we've seen a better performance from Kalpataru than in the near term. So that's the other thing, and therefore we've given this one a neutral as well. Longer term, okay, but shorter term, some bit of pressure coming in on shareholders. Let's talk about valuations now. And Kalpataru Projects currently trades at around 30 times earnings. KEC, which is its competitor, trades at around 38. And Transrail, which is purely T&D, trades at around 30. You've got 1 year forward, those numbers changing dramatically because of the growth tailwind that's there. Broadly, we've given this a neutral. 2 reasons. One, a 21 times high growth business definitely looks good. But you want to see what happens to the debt picture as well. You want to see what happens to the cash flow picture as well, and whether margins can inch up and the return ratios can inch up. So some of those factors need to be kept in mind. Those are a work in progress. And therefore, keeping those in mind along with valuations, you want to be cautious. That's why the neutral. In terms of analyst recommendations, there are 15 buy calls. There are 2 hold calls, no sell calls. There is a 19% return potential, which the average Bloomberg analyst expects from this one. 17 analysts track it. So surely not looking bad, a clear thumbs up with regard to this one as well. Let's stack up all of those 8 metrics and give Kalpataru Projects its KYC rating. That's how it stacks up. Cash flow, a bit poor, right? So we've given that a thumbs down. Other than that, everything looks okay. It's all in place, and therefore gets a 5 out of 8 on our KYC rating. Now let's go across to management. Let's speak with Mr. Amit Uplenchwar, who's going to be joining us, who's a director at Kalpataru Projects. Welcome, sir. I'm Harsh here. Good speaking with you. Let me start off with working capital. That's the one possible drag on your return ratios. But talk to us about the business itself. Is working capital just a part of the business that you do, and therefore it has to be factored in from an investor lens, or would you look to optimize it? And are there levers to optimize it? And if so, how much?
So, good morning, Harsh.
Good morning, sir.
Thank you very much for having me on your show.
Thank you.
Very, very interesting question. You know, as you follow the EPC business cyclically, you should look at this lens from a constrained perspective. Has cash flow ever constrained the growth of KPIL? And the answer is no, right? If you look at our metrics, today, if you look at amongst our peer group, we are keeping our net working capital days at less than 100, which is at our scale and size with a diversified order book and sectoral as well as geographical spread. I think it's one of the best in the industry. We've also kept our interest cost as a part of our revenue under 2%, which again amongst the entire industry is one of the lowest, which shows a very, very strong balance sheet and extremely low levels of debt in relation to our business. If you look at our third metrics, which is debt to equity on a standalone basis and on a console basis, today we are at less than 0.47 of our debt to equity, and on a standalone even lower, which is again one of the lowest in the industry to have a near debt-free status on a standalone basis. And we have, like you correctly mentioned on your show, we've had a 15% CAGR over the last several years. And in this year, in Q1, we've done our highest ever revenue at 35% levels of growth on revenue, both on standalone and console, with pretty much keeping the debt levels at the same that we've been doing. So we've factored the growth through the similar balance sheet levels of debt. So I would say this is one of the best and the strongest balance sheets in the industry ever, and cash flow has never been a constraint for us, with enough and more headroom to grow in the future.
Point taken, sir. So on your cash flow from operations, what should be the or rather pre-cash flow from operations on your PBT number, what should be the drag of working capital that one should pencil in annually?
So I think, Harsh, let's look at this question in a different light, right? Today, as a company which is having 65,000+ crores of order book in hand, and on a lighter note, in this uncertain world, the only certainty that we've provided over the last several years is a very, very stable financial performance in terms of profitability, right? So we are doing close to, last year we were at 4.5% PBT thereabouts. We've already inched up beyond 5 this year, and we've guided at the beginning of the year to go close to 5.5, which is 100%, 100 basis point expansion on our PBT levels. And the kind of revenues that we are doing, I think this is one of the highest amongst the peer group if you do a comparison. At 5.5% close to PBT FY26 closing, I think would be one of the best PBT in the industry at that scale.
No, sir, I completely take your point. I completely take your point on that. Right, sir, let me switch focus. Let me talk about water for a bit. Is there a thought process behind how you will bid for projects within water, keeping in mind what you've just told me, that the PBT margin of around 5.5%, does water fit the bill there? And will you be very, very selective there? And therefore, where does the water mix stand maybe a couple of years from now? Will it come off? Will it stay steady state?
So, Harsh, again, a very interesting question. I think you've analyzed our company. You probably know the numbers better than I do in the way you ask the questions. But in terms of water, we've got 9,000 crores thereabouts of order book that we have on hand. Right? Water is a beyond 5.5 PBT business simply because it has very, very low capex, right? And right now we've had 1.5 year of a bit of a slowdown because of, protracted elections last year and stuff, because of which the collections have been slow in the water business. But if you see the last 5 years, it has been a stellar business in terms of growth. I think water has, in my doubt, every year when you see the budgetary allocations from the central government towards water, it's a very, very high number. And we are very confident that whilst we will collect our monies that are owed to us and progressively that has started happening, we will see more growth coming in the water next year onwards. We are cautious this year. However, a huge tailwind for us in our water business is our ability to bid for water projects outside of India, where there continues to be a very large opportunity, be it the Middle East, whether it's desalination, whether it's STPs, and the higher value add water kind of projects, which our focus is going forward.
Got it. Where do you've guided for a 20% top line growth, Amit, and you're guiding for margins to likely get better. And it's already gotten better in Q1 FY26. It's a very impressive performance where Q1 is concerned. I'm trying to understand full year. Is this kind of steady state number in terms of execution doable?
So, Harsh, I think this has been one of the best Q1s that we've had ever in the history of the company from an absolute number perspective, both on standalone and console. We've had a very high growth of 35% this year. To answer your question, we had guided at around 20% at the end of FY26 as revenue growth for us. And I think I can say that by the end of year, our target is to increase that guidance and go to 25% thereabouts, both on standalone and console. And I think looking at the growth momentum that we have and the orders in hand, I think that's what we should be aiming at. And I think at the cost of increasing our guidance, I think our target is to get to 25% revenue growth, both on standalone and console at the end of the year.
Wow. So you've upped your guidance here from 20 to 25%. Amit, what should therefore the FY27 be like? Will that be a bit of a drag given that there'll be a stellar FY26, or can you continue to grow at 20% on that higher clip?
So I think that is our objective. It will be premature for me to say we are still in Q1 on FY26. There are too many events that are happening around the world that are outside our control. However, FY26 seems loaded and locked in terms of the numbers that I just mentioned, because it's in front of us. However, given the order book that we continue to have, we've already done around 33% of our order inflow guidance at the end of Q1, close to 10,000 crores. And I think we should maintain, 20-odd% guidance also. But, we will talk about that towards end of Q3 and beginning of Q4, as it's kind of early to give numbers for FY27.
No, excellent. Thank you, Amit. No, we appreciate the cautiousness on the guidance. Amit, on margins, you have suggested a couple of times on con calls earlier that there is a positive bias to margins. As you tilt the product mix to higher margin, as you optimize operations, as you scale, talk to us about where should we expect the margin number, if not for FY26, maybe not the immediate term, but if you can give us that guidance. And if not, then maybe FY27, 28. Where's the direction and how much can you increase it by?
So, Harsh, given that we have uncertainties in business, sometimes some divisions would slow down because of factors beyond our control. We've been steadily saying that our objective and intent is to increase our PBT steadily and ensure that we maintain that and sustain that. If you see in the last 24 months, we've had almost 150 basis point PBT increase to our contribution in terms of our percentage of profits. And I think our objective, even when we started at the beginning of the year, we said we should be, between 5 and 5.5%. And I think we are trying very hard with everything in place to try and be at the higher band of that PBT margin. And our objective is hopefully to maintain that and, try and make an effort to go ahead of those numbers in the following years.
5.5 likely upside in terms of FY26, and thereafter you'll build on top of that. But that's extremely strong guidance, because what you've done maybe in FY25 is roughly 4% or maybe thereabouts. And therefore, it's a very, very strong guidance that you're giving. Thank you so much, Amit. This is insightful. Thank you so much for coming in and chatting with us.
Thank you, Harsh, for having me. And
Yeah. Okay. That's, of course, the management of Kalpataru projects for you. 5.5% PBT, and they're looking at a near 25% growth. Hopefully, they are able to execute on that. The earlier guidance was 20%. You want to probably look at those numbers afresh as you try and make a decision on how to look at this one. But viewers, thank you so much for watching KYC. From all of us here, it's a goodbye.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता आई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Markets continue to trade in the red. Bharti Airtel, Axis Bank and IndusInd Bank weigh on the benchmarks. Meanwhile, Titan and LIC are buzz in trade. Q1 results beat estimates. Titan's jewelry segment thrives despite high gold prices. LIC's Q1 shines with value of new business surging over 20% on a year-on-year basis. And it's MSCI's August rejig that is set to be announced today. Vishal Megamart, Swiggy, Hitachi Energy to drive major inflows. Changes to kick in later this month. EU Small Finance Bank buzzing in trade after the company gets RBI's in-principle nod to operate as a universal bank, first after Bandhan Bank that got the license in April 2014. Meanwhile, Kalyan Jewellers plunges 8% in trade despite a strong 49% rise in profits in the first quarter. Volatility in gold prices has made the street cautious about the stock. Meanwhile, gold futures scaled record peak. Reports of fresh US custom duties on 1 kilo gold bars per supply concerns. Good afternoon. You're watching Markets at 12 with me, Shreyanshi Singh. Let's take a look at the markets first things first. At this point in time, the Nifty not doing all that much. Let's take a look at the list of Nifty, of course, is on the back foot. You do have it holding on, just about holding on to that 24,400 level, in fact. But when you take a look at the list of losers from within the sectors, you do have IT that is on the back foot. Banks as well on the back foot, financials also on the back foot. So that's something that you're looking at by the way of sectors. As far as the list of sectors is concerned, you do have realty, energy, FMCG also holding on to a tinge of red at this point in time. What's holding up well is media perhaps. So that's something that you're looking at in terms of sectors as well. Quick look at some of the top sectoral the top contributors as well. It's Titan that you should be looking at. That's buzzing away in trade along with Maruti, HDFC Life. Those are some of the counters that are holding on to some bit that you should be looking at that are in the spotlight. But what is also in the spotlight, of course, Puneet, is Sandhar Tech, and that's also something that we're looking at in terms of the earnings fine print there.
Well, definitely, and it's been a very, very interesting quarter for the company. There was some pressure in international subsidiaries last year, but they are expected to lower in this particular quarter as well. And with the company's 65% share coming from the two-wheeler space, let's just take all these points and look at what the management's view is. We're now being joined by Mr. Jayant Davar, the Chairman, MD and CEO of Sandhar Technologies. Mr. Davar, a very good afternoon to you and thanks so much for joining in. I hope I'm pronouncing your surname right, sir. Is that correct?
That's fine. It's a proper noun, as they say.
All right,
you have the luxury of pronouncing it any way you want to. Thank you for having me.
Thank you, sir. It's Puneet this side. Thanks so much for joining in. Before I get into company-specific factors, I just wanted to understand for you the rationale for Sandhar and the way it operates as well. So roughly 65% revenue coming from the two-wheeler space. But within two-wheelers as well, we are now seeing that the scooterization as well as the premiumization segment is doing much better than the entry-level segment, which has the higher volumes. Currently, in terms of your revenue base, do you have a decent mix of both these aspects? Or is it that there's some lineage towards the premium side or the entry-level side?
Well, Puneet, what you are saying now was probably much more true a few months ago. But in recent times, with the launch of the Honda commuter bike, which has done exceedingly well, and Honda now being on the top of the pile in terms of revenues and volumes, I would say that the two-wheeler industry has picked up in the commuter segment as well. However, the premiumization obviously is good for the industry. And despite the volumes not going up as expected, for companies that are in the space of delivering premiumization components, it should be a good run as we go forward.
And so I'm not sure if you talk company specific, but you do cater to Honda, as you mentioned, and that's largely because last year they had some supply chain issues. All of that has resolved now. They're also gaining market share, and that helps you as well. Apart from that,
that was Hero, largely, who had supply chain issues in the month of April and May, where their volumes fell drastically.
Yeah.
But they are confident, and we are confident that they should be able to make up the volumes projected at the beginning of the year by the end of the fiscal.
Right, sir. So Hero definitely had some issues in Q1 and that was a temporary production impact. For Honda, I was just mentioning that last year they had some issues and that has resolved now. In terms of product-wise as well, just wanted to get some perspective. Sheet metal is, of course, one of the major products for you. Roughly 17% of your revenue comes from there. I just wanted to talk about margins because you're present across a bunch of products, from vision systems to locking systems as well. In terms of margins profile, could you just give us some perspective on which segment is contributing a little more for you currently? Because sheet metal does give you the 9 to 10% margins, but you are looking to increase those as well. So for Sandhar specifically over the next 2 to 3 years, where would be the focus go for in terms of product-wise diversification?
Puneet, we are basically divided now and structured in recent times into 4 verticals. The automotive proprietary business, which is largely into locks and mirrors and associated parts, is the traditional business of the group, where we have also the highest margins. It is in recent times been followed with die casting, which is now the second largest of the business, almost equating to the first vertical. And then catching up very shortly behind is the sheet metal business. These 2 businesses have grown dramatically in terms of growth for us. With the addition and the acquisition of Sundaram Clayton that we did, and we took over on the 1st of April, that speed has now also been accelerated. In sheet metal, we added 3 plants last year, which are also accelerating and growing that business very, very quickly. And the 4th vertical is our construction equipment business, where we make cabins and other parts. So this is largely the 4 main mature businesses. Besides of this, we have joint ventures, and in recent times, we have subsidiaries in the form of the EV business, the aftermarket business, and so on and so forth. So from a margin perspective, like I said, the highest is the locking and vision systems, followed with die casting, and then sheet metal, and then the fabrication business, which has to do with the construction equipment.
Mr. Dawar, just some constraint on time, so let me just ask you a couple of quick questions. Post Q4, you did mention that the losses last year was roughly about 21 crores in your international subsidiaries, and do correct me if I'm wrong. In this year, what are you anticipating for international subsidiaries? Because while you had mentioned Europe will be slightly under pressure, we've seen in Q1 some players mentioning that there could be some revival based on what's happening right now, and US could be the one which could be under pressure this year. So if you can just give us some perspective on that.
So 11% of our business comes from overseas businesses, which are our manufacturing plants there. You're absolutely right. We had a loss last year. This particular year, we are now working hard to make sure that those losses are mitigated to at least break-even levels. The first quarter was tough, but as we go forward, our order books are now getting full. We have put a rein on costs and so on and so forth. And luckily for us, because we don't supply from India, the Trump tariff system really doesn't apply to us. So we do expect that this year there will be a turnaround, and the loss of last year will come in as a positive in our profit and loss for this particular year in India. Besides of that, there have been other, the first quarter has been tough on us in terms of notional losses, in terms of foreign currency, commodity price increases. There was a one-time power cost escalation from retrospective effect in Mexico. And like I said, whether it was Hero, whether it was JCB, who lost considerable business on account of sales, on account of the switchover from BS4 to BS5, those have impacted us. But we are more than certain that we will recover and be back to our business plan for this fiscal as we go forward in the next 3 quarters.
Got that, Mr. Dawar. Thanks so much for joining in. Definitely a longer chat warranted, and probably we'll do that in the middle of the quarter. But thanks so much for joining in, giving us perspective for Sandhar.
Thank you very much.
And along the industry as well. We look forward to our next conversation. But Shreyanshi, that's largely on Sandhar Tech. Very, very interesting prospects and commentary on the international business specifically.
Well, absolutely, and he did talk about commodity price volatility. That was the management of Sandhar Tech talking to us about a whole host of factors. But tell you what, let's also delve deeper into commodity price volatility, discuss that, take the conversation forward with Dinesh Somani, co-founder of Pro IntelliTrade Services, joining us on the show at this point in time. Thank you so much, Mr. Somani, for taking time out, and a very good afternoon to you. It's a good day to be chatting with you at this point in time, right? Because you do have gold futures that have hit that fresh record high. So that's definitely going to be my first question. I wanted to understand what you think are the key triggers there, and do you see this momentum also being sustained?
Yeah, good afternoon, and definitely a good day. We are trading at all-time high in Indian MCX markets. The prices are close to 1,02,100 around, and the major gain as of now is attributed to a 3% rise, 3% rupee depreciation that impacted the gold prices a lot. Secondly, the disruption with Switzerland of the US, with the trade tariff that is being increased to 39%, that is also added to the supply disruption and created a move of almost 600, 700 rupees as of now. So overall, over the dollar index also depreciated. I mean, the scenario, the uncertainties that are adding to the prices, the major technical level was 1,05,550 that broke out, and prices rallied almost 600 from there on. The momentum is likely to continue for a day or two, and probably we may see 1,03,200 by next Monday.
All right, and that's about MCX prices. I also wanted to get a sense of what you think about spot gold as well and silver. If you can just help us out with what kind of price levels you have in mind, at least for this quarter when it comes to both of these commodities then.
Probably in Indian market, MCX gold probably might test 1,05,200 by next month end. And probably silver, we may see 1,22,000 around. That is the level I'm expecting. As far as the international market is concerned, 3460, that's a crucial resistance in COMEX market. I see it being tested again. The major resistance is 3,500, which is the all-time high as well. As far as silver is concerned, the downside support is 3650, and the upside resistance is $43. The immediate resistance, which I could sense, is $40. A move past 40 may immediately trigger to $43 as well.
All right, and there we have it. Those are some of the price levels to keep in mind. But I also wanted to get a sense of what you think about the geopolitical risk premium as well. Do you think at this point in time, given that there's a whole host of volatility that we see in the markets, is there, do you see that also being priced in at this point in time?
Of course, the volatility is definitely priced in. The uncertainty is also priced in, and all the war-like situations that were created, that everything is priced in. But as of now, the momentum, the liquidity that is driving the prices to these levels, and the momentum might continue for a month as well.
All right, then I also wanted to understand if you'd be able to talk to us about oil prices and the roadmap there. Is that something that you'd be able to tell us about? Because you do have prices edging lower, at least at this point in time. Where do you see them headed? Do you see this sort of oil cracking under pressure continuing, or are you penciling in something else there?
Definitely, the pressure is definitely there. We see prices crossing $70 and then falling back to $63. The WTI crude is under tremendous pressure. We may expect prices to go below $60 as well. As far as the Indian market is concerned, 5850 is a major resistance, and downside 5400 is a major support. Any pullback towards 5650, 5680 could be a selling price. Downside 5440 is a support. We expect prices to be under pressure. To take into consideration the oversupply from the OPEC countries, and probably the control on the inflation by the US government.
All right, then, Mr. Somani, very quickly before we let you go, just one closing comment that I wanted from you. When it comes to gold-silver ratio, that has been something that has been the talk of the town. What kind of gold-silver ratio are you then penciling in? Where do you see that also headed?
Right. The difference between gold and silver is almost negligible as far as the Indian market is concerned. It was close to 95,000 both rates, a 10 gram and a kilogram. But now the difference is close to 12,000, 13,000 rupees. We expect the difference to increase further to 24,000. That means the silver should outperform compared to gold. Gold might stabilize around 1,05,000 and silver may reach 1,24,000 to 1,30,000.
All right, then thank you so much, Mr. Somani, for taking time out and joining us. It was very important day to be talking to you. especially since we have that record high being hit and a whole host of volatility that helps us put things into perspective. Thank you so much. But moving on then, let's talk to SK Bajpai, who's the Senior VP Finance and Legal and CFO at GSFC about their numbers. In fact, you do have the revenue that is quite steady. EBITDA that was up 75% thereabout in the first quarter. And you do have urea sales that have dropped 73%. Fertilizers, of course, facing headwinds. So let's take the conversation then forward with the management of the company. Sir, thank you so much for taking time out and joining us. First things first, I wanted to ask you about the reasons for your EBITDA margin uptick. Do you think that this is sustainable also at this point in time?
Yeah, certainly. Because whatever efforts we have put in for cost optimization by way of capitalizing the solar power project at Charakna by the company and one of the solar power project capitalized by our sister concern GIPCL, in which we have the 50% stake and we are getting 37.5 megawatt power from GIPCL and 15 megawatt power from this solar plant. So power cost has been reduced a lot. Other than that, we have the urea revamp facility in which the energy efficiency was achieved and the natural gas consumption in the urea plant has been as per the target energy norm fixed by the government of India. So this all led to the reduction in the raw material consumption cost, and due to that, this EBITDA margin has been reaching to 9% from the current levels.
All right, then I also wanted to talk about your fertilizer EBIT. That's also something that's increased beyond trading and P&K realizations. Give us a little more color about this, because what specific operational or market factors do you see as the key triggers for this then?
Yeah, actually the DAP production is not cost economics in India, and the prices of the DAP in the international market as well as phosphoric acid, the key component of the producing phosphatic fertilizer in India, is very high. It is ranging around $1258 per metric ton. So DAP economics is not there, so we have switched over to the other NPK grade of fertilizer like ammonium phosphate sulfate, and that gives a good margin at our Sikka plant. So this is the key factor for the fertilizer growth. Other than that, ammonium sulfate is one of the products which is we produced as a byproduct in the caprolactam plant. So that is also giving a good margin, and we have capitalized recently this ammonium sulfate 4 plant. So the production capacity is very good, and there was no shutdown and material was available. And thanks to the monsoon was also a little bit early. So we could sell these high margin products in the market, and through that the fertilizer segment is doing really well.
Well, absolutely, and I wanted to talk about the raw material trends as well. But before I do that, sir, I want to understand what you think about the urea sales as well, because there's a significant decline that we're looking at there, right? 73% thereabout due to trial sales exclusion as well as the stabilization issues. Can you give us a little more color when it comes to these issues, and what are the steps that you're currently taking to be able to mitigate this as well?
Yeah, as I told you, Urea 2 plant was under the revamping phase. So we have commissioned this project on 2nd June. So for the whole quarter, we were under the trial run production. Around 40,000 metric ton of the urea production was capitalized rather than showing as a revenue. That's why you can see that great downfall in the urea production as well as the urea sale. But actually the trial run production was also available in the market, and we could sell that 40,000 metric ton of urea to the market, because urea is in the short supply. So, but it is not charged in the revenue due to trial run production. We have transferred into the capital side of the balance sheet. So that is the reason in the urea. But now it is established, and the new energy norm, whatever the fixed by the government of India, that has been achieved. And I am happy to share that after this commissioning of Urea 2, we are getting the very good production at a full capacity.
Well, absolutely. And you've also talked about the good monsoon, sir. So I wanted to understand, how is the company then positioned to capitalize on the favorable agri input demand during the second quarter as well?
Yeah. I am quite hopeful that in the second quarter, we will put a much better result because we have procured all the input like phosphoric acid, ammonia, and other raw material required to be produced APS and AS and other fertilizer grades of NPK. So we have already placed a lot of material in the market, which will be realized soon, and we will have a very good next quarter. As far as monsoon is concerned, it is very good. And the DAP and urea is in the short supply, so there is no problem as far as demand of fertilizer is concerned. However, we are hoping that in case of P2O5, like phosphoric acid and DAP, if there is slight reduction in the prices, which is prevailing at a very high rate, or it requires a critical examination by the government of India while fixing the rate of the subsidy, which is due with effect from 1st of October this year. And if there is some subsidy increase on the contents of phosphoric acid and sulfuric acid, because sulfur cost and sulfuric acid cost is also very high, and it has been risen 150% of the quarter-to-quarter basis, if you see. So if these things are taken into consideration while fixing the subsidy by the government of India, then it will additionally help the fertilizer industry and the company as well.
Well, absolutely, and I had a follow-up on that, sir, since you've mentioned that there's been a rise when it comes to some of these prices, sulfur as well as sulfuric acid. I wanted to understand if there are long-term sourcing strategies that you have. Are they currently in place? Can you give us a little more sense into that as well?
Yeah, sulfuric acid is the big content. We have the sulfuric acid 4 plants here in the fertilizer Nagar complex. However, it is in short supply because of the demand-supply gap. And we are having this ammonium sulfate 4 plant, which has recently been capitalized, so sulfur demand is high. Our company has already put in this new sulfuric acid plants as a 5 plant, which is due to be commissioned in the 1 or 2 months, after 1 or 2 months. So there will not be any scarcity of the sulfuric acid. And the company will also be benefited by the own production of sulfuric acid rather than procurement from the market, where the prices are more than 10,000 rupees per metric ton presently in the market. So sulfuric acid requirement will be met by your own production, and this will benefit, this will give a good margin or better margin in the ammonium sulfate and ammonium phosphate sulfate production in the fertilizer complex.
Absolutely. And sir, before we let you go, I just wanted to get a sense of if you had any targets in mind when it comes to your revenue as well as margin. Of course, you've talked about the trajectory when it comes to margins, but is there a number that you can share with us on both counts there?
Revenue certainly will grow because looking to the DAP and DAP scarcity in India, we have already tied up 4 shipment of the DAP, and we will be receiving in the next quarter, so it will be very well consumed and accepted by the Indian market. So revenue top line will be grown very beautifully, but the bottom line I cannot give you any number, but at least whatever the margin levels we have achieved in the quarter 1, that is achievable in the second quarter or maybe better than this.
All right, then, fair enough, sir. Thank you so much for joining us and taking time out and helping us understand that. So the second quarter is going to be better, and that's the word coming in from the management of GSFC. That's one stock that is buzzing away in trade, 7% in fact uptick coming in on GSFC. But tell you what, let's take a look at some of the other counters that are then buzzing away in trade. Cummins India and KRBL are some of the counters to watch out for. Vansh, in fact, is joining in with that update there.
Yeah, Shreyanshi. So first one on my list is Cummins India. Now the stock is up on the back of the strong Q1 numbers that the company has reported, and the revenue growth has been led by the both domestic and the export business for the company. The domestic sales are up by approximately 25% on a year-on-year basis, and the exports sales are up by 34% on a lower base. And the company has remained cautiously optimistic about maintaining momentum on the growth. If we talk about the profitability, the higher profitability is on the account of the exceptional gains of about 44 odd crores and the low finance cost and the higher other income which is coming in for the company. If we talk about the results, the revenue was up 26% at 2,900 odd crores versus the estimates of 2,600 odd crores. The EBITDA was up 33% at 600 odd crores versus estimates of 522 odd crores. And the margins were up at 21.4% versus estimates of 19.7%. The net profit stood at 589 odd crores crores versus the estimates of 480 odd crores. So these are some of the stocks that are buzzing in trade today.
All right, and thank you so much, Vansh, for joining us then this afternoon with that entire list. But that's all the time that we have on the show. Thank you so much for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
And you don't think much. Don't think much, right? You know, just go on the path. And that path has to be right. And your walk has to be right walk, right? Then you will arrive somewhere, right? And for us, and I was telling Madhavji when I met him in the room that लगता है भगवान irrationally हमको reward कर रहा है, you know, because मेहनत सब बोलते हैं मैं मेहनत करता हूँ, अरे कौन मेहनत नहीं करता यार, सभी मेहनत करते हैं, right? Chairman sir at the 71 age, सर परसों तो बर्थडे बनाया था सर का हमने, I called up at 8 o'clock. कि सर कैन यू कम, यू टेक द मॉर्निंग फ्लाइट, बट ही सेड कि नहीं आज रात को आ जाता हूँ। ही केम एट 10 रात के 10 बजे की फ्लाइट पकड़ रहे हैं, 2:30 बजे उतर रहे हैं। सो मेहनत कहाँ कमी है सर की भी, यू नो, एंड दैट टू विदाउट रिवॉर्ड ऑनेस्टली। सो मुझे लगता है कई बार हम हार्डवर्क के बारे में ज्यादा बोलते हैं, हम सब करते हैं। आई थिंक आई एम फॉर्चुनेट इनफ, यू नो, वी एज ए AU इज फॉर्चुनेट इनफ कि वी हैव बीन irrationally rewarded by this whole setup. You know, I would give this whole credit to the government of India. You know, the RBI, you know, our board, our customers, our investors, you people, you know, the media, you know, everybody, you know, because without them, you know, मुझे नहीं पता किसका क्या effort होगा हमारे साथ, किसका क्या contribution होगा, so difficult to measure it. But in the end, we got the most powerful platform on this earth. You know, when I go and see the JP Morgan stories, the Goldman Sachs stories, our HDFC Bank stories, you know, it just fascinated me. And now that chance is with us. The chance with this team. that now we can also bring much difference to this whole India, in my opinion, because of course, जैसे सर ने बोला हमें सर्वव्यापी लाइसेंस मिला है और उत्तम ने कल जोड़ा था अनंत काल तक के लिए, forever के लिए. So I think now, it's up to us, honestly, that how this team can re-strategize and look for another 100 years, and that is why we are building this institution, I am 100% sure that we are not making this platform a transactional platform. We are making this platform a relationship platform, a generational platform, a platform which can exist forever, So, and this kind of license, which is the universal license, helps us this, because if a regulator has a trust on you, if the ecosystem has a trust on you, you people can appreciate, and we as the executive can do all those things which is required to build all those, impact or purposeful banking, then nothing will be short of. I know there would be so many challenges. Kabhi tariff ye ho raha hai, kabhi COVID aa raha hai, kabhi war ho rahe hain. But this is a part of business, and we at AU want to take it everything in a very subtle manner. We don't want to overreact. We know that in our 30 to 50 year journey, this will happen, And it's so good that everything is happening with a team which is building it up, so that the team which comes after 10, 20 years can learn from our experience and handle those challenges. मुझे नहीं लगता कि सर ये चैलेंज 2050 में नहीं होने वाले या 2080 में नहीं होने वाले या अगले सेंचुरी में नहीं होने वाले. This will be going on like this because we are human, right? So every time there will be some new human with new ambition, new things, and he might want to disrupt the world. But we as a banker need to, hold ourselves. So इसीलिए मैं हमेशा बोलता भी हूँ, बहुत जगह बोला भी है, आज भी बोलना चाहूंगा कि एक दिन में कुछ नहीं होता. और ये सबके लिए है, एक दिन में कुछ नहीं होता, लेकिन एक दिन सब कुछ हो जाता है. I think कल का जो दिन था शाम का, I think I would give that day, 7th August 2025, evening 6:15, when we got the universal license in principle approval. I know it's a transitioning, but we'll make it happen, because at my end, I would only tell everybody here in my press media that for me, organization first, bank first, is the attitude, I know there is some transitioning required of my shareholding from my personal name to NOFC, but I think that is doable, and I'll make sure that it happens quickly. We have an 18-month period, but I don't know how much time will take it, but it will happen sooner than this 18-month, and will become universal. And as you all know that once you become a universal, AU, if you take the spell out AU, आपको सबसे पहले AU को बुलाना पड़ेगा, because our name says like this, there's no other bank before us in terms of name, honestly, so spell, right? So that is there, but otherwise I would say the business model remain very strong. We believe that this license will push our business momentum more, especially raising more cheaper cost of money that will enable us to serve our customer better. I don't think that our business model is going a tremendous change in next 3 to 5 years, because the cost of money will only come to our satisfaction or to the satisfaction of the main player maybe next 3 to 5 years. Then the whole change in the business model can happen. But I'm so happy that being an SFB also, it has fulfilled our the whole ambition also, that where can we serve unserved, unreached markets, which we have done so well over the period, right? So I think that will continue, and the benefit of universal will start taking more advantage with the time only, right? So thank you so much for listening me, and I don't want to take much of time because I know you have many questions. So it's good to answer you people so that our whole essence of this licensing can be expressed fully, right? So thank you so much. Pleasure.
Hello and welcome welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is country's largest insurance company, and Mr. R. Doraiswamy, who is the MD and CEO of the company. Sir, thank you very much for joining us on NDTV Profit. First of all, congratulations, and it's going to be a long 3-year tenure for you. Let me begin by asking you, sir. You have a 3-year tenure now. How do you see the transformation for LIC in these 3 years?
It's a very responsible challenge that I have. The corporation has been built over a period of time, and we are entering the 70th year. We are in the midst of a digital transformation that has been started 2 years back. Corporation has been built on the trust of crores of policyholders, and it is the challenge in front of us that we build on that, keep the organization high in the minds of everybody. The digital transformation that we are currently looking at is something which needs to be taken forward and taken to its logical end, by which we will be a completely digital savvy organization where from customer onboarding to claim settlement to all the servicing requirements will be completely digital one. We'll have to meet the aspirations of the ever-growing population of India, and particularly the length and breadth of the country. The biggest challenge before us will be to be a major partner with the regulator as well as the industry in making insurance for all by 2047 a reality.
Sir, you've personally looked at Project Dive, and that's what is coming to a conclusion, you said. Once that is done, will it be at par with the international insurance companies? Will LIC be at par with them in terms of how you deal with onboarding to claim settlement, everything?
In terms of the service capability, yes, we should be equal to or better than anybody in the industry. But it's a continuous process. See, we are a legacy institution. We cater not just to the urban population. We also cater to the rural and not so well-to-do population as well. Our mandate when LIC was formed is to see that the insurance is spread to the nook and corner of the country. Having said that, we have policyholders who are not digitally enabled as well, who still use a feature phone, who still do not use data. So we have to be in the hybrid mode. We'll have to serve the customers who are completely tech savvy to those who are not that tech enabled. So we'll be having both. And only thing is, we would like to be doing well in such a way that nobody feels handicapped. Every customer will feel comfortable engaging with us, be it the young millennial population or the young population who would like to do everything on mobile, or the one who would like to walk into a branch and get the service done. Both will be taking in our stride and taking it forward.
Sir, let me complete the quarterly numbers. It was a surprise for the street, and I think it's reflecting in the stock price as well today. APE growth was the story which has been liked by the market. How do you see this growth in FY26?
No, we would like to continue to grow. See, this directional change was brought in 2022 itself when we went public. Earlier, we were a very strong conventional par player. When we got listed, we had to make a directional change in that non-par focus had to be brought in. We did it by introducing products which are very attractive, which met the needs of the customers, and also brings along with it a good margin for all the stakeholders. Also, what has happened is the October 2024 change brought in the regulations, where the master circular was implemented, and there had to be a forced change to all the products that we were marketing earlier. Some products we had to modify because of the surrender value requirement, and some products because of the underlying assumptions. So it was almost like every product had to be promoted or replaced. That having said that, we also had to change the minimum sum assured of some popular products. And we had to increase the minimum sum assured from 1 lakh to 2 lakh just to be compliant with the regulation as well as the product being viable. So that has resulted into our increasing the per policy ticket size. Though we are not able to show a growth as on today in the number of policies sold in comparison with what we did last year. The ticket size had gone up, and with that the APE has gone up. So we could show a good APE increase, and with that the VNB margin has also been better than what it was last year. So our focus will be to show growth even in number of policies, show growth in the APE, absolute volume of premium, as well as the margin, which keeps increasing. We don't have a particular number in mind, but it will be better.
Well, this is LIC, on the outlook going ahead. But Biocon is in focus now. This is on the back of Q1 FY26 numbers, wherein if you see revenues were in line, but EBITDA and net profit missed estimates. The EBITDA margin uptick though is led by operating leverage, and the profit impact that you're seeing is because of higher other income in the base quarter, that is last quarter. Biocon Biologics, if you see, the sales were up 18%, while the generics business was up 6% year on year. But to speak more about the numbers, how was the quarter and what lies ahead for the company, we are here joined by Mr. Shrihas Tambe, who is the CEO and MD of Biocon Biologics. Well, welcome Mr. Tambe, pleasure to have you on our show. My first question, to you would be, if you see Biocon Biologics delivered an impressive 18% year-on-year revenue growth, and of course 36% like-for-like EBITDA growth with an 300 basis point sequential margin improvement. Now, what specific initiatives are in place to sustain this accelerated growth and further improve your profitability beyond 26% of EBITDA margin? And also, how much of the improvement is due to product mix versus pure operating leverage?
First up, appreciate you, recognizing the growth. I think this growth has come on the back of two things. The first piece is that we've grown the base business, and when business growth comes from what you have established over a period of time, that's sustainable growth. And one of the things that happens when that happens is because you have growth in market shares. Our big geographies, if you look at our business, is diversified very well. We've got about 75% in advanced markets and 25% in the emerging markets. So good distribution between US and Europe as well, which is roughly equal. And all of these segments have shown growth. This particular quarter growth came from our oncology segment in the United States. Products are well established. We have a fourth of the market, which is more than 25% of the market share, is on our oncology products that we sell in the United States. In Europe, we saw growth coming in again from oncology, but also from immunology products, where we've seen significant growth in terms of how our products have gained. These are products that we had launched in the past, so that's base business growth, as we would call it. We're also starting to see new product launches which will begin to play. It is for the first quarter of the year, sixth in a row as a fully integrated company. We will start to see in the coming quarters new product launches starting to build on revenue. What happened up until now was the revenue growth on the back of growth in market shares of existing products, margin improvements because operating leverage kicks in. So we had 300 basis point increase in EBITDA because the same cost base, higher revenue, and hence lower cost. And that is again a sustainable piece. And as new launches, which I just referred to, kick in, you would only see this strengthen. So we feel very good about it, Varsha, in the coming quarters.
Understood. So, Mr. Tambe, if you can, quantify for our viewers, can you sustain the growth that you've seen? Plus, what's the margin outlook, going ahead?
Yeah. So first up, the revenue growth is on a year-on-year, quarter-by-quarter basis. So certainly each quarter has performed differently in the previous quarter last year. So to say that it would be the exact number would probably be a little inaccurate comparison. But would we see a growth over the previous year? Yes. And would you see it on a sustainable basis with margins that we are looking at? I think that answer would be a yes too. And that's what gives confidence to all stakeholders that we are building a business which is not just growing in terms of top line, but it also a strong, profitable growth.
Mr. Tambe, also you were speaking about the oncology products. So two of your cancer products, that is Ogivri and Fulphila. How do you plan to maintain or grow their market share? Considering the evolving oncology biosimilar landscape.
Yeah, and I think that's a very important question that you're asking. Saying in a market where there could be 4 or 5 other players, why would a customer or a doctor or a healthcare giver consciously just continue to pick our product? And I think one of the reasons for that begins with having a strong portfolio play, which is we are committed to an oncology portfolio. We have several products in the oncology portfolio today. And that helps because it builds relationships. It gives the sense to oncologists, to physicians, to healthcare givers that here is a company that is committed to this space and they will be here for the long term. It gives the confidence to the payers, insurance customers as well that we are committed to this space. The next thing is you want to be in this space because you have provided reliability of supply, because these are life-saving drugs. So you want to make sure that no patient is ever deprived of their treatment when they need it the most. And one of the advantages of being a fully integrated player from development, manufacturing to our own sales force is that we are able to guarantee in some way that we have a reliability of supply. There's a greater confidence that customers have in companies that are fully integrated. And the third piece is, of course, our competitiveness, that we are in this space. Not only do we have cost arbitrage, but we also have a position where we can get the best economies of scale, given that we have one of the largest capacities that we have invested in over a period of time. So all of this packaged together, along with the patient assist programs that we run, so that the patient feels comfortable with our product, is something that differentiates us from the competition and allows the doctors, physicians to regularly pick our product over the rest.
And Mr. Tambe, so given the approval of Kirsty as the first interchangeable, rapid-acting insulin biosimilar, how quickly it can contribute significantly to your insulin portfolio?
Yeah, which is again Kirsty, which is our biosimilar insulin aspart, is another proud achievement that we are happy to report here. And it is, like you rightly said, Varsha, the first and only interchangeable rapid-acting insulin that has been approved in the US. In addition to this, the originator has also put out a press release that they will be, withdrawing some of the products of this, some of the SKUs of this product from the US market. Now that is a twofold situation for us. One is, of course, it's a massive business opportunity, but it's also a humanitarian aspect because, again, as you know, insulin is a life-saving drug, and you don't want a patient to be again ever deprived of their treatment. So we look at this not just as a business opportunity, but something that we have a responsibility to make good. There's not enough that we can make because the demand is expected to be quite strong. We continue to see that. And we will launch it in a responsible manner because these are chronic therapies. So once you launch it, then you want to be there with the patient for a very, very long time. So we are not in a rush, but once we get there, we will make sure that we are there for a very sustained period of time.
Understood. Also, Mr. Tambe, any outlook you can give on the consolidated growth that you're expecting in FY26? Because if you see the three-year CAGR growth stand at around 23%. So will you see that 20 to 23% of revenue growth on a consolidated level?
See, as one of the things that we should always look at, Varsha, is as base increases, as your base increases, obviously growth rates have to be adjusted for, because it's a different growth rate when you are, say, a $200 million company and a different growth rate when you look at a $2 billion company in terms of what you want to add to that growth. But having said that, if you heard what I said in the earlier part of this conversation, we believe that at Biocon Biologics, for sure, the future is far more exciting than what we've seen so far. So we certainly would expect to grow at a healthy clip without necessarily giving you a specific guidance on the numbers, we expect to grow strong in the coming years and grow profitably. So we feel very good about the coming years.
Right. Well, understood. Well, thank you so much, Mr. Tambe, for joining us and having this conversation, and all the best for the business. Well, this was Biocon. Let's see what that stock is doing. The stock is under pressure because it did not meet, rather I would say EBITDA and net profit did not meet estimates. But, Puneet, so overall, if you see, when it comes to Biocon Biologics is the next level of growth when it comes to, the overall consolidated level. And of course, the launch of some liraglutide in UK is also one of the other growth drivers that the company has.
Well, definitely. And, this one, apart from, other key stocks in the CDMO space and the biologics space, has been one of the key ones to watch out for. So keep this on your radar going forward as well. Let's quickly pull up an Ares Infra as well. Recent listing, the company came out with their Q1 results. Stock largely not doing too much, but let's take the conversation forward. Mr. Rohan Morbia, the current managing director of the company of Ares Infra Solutions. Mr. Morbia, I hope I'm pronouncing your surname correct. It's Puneet this side. Thanks so much for joining in. And let me just start off first with a little bit of a view on the company first, because since it's a recent listing, in Q4, you'd given the presentation and you mentioned that you are a B2B supplier and you have roughly about 40% of the business coming from large infra as well as EPC players, and roughly about 17% coming from leading real estate players as well, which are developers and builders. So I just want to understand in terms of growth prospects going forward, with the formalization of this industry that you're operating in, would we largely see the share to be maintained as well?
Yes. First of all, thank you for having me. My first name is actually Ronak, so it's Ronak Morbia. So looking at this, the numbers that you said, I would just like to put some perspective into those, categories. The broader category is basically 60% infra and 40% real estate, and everything is, in between those two brackets. Yes, with the formalization of these industries, plus, us coming as this large organized players, trying to solve a problem for them. And, with our unique model of not just material supply, but combining supply, going beyond supply with services, which is project-based services, and then, adding a piece of technology that we have built in-house to handle the entire back-end operations. Yes, it's a cumulative model which we feel is going to be really, really helpful for us to grow in this industry.
Ronak, going ahead with the service question that you mentioned. So it's Ares Uniturn is the vertical that you're referring to, right?
Absolutely, yes. That is one of our subsidiaries that takes care of services. So
you mentioned, in one of your in your Q4 presentation as well that there was a particular land parcel that was stuck, and along with supplying materials, you also did the service aspect of the business. So just in terms of how big could that business be going forward for you specifically, because you are roughly at 750 to 800 crores in terms of revenue. For last year, how much was this business and what do you expect it to be in the next couple of years?
Yes, in fact, that's a very exciting project that we handled end to end. It's a very good example of what we have to offer to this industry, which is very unique in terms of material supply, execution, and selling of inventory as well. It was a stuck project. We revived that entire project. We completed the handover in just about 24 months, selling of the inventory, and the material supply was exclusively through our Ares brand. So good example of what we can do, what we have to offer. Last year, with respect to services, I think the overall contribution from services was about 6 to 7%. But a more important point here is that the profitability contribution was in excess of about 30%. So when you combine all three models of supply, services, and tech, and when you actually see the operating leverage that will start to kick in as we scale, the profits that we record right now, are not only exciting but sustainable as well. And just to highlight, on the profit that we actually recorded this quarter, we actually recorded our highest ever EBITDA at just over 9%. The PAT that we recorded was about 5 crore, despite absorbing a 2.8 crore of IPO expense. So our profit adjusted to that would be about 7.45 crore, which is in fact 15% year-on-year growth. What's more satisfying is that there was a significant turnaround with respect to a 51 lakh loss in the previous quarter. We have close to delivered 85% of the overall profit of last year, FY25, in just one quarter.
Got it. And Ronak, in terms of this business, you mentioned 6 to 7% of revenue. Where do you expect it to go in the next couple of years? Because you've also given some decent projections in terms of growth. I think 40 to 50% CAGR over the next 3 years. So given that parameter as well as where the services could be, do you expect this to be roughly 15% of revenue in 3 years?
Well, not to look for
a range, not an exact number, but a range and some perspective.
Yes. Yes. It's important to understand what we are focused on. Our business has about 3 brackets. One is, the traded materials. Second is about contract manufacturing, through our own brand where we form long-term partnership with, we technically act as manufacturers. And the third is services. Our focus is always going to be forming long-term partnerships, growing into the contract manufacturing segment, which is about 35 to 40% as of now, and growing into services as well. Absolute numbers will increase, but revenue concentration, we are conservatively expecting it to be somewhere around 6 to 8% as we grow. But our focus is definitely going to be there to grow the business.
Got that, Ronak. And in terms of order book as well, it's roughly about 750 crores in terms of order books at the end of June 2025. Given you currently have about revenue of about a similar number, is this executable over the next 18 to 24 months, or is that more extendable to the next 3 years?
In fact, 750 crore is just the order book of the project-based services that we have, which is in fact a combination of supply and services. This is really on top of the rolling demand that we have on a monthly basis, which is close to about 60 to 70 crores as of now. So the order book works slightly different in our business, in material business. And when you combine with the project-based order book that we have announced in the last 2 weeks, I think the order book is looking extremely exciting. The numbers that I just mentioned are without using a single rupee of the IPO proceeds. And we already recorded a adjusted PAT of 7.45 crore. So the coming quarters are going to be exciting. We have enough visibility in terms of the order book. In fact, we operate in one of the largest sectors which is least disrupted. That's what we believe. So the industry offers great potential to grow, and we believe we have enough capital, enough resources, and we built a robust foundation to grow.
Got that, Ronak. Ronak, we leave it at that. Definitely a much deeper conversation warranted in the middle of the quarter. So we hope you'll join us then as well. But thanks so much for joining in, giving us perspective for ARIS as well as what you're expecting over the next 3 years.
Absolutely. Thank you so much.
Well, with that, let's slip into a very short break. Back with more as well as what's moving in the market today on Profit Buzzer. Stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back to Profit Buzzers right here on NDTV Profit. Let's first look at how the markets are doing. It's been a very, very interesting day. Lot of individual movers in the broader market, but let's first start with the Nifty 50. It's down 150 points. It's been a day that started off decently in a flattish market and then consistently being under pressure. Let's look at the heat map for the Nifty first. That's going to be another one where we saw some early movers in the day was something like a Tata Motors, but then eventually we did see that subside as well. So something like an NTPC is now the biggest mover of the day. Titan after earnings is reacting very positively. Trent as well, and I think that's some positive up move from the note written by HSBC, and we'll get to that in just a bit. Some pressure that we are seeing on Bharti Airtel, something like a JSWC is also down, as well as Grasim is down 1.8% as well. Let's look at the mid cap and the small cap index right now, because we've seen again a day where the broader markets have been down. Mid cap 150 down 0.7%, and the small cap also down 0.5%. And finally the BSE 500. And here is where it gets very interesting, because we're now in the fag end of the earnings season. Look at something like a Kalyan Jewellers down almost 8% in trade, and we'll get Mahima to talk more about that. On the other side, something like a Ramco Cement is also down. Data Patterns is the other one, and VIP under pressure post its earnings. But on the positive side, Global Health, which is Medanta Hospitals, has been doing very well in trades, very, very strong results in this particular quarter. GIC is also reacting to numbers as well, but the top gainer on the BSE 500 is KRBL. The stock is up more than 14% now in trade. It's 12.2% now in trade, 417 rupees on that stock as well. And that's largely on the back of results. And we actually spoke to the company's Chief Financial Officer, Mr. Ashish Jain, about the company's revenue target as well. Let's listen into what he had to say.
When we look at Basmati as a category, packaged Basmati is sold in the country in roughly 7 lakh outlets. Now, when you compare that with the reach that some of the more established consumer product categories have, it's really a fraction. Within that 7 lakh, we reach approximately 4 lakh outlets. So being market leaders, we are still not covering the entire base. So one of the initiatives that we're driving on the supply chain side is to grow coverage in terms of distribution. And that is happening across channels, general trade, modern trade, as well as e-commerce and Q-com. Now, from an efficiency perspective, see, while we continue to drive efficiency in the channel, the focus right now is on enhancing coverage. Yeah, so I mentioned earlier, we are looking at 6,000 crore plus revenue as we stand at the end of Q1. We are broadly on track, and rest we'll see how the year goes.
Well, let me also welcome in Aditya Agarwala, who's joining us as a technical expert for the show. Aditya, a very good afternoon to you. Thanks so much for joining in. Let me just get your first view on KRBL, because inching from strength to strength, do you see that it does make sense to enter at these levels as well, or wait for any kind of pullback on the counter? And what's your long-term view on the charts for the stock?
Hi, good afternoon, Puneet. Thanks for the show. A massive up move, without a doubt. Like you mentioned, a 17% kind of an up move, backed by healthy volumes as well for the stock. Interesting is, previously also we'd witnessed a decent up move in the stock, higher highs, higher lows, and then suddenly we saw a crack after a lot of tariff concerns that were raised. If I look at a longer term time frame charts, looks like stock is headed higher for sure. So if you're looking from an investment perspective, you can still nibble in the stock at current levels. Look for a target of 500, 550 on the upside. On the downside, 380 to 370 is a good support area. So my sense is you can start buying the stock in phased manner, not in one go, because there could be some bit of profit taking after this sharp up move of 12.5%, 13% that you're witnessing. Close to about 400 is where you can complete your buying between 400 390 in a staggered manner, and look for a target of 500 on the upside, like I mentioned, with a good support on the downside, which can be maintained as a stop loss at 350 odd levels.
That's so enter the stock in a phase manner is what's Aditya's view. Let's also pull up something like a Sirma SGS. Now it's in focus after the company has launched its QIP of roughly about 1,000 crores. Now they got this approval in May when they reported the Q4 results, and now they've come out and launched this QIP. And now they've mentioned an indicator price of 699, roughly a 5%, almost a 4.9% discount from the previous close, and also indicated that the dilution will be about 7.4% in this particular QIP. DAM Capital is the book running lead manager as well. But what's interesting is they mentioned that roughly 100 crores will be the capex for FY26. This will part of the regular balancing which they do in terms of maintenance. But the capex for the new PCB venture is roughly about $91 million. And probably that's one of the key reasons for this QIP as well. A lot of the funds could be used there as well. This will be, of course, for the PCB venture, which is where Sirma is a joint venture partner with Shinyup Electronics of Korea, and they have roughly about a 75% stake. And we spoke to the management post Q1. They're very positive on PCB as well as PCBA. And that could be something very interesting for the stock, because it's seen a very sharp up move from those lows, about 420 as well. But Aditya, I was mentioning that, on the fundamental side, the company has done very well in Q1 results, and the stock has reacted positively as well. Do you see that it could have some more legs, or would you prefer any other EMS counter if a position has to be taken in this space?
Definitely, without a doubt, Puneet. In fact, as a disclosure, this is one stock that was recommended to our clients as well and could be in their portfolio still. And my sense is, like you mentioned, this entire space is looking very interesting. Yes, Sirma being the top bet in that, I still feel that there could be some more room on the upside. If you see a potential downside all the way till 700 or maybe 680 as well, you should definitely use that correction as an opportunity to latch on and look for a target of 800 on the upside. That's the first target that we're playing with. And once 800 is taken out, 830 can also be seen on the stock. On the downside, my sense is 660, 650 should be a very strong support area for the stock. Another player in this space, which also looks interesting, is Cades Technology. This is also one stock which has seen a sharp up move. A couple of trading sessions, we are witnessing some soft trading pattern in Cades. This could again be used as an opportunity to initiate fresh longs here. On the downside, 5,600, 5,400 is a good support area. On the upside, we believe 7,000, 7,500 is something that can be tested on the stock. So Sirma and Cades both look very interesting. But yes, definitely Sirma is the top bet within this space as of now.
Fair point. Got that view, Aditya. But let's also pull up something like a Kalyan Jewellers. We highlighted the top loser on the BSE 500. It's under pressure today post their quarter 1 earnings as well. And let's get Mahima to get some more perspective of how the results were and what she makes of the management commentary as well. Mahima.
Right, so Puneet, the results prima facie were good in terms of the overall growth. It's been a good set of numbers. But I think there are certain pain points which the investors in Kalyan Jewellers most certainly are not liking. Some of them are higher capital infusion might be required, is something that the management indicated for their new pilot project, that is lean credit procurement. And in terms of debt reduction, they've gone ahead and said that they will put debt reduction on a pause right now. And other expenses plus interest and depreciation costs have also gone up. Now, in terms of the overall higher capital infusion that I'm talking about, there are certain levels to that. In terms of the new pilot project, the lean credit procurement, that might require a capital infusion of around 1,500 odd crores to 2,000 odd crores if they implement it company-wide, is what they've said. And they would either raise debt or equity for this. In terms of the regional brand strategy that they've adopted, that will also require a working capital of around 300 odd crores. And they're setting up a park in Kerala, for which, of course, they've received a subsidized land at a subsidized rate of around 5 odd crores, where they're saying that they will set up a park and that will look for exclusive suppliers to work there, and that will also take into consideration hallmarking that people would also work, give from there. In terms of debt reduction, like I said, they've gone ahead and said that they will pause further debt reduction. Earlier, they had plans with respect to where debt reduction stood, plans in place to say the least, but now they've gone ahead and said that they will pause the debt reduction. And I think these are the concerns that investors have in Kalyan Jewellers, and that is why the stock is probably tanking.
Well, thanks for that, Mahima, getting us key perspective of, despite good results, stock tanking almost 8.5%, 8.4% now. But Aditya, let me come to you, because we've seen good results from Titan and the stock price is getting rewarded. Something like Kalyan also reported decent results, getting hammered because of capital and that's been a concern for Kalyan, because even in last quarter we saw a huge impact post quarter 4 earnings. Do you suggest entering this counter as of now?
No, Puneet. In fact, on the flip side, I would completely suggest staying away from Kalyan Jewellers at current levels. If you're already long on the stock, maybe at lower levels, trail your stop losses. 530 for me as of now is a good support area for the stock. If you're looking for a fresh entry, I would still wait it out for this correction to play out. Could extend in the coming trading sessions as well. So I wouldn't like to catch the falling knife as of now. It doesn't look all that great for me on the chart setup. So 530 should be a stop loss if you're already holding the stock, because below that, my sense is stock could correct at least 7 to 8% easily in the coming trading sessions.
Got that view, Aditya. But in the midst of difficult market conditions where sentiment has been impacted by Trump tariffs amongst other reasons, HSBC has come out with a very interesting note on 5 stocks that they have identified in the ongoing market scenario and seen headwinds and performed well. Above par versus the other stocks. So, let me just quickly say what they are doing. It's saying that the growth has been not exciting in a lot of sectors, but the companies are faring better with their peers. And which are these companies? The first one they mentioned is Trent. The fashion retailer is facing some intense competition, but offers compelling growth. They've also given the next guidance for the next 10 years. So very interesting one. Infosys is the other one. This was a shocker for me as well, because the macro environment is very uncertain for IT players. Infosys stock has gone below the levels of somewhere around 1900 that it was before in the last couple of months. They have mentioned that it should incrementally continue to do better, and valuations are no longer a concern. The third one, GCPL, Godrej Consumer Products, stand out in its innovation capabilities. That's HSBC's view, and is gaining market share in the home insecticide segment. The other one's SBI, and no surprises here because government-owned PSU placed better than the large cap banks, valuations also in favor, as well as a strong balance sheet. And finally, Phoenix Mills should benefit from refreshes in its legacy malls, and stock offers attractive valuations after some correction that the counter has seen. But Aditya, any of these counters that you find interesting? Trent, Infosys, GCPL, SBI, as well as something like a Phoenix Mills?
A lot of them, Puneet. In fact, I could flip some of the names within that same sector and recommend some that we like at our end. So let's start with Trend first. Yes, definitely my sense is the stock is looking interesting, even though a lot of people can debate that it's trading expensive, and it has been doing so predominantly. But my sense is over a period of time, the stock will eventually head back to levels of 7,000, 7,500. So I wouldn't shy away from allocating some part of my money in the portfolio to Trend even at current levels, and keep on accumulating if the stock corrects all the way down to 5,200, and eventually look at a target of 6,500 to 7,000 on the upside. Talking of IT, there are few names that we definitely like, not Infosys as of now, but TCS is something that is looking interesting apart from Infosys in the large cap space, and TCS we believe can be looked at current levels. There is a good up move that we see in TCS from current levels, at least for levels of 3,400 to about 3,800 on the upside is something that we're playing for TCS. So from the large cap space, TCS is something which looks very interesting to us. From the mid cap space, a couple of names stand out for me. The first one is Persistent Systems. That is one stock which has constantly been making higher highs, higher lows, and looks very interesting. And after the recent correction, offers an excellent risk to reward as well. So Persistent System is something which is looking interesting for a target of 6,000 on the upside. Can be taken a bet here. And from the consumer space, one stock which stands out, Godrej, yes, does look interesting. But Voltas is something that I'm keeping a close eye on. And my sense is one should look at Voltas at current levels for a target of 1,500 on the upside, with a good support on the downside at 1,200. This is one stock which can be added. And Godrej, yes, that also looks interesting. Can be bought at current levels all the way down till 1,150, and look for a target of 1,400 on the upside. Phoenix Mills, I also agree, that is one stock which we also like, and we've recommended this to our clients. And after the recent correction, does offer an excellent risk to reward, so one can definitely look at adding Phoenix Mills also in their portfolio.
Got that view, Aditya. But the big number is out for today. SBI results are out during market hours. It was expected to come in at this time. So net profit is coming at 19,160. It's up 12.5% compared to the same time last year. We mentioned that the profit expectation was somewhere in this particular quarter around 16,964. So it's definitely done very well compared to what the estimates that we were working with. The gross NPA number 1.83 is bang in line with what the number that we were going with. While in terms of net NPA as well, the number is coming with the estimates that we were going with in this particular quarter. The net interest income largely flat at 41,072 crores in this particular quarter. We were going with the number of 42,430 crores for SBI in this particular quarter. In this aspect, and at least in terms of flat NPA that's there, in gross NPA we mentioned about 1.83% is what has come. The provisions were expected at 4,760 crores. We'll just get to the fine print of that, but that was the key expectations from provisions in this particular quarter. The net NPA, as I mentioned, it's coming at 0.47%, and that's largely with what the number that we were going with as well. So definitely SBI, while the stock's not doing too much in terms of expectations, the profit slightly, the net interest income at 41,072 is just slightly below the estimate that we were going with. About 1,000 crore difference there for SBI in this particular quarter. We'll also of course see a lot of reaction on the stock as of now, but we'll get to the fine print. The operating profit number also coming in at 30,544 crores. Estimates were of about 27,500. So it's definitely the profit as well as the operating profit coming in, and I'm going to guess that there's some impact of provisions positively impacting on that stock as well. So could be a very interesting number, because and there you have it, the provision number 4,759. It's bang in line with what our expectations were of 4,760. It has grown 38% on a YY basis, and that's largely in this particular quarter that the numbers look decent, at least on the operating profit and the profit numbers. But let me get in Harsh as well to give us more perspective. Harsh, the net interest income slightly below the estimates that we were working with, but profit has come in a little higher.
Yeah, I think it's the other income which has caused the beat. And I'm going to quickly try and pull that number out. It's coming at 17,346 crore versus the 11,162 crore number which SBI clocked same time last year. That's where the 6,000 crore rupee differential is, where the growth or the bump up in terms of profitability has likely come from. Prima facie basis, whatever we're reading of the numbers, there's been no real large inch up with regard to employee costs. They've been largely stable. OPEX also is well controlled. 25,800 crore was the OPEX number same time last year. It's coming at 27,800 crore. So largely stable. It's actually an operational led beat, and within that operational also it's other income which has caused the beat. Sustainability of that number, of course, we'll have to wait and watch. But 30,545 crore is a healthy operating profit, or 544 crore is a healthy operating profit, which SBI has clocked. And that's, of course, over 10% above our estimates, or nearly 11% above our estimates. And provisioning was bang in line, which meant that you saw a 3,000 odd crore or maybe 2,000 odd crore impact on the bottom line profit number. And that is what we've seen, and that's a solid beat across the board. In terms of the ROA number, and this will be interesting because we were anticipating that the ROA might be below the 1% mark, but it's not. 1.14% is where the ROA number has come in at. So it's a strong ROA number as well. We'll look at growth in just a bit, but we are joined by Nyananda Vaidya. Apologies, Nyananda, if I'm getting this wrong. He's research analyst, BFSI Access Securities, on the phone line with us. Good afternoon, Mr. Vaidya. I want to ask you first off, what are you making of the first cut numbers that have just come out with regard to an SBI bang in line in terms of NII? The other income number seems to be the surprise. Is that the right reading?
Yeah, hi, good afternoon. Yes, NII numbers are a tad miss on our estimates, possibly because of a sharper margin compression. We had penciled in somewhere around a 12 basis points reduction in margin on a sequential basis. It seems to be slightly higher. But clearly, it's a strong beat on PPOP as well as PAT, and we believe this is mainly because of stronger treasury income and very, very controlled OPEX growth. The credit costs don't seem to be a problem as of now. Inline calculated basis on a 45 basis points is what credit costs look like. Steady performance on asset quality as well. Yeah.
Ma'am, I apologize for getting this wrong. Ms. Vaidya, tell us, what are you making of the margin picture in this quarter? Do you expect a material shrink? Of course, we don't have the number yet, but we have the NII number and we do have the growth numbers as well. What is the likely shrink, if at all, that you are seeing at this point? Or how much are you penciling in if you don't already have visibility on that number?
Yeah, so we had penciled in about 12 basis points. On a calculated basis, it seems somewhere about a 15 to 17 basis points of compression on the overall book. So that's the reason why we've seen a slight miss on the NII estimates, but overall a very strong operational performance. Yeah.
Even on the growth front, we've missed a bit of growth, right, ma'am? 4196. Somewhere below 42. The larger consensus was tilted well above 42 lakh crore in terms of the AUM number or the advances number. What's your sense on that number?
We had almost similar, about a 12% YOY growth, and a largely flattish growth is what we had factored in. So it's more or less in line with our expectations.
Understood. Ma'am, this provisioning, which has come in at around 4,700 odd crore. Give us a sense. Is this largely going to be agri and therefore no concerns whatsoever from an NPA provisioning standpoint that SBI will likely see? likely, can that continue going forward as well? Absolutely. Any concern on asset quality that SBI can face?
So Q1 generally sees some seasonal agri slippages, and that could possibly be the reason for a YOY inch up in provisioning. But 45 basis points is still not a bad number. So we expect that credit costs should range somewhere between the 50 basis points plus or minus 5 basis points for entire FY26. Because corporate and retail-led asset quality doesn't seem to be a challenge as of now. We would want to wait for some commentary on the unsecured piece, which is the express credit that the bank has. But overall, we don't see any major challenges on asset quality and resultant credit costs.
Got it, ma'am. Your last thoughts with regard to PSU versus private. SBI has delivered an overall very, very stable set. While the stock may be maybe at the day's low, but otherwise the set looks a very, very solid set overall.
Yeah. So within the coverage universe that we have on PSUs, Bob posted better margins. They were better controlled. However, with SBI's ability of delivering an ROA of 1.14 despite the margin pressures and possibly maintaining that 1% ROA over the year, we expect that SBI could see a healthy upside from here.
And what's the upside you're penciling in, ma'am?
So currently, before we revise our estimates, of course, our target price is about 1,025. So it's somewhere around 25% plus of upside that we are seeing right now.
And is that the best upside that you're seeing among all other private large banks within the country?
No, we of course have we remain positive on the private sector banks also. Our top picks would be, in the pecking order, would be HDFC, Kotak and ICICI.
Understood. But 25% on any of those?
I believe it's Kotak as of now.
Got
after the fall, after the Q1 result.
Got it. Thank you so much, ma'am, for doing this at short notice and giving our viewers a perspective. And viewers, with that, what we'll also do is we'll slip into a short break. More on the other side, so stay with us.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
हेलो
हेलो
बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No.
Hello and welcome. You are watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, after the smart recovery that we saw in trade yesterday, markets have again fallen over 150 points in trade.
Exactly, and you know, if I were to talk about Nifty, let's see what Nifty 50 is doing. It's down almost 0.63%. Let's see what the contributors, you know, when it comes to benchmark. You on the loser side though, let's see, you have Bharti Airtel, you have RIL, you have you know, Grasim and JSW Steel also on the loser side. While on the gainer side though, you have NTPC, you have Titan, you have Trent, you have ITC, which are on the gaining side when it comes to, you know, Nifty 50. So that was about Nifty contribution. Let's see sectorial heat map. You know, I think barring Nifty media, everything is under pressure. Yeah, there you go. So Nifty, barring Nifty oil and gas and Nifty media, everything is under pressure. Nifty auto is down 0.65%. Well, if you see Nifty pharma is down 0.72%. Onto the Nifty IT is down 0.52%. Let's see what broader markets are doing. Let's pull up the chart when it comes to, you know, Nifty mid cap 150. There you go. It's down almost 0.83%, mirroring benchmark Nifty 50. Let's see what the losers, you know, when it comes to mid cap 150. You have Kalyan Jewelers, you have Coforge, you have Jindal Stainless, Mazagon Dog, Gujarat Fluoro. All are under pressure. There you go. When it comes to, you know, Nifty mid cap 150. On the gainer side, let's see which are the stocks which are gaining on Nifty mid cap 150. You have Global Health, which is you know, buzzing. This is on the back of Q1 numbers. It's up almost 5.5%. You have Cummins, you have GIC, Bank of Maharashtra and MRPL, which are buzzing when it comes to you know, mid cap 150. Let's see what small cap 250 is doing. It's down almost 0.51%. On the loser side though, when it comes to, you know, small cap 250, you have VIP Industries, you have Data Patterns, you have Chambal Fertilizers, which are on the losing trend when it comes to small cap 250. There you go. Data Patterns is down 4.5%. Chambal Fertilizers is down 4.6%. Let's see who are the gainers. You know, you have KRBL, you have Kalpatru Projects, you have Global Health again, and GSFC, which are on the you know, which are buzzing when it comes to small cap 250. So Amit, over the broader markets, if you see, a lot of stocks are buzzing. This is on the back of, you know, Q1 numbers that all these small companies have posted.
Right, a lot of buzzers in trade, and with that, let's welcome in our first management for the show today, Samir Dattani, Executive Director, Sanathan Textile. So, firstly, to start off with, the gross profit number on a YY basis was much better, which clearly indicates that the spreads for the company were good. But there was a revenue decline that we have seen on a YY basis. What would you attribute this to?
So the revenue has declined a bit because of lower selling prices. Typically, our selling prices are somewhere in sync with our raw material pricing. And since the raw material cost went down, we passed on that benefit to the customer. If you see the quantity of sale, the volume of sale on a quarter-on-quarter basis, it's been quite consistent, clearly indicating that we're sweating our asset, our installed capacity fully. And as you rightly said, that our margins have improved. The last year, our EBITDA margins were approximately 8.7%, whereas this quarter and the previous quarter, they are consistent at about 9.3%, which is a very good indication for us.
Right. So clearly you're choosing volume over value. Is that the strategy?
Consistent volume definitely is a strategy, because our strategy has always been to max out our installed capacity, to utilize our installed capacity at a 95-96% kind of utilization rate.
Understood. Mr. Dattani, hi, this is Varsha this side. Pleasure to have you on NDTV Profit. So you had given a guidance, if I'm not wrong, FY26, you're expecting a revenue of around 4,600 to 4,800 crore with EBITDA margin of 10 to 11%. Is there any change in guidance, or you're on track to meet this guidance?
Hi, Varsha. So yes, that is the guidance we have. We are looking at an increase. Our last FY25 revenue last year was about 3,000 crores. We have a new facility that's starting up in Punjab, where we'll be more than doubling our capacity and our revenues in the coming years. This year, since we'll get about half the year of production from that facility, we are hoping to do a revenue of around 45 to 4,700 crores in March 26. The trial productions in that facility have already started, and we are at the last leg of starting commercial productions in a couple of weeks.
Right, sir. So at this quarter, your margins were lower. Now, to achieve the 10 to 11% guidance that you have given, it clearly means that for the next 9 months, your margins have to be way above 11.5%. So what are those factors which is making you so confident that you'll be able to achieve that?
So this quarter, our EBITDA margins were about 9.3%. But if you see June month alone, they were in double digits, higher than 10%. And that is the one indicator that we already have. And all this is because of the robust demand. Also, we are now getting into the festive and wedding season, which typically are the demand drivers for us in textiles. So looking at that coming up over the next couple of months, with all the Indian festivals and the wedding season kicking in, all that should help us sustain our margins in double digits.
Right, sir. Now coming to the most pertinent question of the hour, sir. Do you have any exports to the US market?
We have less than 1% export to the US market. And actually, our overall exports at Sanathan Textiles is less than 4% of our revenue. We have very consciously pivoted more towards the growing domestic demand. If you see over the last 3 years, our exports went down. And because we saw more opportunity in the domestic market, and looking at the global turmoil, it was a very conscious and calculated decision that we took at Sanathan Textiles. See, selling our product because of the growing demand is not a challenge. We pivot between domestic and export sales depending on the netback and profitability. And we have pivoted accordingly. So March 25, FY25, our revenue from exports is less than 4%.
Also, Mr. Dattani, just wanted to have an update on the recycled yarns, and if you could, give us details on how big is this market.
This market is a growing market. Currently, it's a very, very small market in the larger textile ecosystem in India. At Sanathan Textiles also, we have taken a baby step, and we have introduced our range of recycled yarns under the brand name Rivero, where we reuse waste PET bottles, convert into flakes. We buy those flakes from suppliers, which are approved as per the global recycling standards, and we use those to make yarns. So it is definitely a growing trend as the requirement for sustainable textiles and conscious textiles increases. We see this trend growing in the coming years, but currently, Varsha, it's a very, very small contribution to our revenue. And even the overall textile and yarn market demand in India, it's a very, very small contributor to the revenue.
Right, sir. So as you were mentioning that you have less than 1% of the exports to US market, so definitely it's not going to impact you. But given the fact that you are part of this industry, which is expected to see the biggest impact of this tariff increase, if at all they are implemented firmly going forward. So what is that communication that you're having with your peer companies? Have they received any kind of communication from US companies regarding this tariff or regarding stopping of imports into US market? Any communication on that from anything that you can share from industry perspective as to us?
So the initial indications that we have that the current order books that customers have, which ranges between 15 to 45 days, all of those are going to be honored by the buyers in the US. They are not stopping or cancelling any of the current confirmed order books. Also, the second indication is of wait and watch. Because as we saw in the case of China or Bangladesh, China, for example, the tariffs went as high as 180% and then they came down again. So it's a phase of negotiation that we have seen in the past that US has had with other countries. And I think that will happen in our case, in India's case as well. So it's a bit early and I think it's a wait and watch and it will definitely settle down a bit more in our favor. That's the feeling I have. Also, at a larger level, the textile export from India is more towards cotton and not so much man-made as yet to the US. And at Sanathan Textiles, 77% of our current revenue comes from man-made and 14 to 16% comes from cotton yarns.
Understood. And also any new launches that you have planned for this year, and will those be margin accretive?
So our new launch is the upcoming Punjab facility where we're setting up a greenfield project. We are more than doubling our yarn production in the polyester filament yarn segment. It's a growing market. This new facility will largely cater to the growing domestic demand for yarns and textiles in North India. It's going to be the first of its kind facility, fully integrated polyester filament yarn facility in North India, catering to the domestic markets of Delhi, NCR, Ludhiana, Panipat, Amritsar. And we will be the only local supplier of these kind of yarn products to these customers who have been buying from us from our Silvassa facility for more than 2 decades. So we already have an old relationship with these customers, and now we're going closer to the customers and increasing our relationship with them, increasing our wallet share with these customers in North India.
All right, got that point. Well, thank you, Mr. Dattani, for joining this conversation. Always pleasure to have you, and all the best for the business.
Thank you so much.
Well, this was Sanathan Textiles, giving us outlook when it comes to FY26 and beyond that. But, the other stock which is in focus is Metropolis. Now, this is on the back of Q1 numbers. Just, giving you a key highlights. Revenues were in line, EBITDA profit did beat estimates. Revenue growth was led by rise in patient volumes, and the stronger test mix and improved realizations also aided growth. But, to speak more about numbers and what lies ahead for the company, we are here joined by Mr. Surendran Chemerton Kotlil, who is the MD of Metropolis Healthcare. Welcome to the show, sir, and pleasure to have you on NDTV Profit. Let me, start off with margins. There was a decline in EBITDA margins. Just wanted to know the reasons for the same. Is this because of the core diagnostics which has impacted your margins?
Let me explain the whole EBITDA performance for the Q1. At a group level, our EBITDA performance is 23.1%, and standalone, which is the organic business level, which is at 24.7%, which is a big jump up from the previous quarters. So at a group level, the EBITDA is getting little softened because of the core diagnostic performance, because we just acquired core diagnostic in last quarter, and we clearly mentioned that the core at that point of time when we acquired, it's at a break-even level, and this year the endeavor is to make it's more profitable. So the Q1 itself, we could turn it around and we could bring it to a low single-digit percentage of margins in core. So the drag in EBITDA in Q1 versus the organic EBITDA performance is basically coming out of the core diagnostic lower EBITDA levels.
Understood. And you had also guided for 100 basis point expansion on the normalized margins, that is ex-core. So are you on track to achieve that?
Well, I think we have mentioned that 70 to 100 base points, the margin should increase this year. And we are seeing definitely that's happening and we are on course. And we have started off quarter 1 with a better performance. And as you go forward, quarter 2 onwards, you will see much improved performance and margin. And we are on course to deliver what we have given as an estimate in the beginning of the year.
Right, sir, and also what is the outlook when it comes to expected roadmap for the overall group or consolidated EBITDA margin for FY26 that you are targeting?
Yeah, so we have mentioned this in the past as well. We said, the organic EBITDA will definitely be 25% plus, and maybe a 1% softening will happen at the group level because of the core diagnostic performance. So it'll be just a percentage lower than 25% or an organic level EBITDA. That's the guidance for the rest of the year.
Right. And also onto the volume. So what is your volume guidance for the coming years? Any outlook on that?
See, with all the acquisitions in place now, the integrations are actually happening. And in quarter 1, we already seen a volume growth of 11%. And we would like to see volume growth in this range, 10 to 11% for the rest of the year as well.
Understood. And just to, I was just doing a back envelope calculation on the revenue guidance. The organic growth that you spoke about was about 12% and the acquisition will add on to it. So the reported revenue growth in FY26, should it be around 25 to 26%? Is that the right calculation?
No, 12% is coming from the organic business. Another 10% should come from the entity that we acquired. So I think at 22%, 22 to 23% is the range that we should definitely call as an estimate at this point of time.
Understood. Now onto the B2C business, which contributes 55% in FY25. What was that number in Q1 FY26 and what's the target that you have set where you want to take that contribution to?
So we have, redefined the B2C and B2B segments in line with, the rest of the industry standards. So, all the revenues coming from our own centers and franchisee centers going forward, including the rural franchisee centers, will be called the B2C. And, and all the other business is called as B2B, which is hospital, labs, including government institution. Everything is being classified as B2B. So going forward, we'll only have two segments, which is B2C and B2B, no institutional segment. So at the end of quarter 1, the B2C segment from the organic business stood at 59% and the B2B stood at 41%. Now, if you look at a group level, this is at 56% and 44%. And now I would like to now take forward only the group level B2C. That's more relevant actually going forward. So this 56, the next target for us is to take it to 60%, maybe in the next 1 to 2 years period.
Understood. Well, all right. Well, thank you, Mr. Surendran, for answering all the questions and joining this conversation. Great to have you. Well, this was Metropolis, giving us outlook when it comes to FY26. But next stock, which is in focus, is PTC India. Now, this is on the back of Q1 FY26 numbers. If you see, their income from trading business has grown by 8%, standalone profit marginally lower by 2% due to lower rebate and surcharge incomes. The trading volume is up by 13% and the consulting income stood at 9.88 crores. Even their core trading margin stood at 3.37 paisa per unit. But to speak more about numbers, we are joined by Mr. Manoj Jhavar, who's the CMD at PTC India. Hello, Mr. Jhavar. Welcome to the show and pleasure to have you at NDTV Profit. So, talking about Q1 numbers, how was the quarter? If you can update on, how were the realizations as well?
Yeah, quarter was very good. Actually, our volumes grew by more than 13% and our trading income grew by around 8%. Total operational income, although was a little bit flat at 111 crore, because actually we were able to better manage the outstanding situation. So that has got some impact on the income and realization to be held from surcharges. But overall, we have done well. Although the generation in the country has almost reduced by more than 1%, but our trading volume has grown by 13%. That speaks about our entrenchment into the system.
Mr. Jawar, your margins, if you see, were up from 5% to 7%. Any reasons for that? And is this the sustainable margin that you can go on with? What's the outlook there?
Actually, the consolidated numbers, if you are looking at, then a contribution has come from our subsidiary, which is the PTC Financial Services Limited. We were able to resolve some previously declared non-performing assets successfully in the favor of the company, and we received around 150 crore rupees revenue from them. So that was a good contribution and it added to the margin. Otherwise, I do not see also a challenge in maintaining the margin going forward, because we believe that the trading space is likely to grow.
So excluding subsidiary contribution, what were the margins?
Excluding the subsidiary contribution, the operational income at PTC was 111 crore rupees. A little bit lower than previous quarter, because in previous quarter, the largest worry of the market was regarding our outstanding debtors position. Particularly, people were concerned regarding Bangladesh operations and also very high areas against the state of Jammu and Kashmir. So now I'm happy to report that we have resolved both the positions very, very successfully. Now both the payments are coming from Bangladesh as well as J&K strictly as per the terms of the contract, and we have resolved and managed that position. So because of that, our outstandings have come down, and because of that, a little dip in the surcharge income. But that I would call is a good sign.
Mr. Jawar, then what are the growth targets that you have penciled in, for FY26 in terms of revenue and margins? And if you could, talk us for FY27 as well.
Actually, we have internally set a target about trading at least 85 billion units during this financial year. We are quite hopeful of achieving that. For achieving that target, basically, we are focusing on our international trade also. So we have opened some new arrangements wherein we are able to import the power from Nepal during this monsoon season also on medium-term basis. We are trying to expand that relationship. Beside that, we would like to see deals in bilateral space as well as exchange space.
Understood. Now, sir, this with market coupling thing, what changes for you, business model wise, what changes will market coupling bring to your business?
Yeah, actually, market coupling is likely to significantly affect the exchanges business. And as you know, PTC also has a associate company. PTC owns 22% of the Hindustan Power Exchange. So with this market coupling thing being put in practice, we believe that HPX is likely to grow significantly into the trading space. And obviously, if that company grows, then it adds to our bottom line and as well as top line.
So for Q1 FY26, what was the revenue from Hindustan Power Exchange and any outlook there that you have set in?
Currently, HPX was not having any meaningful volume in the DAM segment and the RTM segment, which are the collective segments of the market. The entire volume, almost 80 billion units, was being traded on these two. On the DAM market was concentrated into India Energy Exchange only. But now with the market coupling, now there is a freedom for any buyer or any seller to choose any exchange, and all the bids placed on all the exchanges will be collectively decided, and a common collective clearing price shall be declared. So earlier the advantage which IEX was having, that it was having very high liquidity. Any new buyer used to go to IEX because there were sellers, and every new seller used to go to IEX because there were buyers. Now, irrespective of whether in what exchange, what kind of volumes is already there, any buyer or seller can choose any exchange of his choice, and that is likely to lead to a competition on the basis of service and performance. So we believe that HPX is basically thrive on its technology platform and its services, and it will be able to gather significant values.
Right, absolutely. Well, thank you, Mr. Jawar, for joining this conversation and, giving us all the questions. Well, this is all the time, viewers, we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
हेलो
हेलो,
बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a
Alright, we are here at an event organized by AU Small Finance Bank and of course very soon to be AU Bank, and I have with me Mr. Sanjay Agarwal, the MD and CEO of the bank as well as the founder. Mr. Agarwal, last evening the RBI came out with a statement saying that they've given you the in-principle approval. How are you feeling now that you've graduated to the topmost of the class?
Not till now, but Vishy, last night was incredible, right? It's 30 years, when we all started our journey from Jaipur as a small DSA, now reaching to this place, it speaks the volume of India, right? The India's democratic setup, the Indian entrepreneurship, India opportunity, Indian economy. And I think I'm the biggest beneficiary of all those things. And we've been irrationally rewarded, honestly. Because this in-principle approval, it just has made us more energetic, more motivated, more inspired that, we can do much better now, from here onwards. So I'm thankful to every Indian, to be very honest, that, your support, your guidance has really made us what we have as of now, and we believe that we'll make this very big, in times to come.
One of the questions which was asked is this 18-month period of transition, right, from in-principle to a full license. And one of the conditions laid down by the regulator is to transfer your and your family's ownership into a non-operating holding structure. Are you confident of doing that before this 18-month period, or do you think that entire time frame is needed?
So, Vishy, we just got this approval last night, and you have to excuse me because we haven't gone into much modalities and legalities around it. But I think regulator would be knowing it that it can be done in some phased or some time-bound manner, because that's why they have given us 18-month period. So I strongly believe that we should achieve it before that only. So I don't think much challenge there, because on the face of it, this structure helps me a lot, because as an entrepreneur, my holding was in my personal names, which was not allowing me to free me up, right? So, but I think transferring this holding to a structure will allow me to do more activity, So I think in the end, I would say that it will be only beneficial to us.
In terms of the business model, now you've said earlier that for the next 3 to 5 years you're going to continue doing what you're doing, and then maybe look at other, the previous lot of bank licenses that went out. Some of the lenders took some decisions which did not pan out very well. How are you seeing that journey of transitioning to the universal bank and your business model?
I think not much will be done. If you ask me, we are a scheduled commercial bank. We are 100% compliant with all regulatory requirement. I think this license will do a couple of things for us. One, I think the momentum will be in our favor, because I have seen much curiosity from last night that who is AU, what is AU, what they do, whether now they are a full-fledged bank. I think the customer attraction towards us will go up. That eventually will help us to reduce our cost of money, can have more opportunity around our asset build-up. So that will happen, in my opinion, very quickly, And second, I think over the period, when I am with this status of universal bank, with this kind of legacy of maybe around 30 years, people will react very differently with us. As of now, we have to struggle a lot in terms of explaining us. So I think that will ease up a lot of things internally. We are moving towards Mumbai, So Mumbai is the heart of the whole banking as such, right? So we'll be operating more over from Mumbai. So I think pan-India opportunity, going even beyond India, and beyond, even the present structure. So I think I would say that still very early time to react me on that, but it makes us on the top of the league. So the whole how to express yourself will be better suited to us now.
Two questions, sir, and I'll wrap this up after this. But you talked about a change in terms of your diversification over the next 10 years. You want to ensure that your businesses are not more than 15% in a given state. Rajasthan is your home state, of course, so currently it's heavily towards that side, 26% or so. I want to understand the journey. So is this largely by expanding into more states or expanding your businesses in the current states that you're in?
I think both. So like, my wheel business, is close to 25% in Rajasthan, right? So, but now the next growth of wheel business won't be coming from Rajasthan. Rajasthan will only grow in the range of 10%. But I think the other state will grow in the range of 30-40%. So I think one product will grow differently in different states. And of course, new product, maybe more in our comfortable states, right? Where we have more comfort, right? So I think it's a both strategy. But in the long run, we'll have more diversified in all sense, the product, the people, the geographies, so that we remain very sustainable in that sense.
Understood. And my final question is with respect to the management strength at this point in time, right? This was a question I asked you earlier, which is how are you seeing that aspect of your business? Are you planning to add on more talent, or do you think the current talent is good enough?
No, it's a continuous process, and I think there is a huge pull towards us, and would have hired close to 100 senior leadership in last 5 years from the existing setup, right? From the existing banking setup of India, right? So I think it's both way, where we promote internal talent also to a senior position, and wherever we find a gap, we want to hire people from the outside so that we remain very formidable team.
Sorry, one point on the cost of deposits. I just want to understand that. Do you think the cost of deposits will go down materially? Currently, you're offering about 6.75 on the savings account.
Okay, so difficult to define material word, right? But I think over the period, if you are universal bank, you're not in the SAB category, I think customer trust will be more on us. And if they can give us more money, we can actually negotiate our cost of money, right? So I believe so.
Welcome viewers, you're watching NDTV. I'm Harsh Saita. We have with us the Managing Director of GICRE, Mr. Ramaswamy Narayanan, joining us at this hour to talk to us about Q1 FY26 earnings and, more interestingly, the outlook for FY26. Welcome, sir. Great chatting with you. Great, always good getting an understanding from you. So I want to first start off by understanding what the trend with regard to the combined will be, because that combined number came in as a bit of a surprise, a positive surprise, I must say. I'm trying to understand whether that number is sustainable, Q1 specific next year, as well as FY26 as well. Give us that perspective.
Yes, I mean, the performance has been good. So if you see, the gross premium kind of stays flat, but then there are reasons for that, because I don't think really both the quarters are comparable. Last year, the quarter when it was taken, the premium was booked for the same quarter, so to say. In October, IRDA came out with the change in accounting where long-term policies, the premium had to be apportioned over the years. So which means that for this quarter, the premium that you see, especially for the long-term policies, are apportioned. We have only taken the premium for this quarter. That being the case, the premium looks lower, especially in the fire class of business, and that is where it looks flat for this quarter. But then, honestly, there has been growth, especially on the international business. On the combined, yes, thank you for saying that it was a pleasant surprise. For us, I don't think it was a surprise. It is something that we've been working on for the last couple of years, trying to ensure that the business that we write is profitable, the margins that we get in this business is good, and that we are able to sustain this quarter on quarter, year on year. So to come back to your point, whether this combined ratio is sustainable, I would say yes. We finished last year with 108.8. We are currently at 106.95 for this quarter, and that is typically where we would want to be, around 107 for by the end of this year. Essentially, we've always tried to bring down combined ratios by about 1.5%, 2%, depending on how the losses work out. And if you actually see, this quarter is really good from our perspective, because it is not as if there have not been enough losses in this quarter. Yes, there were no catastrophic losses. That is something that we would expect for the first quarter of the year. But then there have been two big extraordinary losses that have hit this quarter. One is a fire loss from a company called Jindal Polyfilms based in Nasik. It was for 100% loss, it was 2,300 crores. GIC's share is 925 crores, which we have already provided in the first quarter. Second, of course, is the very tragic accident that happened with Air India at Ahmedabad. So obviously, we have provided for that as well. We have a 5% share on that fleet. So we have provided for that as well. So there have been losses in this quarter, big losses. And in spite of that, the profitability is good. The combined ratios are good. And overall, the PAT has gone up by about 70% quarter on quarter.
Got it. So to some extent, and thank you, you've answered a couple of questions rolled into one. But with regard to one particular piece, it's the commission expense, which also has been optimized to a large extent. Talk to us about what's happened there. What explains this very steep fall? Even when I'm looking at it percentage-wise, even absolute number, both.
So what happens is the percentages normally get worked out at the time of the renewals. And what happens is, we work out the commissions based on the profitability of the treaty. So normally these commissions would start at a particular level, which is at quarter one. And then going forward, depending on how the treaty is performing, the commissions would go up and down. So depending on how the treaty performs, in case it is very profitable, the commission levels would go up. So that is something that we would also be monitoring going forward for each of the quarters. But I do believe that the way we are looking at profitability, the kind of treaties that we have written, which we want it to be profitable from a claims perspective, going forward for the rest of the quarters, I would expect the commissions to slightly go up, definitely over the next 2-3 quarters.
Understood. So you expect some bit of expansion. Where should it normalize at, sir, in terms of percentage of premium income?
I would say around 18% is what we would look at commissions at the current juncture, because we are trying to get loss ratios down to about 82, 83 levels, and that kind of matches up to what we are looking to do. So
this is largely a one-off, from what I understand. Do I understand that right? This 10% number, which is, or rather sub 11% kind of number in terms of commissions percentage as percentage of premium, that's a bit of a one-off.
It is a bit of a one-off. It also means that we are slowly shifting our base from writing proportional treaties to non-proportional treaties. Proportional treaties obviously have a commission component. Non-proportional treaties do not have. So again, it also means, the growth that we are seeing on an international business, which is more to do with non-proportional. There are multiple factors which really play in bringing this commission levels down. But yes, I would say this is really a one-off at this point of time. Going forward for the next 2-3 quarters, we would expect commission levels to go up, but we would also expect loss ratios to come down. So overall, the combined should remain where it is.
Got it.
All right, welcome back. You're watching NDTV Profit, and this is India Market Close. I'm Mahima Vacharjani. That was the conversation that we had with GIC. Now, before we move on to the interesting piece that we've planned for you today, let's take a quick check on how the markets are doing at present. Quickly, the Nifty 50 trading with a cuts of about 0.7%. The Bank Nifty also seeing cuts of about 0.6%. The broader markets also under pressure. The Mid Cap 150. Let's try to pull that up. The Mid Cap 150 and the Small Cap 250 as well. down, mid cap down almost by 1%, trading at today's low point. The small cap 250 also down by about 0.7 odd percent. But like I said, we've planned a special piece for you today, and the stock that's been flying in trade for the past 1 month is Sarda Energy. And today it's seeing some profit taking, a little pullback that raises the burning question that is it the right time for you to enter the stock or not. In our special offering, the Profit Deep Dive, we dissect and decode exactly that. Varsha is here with more on that. Varsha?
Right, thank you so much for that. So as you rightly said, stellar stock returns that Sarda has given to its investors. If you see, the stock is up 26%, 20 to 26% post Q1 FY26 numbers that the company has put on. Let's see what's driving this rally. First is stellar Q1 FY26 earnings that the company has posted. Net profit more than doubled, and if you see, revenue is up almost 77% year on year, and they've reported highest margins in at least 12 quarters, which stand at around 37.8%. If you see, power business is one of the reasons why investors are actually bullish on this company, because power business have aided the upside, and they've seen a strong volume growth across most of the steel products. Now let's see what is the next leg of growth. When it comes to Sarda Energy, they have done a strategic shift to an energy powerhouse. So they're diversifying their portfolio in power business, and 67% of EBITDA, if you see, is from this power business. And and how they're doing this, so they have successfully acquired and merged SKS Power. So through SKS Power, they are basically riding to the power sector, and the power capacity because of this acquisition is expected to rise 980 megawatt, and the new hydro projects and planned expansion also offer stable and high margin revenue as far as Sarda Energy is concerned. And also, if you see, the focus on growth capex remains clear: power and coal. Onto the SKS power plant, if I were to talk about, it has a potential to double capacity over time. One is that, and because of the SKS plant, if you see, the plant load factor improves with target of 80 to 85% for FY26, and the total power capacity, as I was saying, will rise 980 megawatt with this acquisition. And the new Rehar 1 hydro project offers stable and high margin revenue. Now let's see, because of this acquisition which they did in August 2024, how has the numbers pan out? So a good uptick when it comes to revenue from September 24 to June 25, if you see. And the interesting part over here is margins. Look at the margins from 29%, though there was a downtick in December 24 and March 25, but a huge uptick in margin from 29% to 38%. And this is one of the reasons why, if you see, when it came out with the numbers, the stock was up 20%, and profit also, if you see, from 200 crores to 437 crores. So good uptick when it comes to margins and profit. Now, the power business is not only the reason why this company is in focus, but there's the mineral business also, which is aiding the business. They are expanding their coal mining with new mines in development, and this will reduce their reliance on expensive imported coal. That's the good thing, which will also aid margins for the company. And they operate iron ore mine that means about 35% of their needs. And the new JV block, when it comes to iron ore, is also secured for future flexibility. Now onto the steel and ferro business future outlook, if I were to talk about, no large scale steel capacity additions have been planned in future, and the targeted projects, if you see, 50 megawatt of solar power installation is ongoing, and the steel margins is expected to improve from current 18%. So the backward integration that they're going on will actually help on to aid margins. And the Chinese steel export, if you see, pressure remains a key industry risk for the company. Onto the power and mining business future outlook, if you see, Major ongoing capex projects include 800 megawatt power plant expansion at 8,000 crores, number one, and also if you see the expansion is across coal mining business as well. On to last, if I were to talk about, so we all spoke about the good things about the company, about the power business, about the mineral business, but the key aspect which we should talk about is the risk. One is the Q1 summer power price realizations was at 6.16 per unit, and company has guided an annual average of about 5 rupees per unit, and the long product steel price remains under pressure, one of the risks that the company faces. And lastly, if you see Chinese steel export pressure and global pricing are some of the key risks that one should watch out. So overall, if you see, I would say Sarda Energy is going from minerals to megawatt, I would say, and the power business is the next leg of growth when it comes to this company.
Well, thank you so much for that, Varsha. That was extremely detailed. Opportune time to bring in Nilay Joshi, Executive Director at Sarda Energy and Minerals, joining us at this hour to speak to us about, of course, the future prospects. So first off, let me ask you with regard to Q1 FY26. One was, Varsha was highlighting, and I'm sure you heard, realizations were higher than the 5 rupees which you've guided for. How sustainable is that? And how much of that has had an impact on both your top line and margins? Give us a perspective.
See, power realizations, as you know, they are seasonal, right? So Q1 is the best realization as far as thermal is concerned. But we have a healthy mix of thermal and hydro. So while there are certain quarters or certain parts of the quarters where you'll get excellent thermal realization, which is Q1 and maybe parts of Q4, and maybe somewhere in between 1 or 2 months. So 5 to 6 months you get excellent realizations in thermal power. But Q2 is where you get excellent hydro generation. So as we have around 170 megawatt of operational hydro capacity. So things will balance out. We expect that the realizations on an average should be in the range of 5 to 6 rupees. Another perspective that I would like to give on realizations is that, I'm not talking of like immediate quarters, but as a strategy, what we are thinking is to lock a large part of the SKS, the thermal capacity, into PPAs, longer term PPAs, so that the variability goes out of the numbers.
Okay. Mr. Joshi, hi, Mahima also joining this side. Sorry, so you were saying something, Mr. Joshi?
No, I said I hope that clarified on the power sector.
Definitely. Mr. Joshi, thank you so much for that. My question to you for the overall presentation that Varsha gave, I think the key aspect was the kind of margins that you've done this particular quarter. That's almost at 38%, your operating margins. Do you think that kind of margins are sustainable going forward, or what would be the normative range of margins that you'll be in when it comes to FY26? Mr. Joshi, can you hear me? Yeah. Okay, I think we seem to have lost his feed, but let's try to pull that stock up. Let's see, there's some profit booking that we're seeing today, but the kind of rally it's seen in past 1 month, if we can try to pull that up, it's been an interesting move altogether. But the stock seeing some pressure today, that's with regards, there you go, 1 month it's seen an uptick of 26%, but today some profit booking on the cards down by about 3.8%. So
fascinatingly, Mahima, 800 crore of the 1600 crore top line, which is nearly 50%, has come from power. So power is starting to occupy a bigger part of the pie when it comes to revenue. Also your EBITDA, a larger part of that is commanded now by power. So gradually power is taking center stage when it comes to this company. The metal segment it has posted a steady performance as well. So it's a twin engine which has worked for the company. They've raised around 1,000 crore of debt as well for capacity expansion. So at least that is with regard to the Q1 numbers, and that's probably one of the key reasons that we've seen the kind of move on the stock that we have. But we've lost the management, so we'll just have to wait maybe for them to patch back in. But what we'll do in the meantime is slip into a very short break. And on the other side, we'll continue discussing stocks, maybe Sarda Energy as well, with our fundamental analyst and a herd on the street at 3:30. So stay tuned for that.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Hello and welcome to India Market Close. Markets are at the day's low, but will be quite different if we see the kind of rally we saw yesterday. That move obviously was expiry led, but today also a very similar structure to what we were seeing yesterday at this time. We saw that little bit of weakness at the start, and thereafter it's been very range bound in the way markets have gone. We're very close, if not just off the day's lows. So 388 and we're currently at 405. So roughly 17 odd points from that low point of the day. Anyway, so that's on the Nifty, and let's pull up the heat map on the Nifty as well. The Nifty Bank also reflecting a very similar texture in the way it has reacted. Some different winners today versus what there were yesterday. NTPC, Titan are two of those which are standing out in trade. Again, Titan on the back of those numbers that it declared, Trent also holding up fairly well. So some of the consumption names doing decently well on a day like this. What's not doing well is something like a Bharti languishing 3% lower, and IndusInd Bank as well 2% lower. Grasim again, numbers out, stock down nearly 2% on the back of that. So it's still tilted towards the way earnings and numbers are reflecting, and that is to some extent tilting the screen. Let's look at also the sectoral heat map, and that'll give us a sense of what are the movers. Would not be too surprised with the way this is shaping up. Only oil and gas in the green. Outside of that, not too much. Metals and defense. Defense was a key sector which was under pressure yesterday as well, continues to remain under pressure today. Realty is the other one. We saw pressure on that one yesterday as well. The Nifty Bank largely in line with the Nifty 50, and the PSU banking index outperforming just a wee bit with the way this is playing out. IT is down 0.8 as well. So all of that is obviously pressuring the Nifty. The Nifty Pharma down 1%. But let's pull up the advanced decline before I toss it to Mahima. For the broader markets, the advanced decline looking much better than yesterday. But nonetheless, you are seeing pressure in broader markets, Mahima.
Absolutely, Harsh. Pressure in the broader markets in terms of the mid-cap 150, it's, in CS pressure down by about 1.15%. But the small-cap 250 is almost in tandem with where the benchmarks are. So it's down by about 0.8%. With regards to where some counters are concerned that are buzzing in trade today, something like Kalyan Jewellers, which is seeing a significant amount of beating 8% as we speak. There are some other counters that are under pressure. If you can try to pull up the BSE 500, there's PG Electropras on the back of its earnings down 11.5%. Datamatics also seeing a downtick of about 7%. There's Subros, Data Patterns, Signity Tech are some counters. Even Coforge seeing cuts of about 6% in trade. Jindal Stainless, even VIP Industries continues to be under pressure. Posted its earnings yesterday down by about 5%. Ramco Siemens also down by about 5%. KIOCL, Unichem, some counters that are putting pressure in terms of where the broader markets are concerned. And some counters that are doing well. There's Kalpataru Projects up almost 8% as we speak. Sangvi Movers 8%. Global Health, GSFC all on the back of their earnings. Also PT Engineering and GIC doing well in trade today, up by about 5%. But it's 2:30 and that means it's time for our special segment, Heard on the Street. My colleague Somit Sarkar joins us with all the chatter from the dealing room. What do you have today, Somit?
Well, multiple stocks remain in focus. Firstly, it's HDB Financials and Kalpataru, the recently listed companies. Now, dealers are indicating that there are buy flows on larger Chennai desk. They have been accumulating both these counters. In fact, for HDB Financial, they're also saying that the stock is below its IPO price. So keep an eye out for both these counters. For EPAC Durables, the stock has gained over 5% in trade, and there was a large block deal that has happened. Around 41 lakh shares changed hands. Now, this is not the last of it. There will be a couple of other blocks that is expected to come in of more than around 1 crore odd shares. But this will be the last chunk of block that is expected in EPAC Durables, and that's the positive news that is coming in for EPAC. For Kalyan Jewellers, dealers indicate that a large mutual fund, who is the largest shareholder in, among the mutual DIs in Kalyan, is a seller in trade today. And that's the reason the stock is down around 8% post reporting a strong set of numbers. Prestige, if you look at, there are buy flows on DI desk is what dealers are indicating. That stock was down over 2.5% in trade, but then had a smart recovery. Right now it's down around 1.4% in trade, and dealers are expecting some positive deal announcement that could come in, or deal transaction that could come in anytime soon when it comes to Prestige. And lastly, when it comes to JSPL, that is Jindal Steel and Power, dealers indicate there are sell flows on HNI desk on anticipation of some delay in their capital expenditure that could be announced. So keep an eye out for JSPL as well.
Prestige is a fascinating one, Samit. Any indication, any hint with regard to the nature of this deal? There is some amount of value unlocking which is in store with regard to where a Prestige is concerned. What could this deal be? Any color?
No color on what this deal could be, but definitely it will be a positive one is what the dealers are indicating.
Okay, so possible positive triggers there. The other one I'm fascinated about is Kalyan Jewellers. So much pressure on the stock. Is it all volume driven? I'm not sure if you've seen the numbers or you have.
Well, numbers were actually good. It's just that the street was a bit spooked when they announced that manufacturing entry. So they believe that the company is shifting their model from asset light to asset heavy, though the company has clarified that they won't be getting into manufacturing, so they would continue to remain asset light. But the street is a bit spooked for that also, and then there's this big chunk coming in from the mutual fund.
Okay. All right. Let's cut straight across. There's the SBI presser, which is happening. Of course, more on all of those stocks in just a bit.
Financial performance for Q1 financial year 26. Over to you, sir.
Good afternoon, ladies and gentlemen. Thank you for joining the press meet post announcement of Q1 FY26 results of the bank. The results for Q1 FY26 highlight robustness of financial numbers, continued excellence, consistency, and SBI's significant long-term strengths. I would like to start by thanking all our stakeholders, including our customers, shareholders, employees, and the broader ecosystem for their support and helping us in creating sustainable value for the economy. Let me now start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. The global macroeconomic environment has remained fluid since June till now amidst geopolitical tensions and tariff policy uncertainties that have increased. Central banks in many advanced economies kept policy rates unchanged, except, of course, Bank of England, which has reduced the rates. The last mile of disinflation turned out to be stickier than expected, while also awaiting clarity on the trade tariff front and its implications for inflation. Domestic economic activity held up in June, with high-frequency indicators pointing to mixed signals of improving prospects of Kharif agricultural season and continuation of strong momentum in the services sector on one hand, and deceleration of tax collections, industrial activity, and vehicle sales on the other. RBI estimates GDP for FY26 a growth rate of 6.5% and inflation at around 3.1%. The MPC in its latest meetings, as you're all aware, has kept the repo rate unchanged at 5.5% and maintained a neutral stance. Coming to SBI, the results for Q1 FY26 demonstrate the bank's continued ability to operate profitably at scale due to our substantial core strengths. These advantages stem from our institutionalized framework, which is guided by continuous improvement in processes and a commitment to fairness for all stakeholders. The total deposits have grown by 11.66% year-on-year to 54.73 trillion rupees. Term deposits have grown by 14.23% year-on-year. Our current account deposits have grown by 30.69% year-on-year. I'm sorry. And CASA deposits have grown by 8.05% year-on-year, with a CASA ratio at, I'm sorry, at 39.36%. Importantly, the current account growth has continued to remain strong for the bank during the year, despite competitive market environment. Our foreign offices deposits have grown 10.42% year-on-year. I'm glad to share that the credit growth continues to be good with segments like SME, agriculture and retail. Retail personal banking posting healthy double-digit growth at 19%, 12.67% and 12.56% year-on-year respectively. The corporate sector has grown by 5.7%. Our foreign offices advances have grown by 14.81% year-on-year. The domestic credit deposit ratio was at 68.88% at the end of Q1 FY26, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q1 FY26 was 0.75%, while the credit cost for Q1 FY26 stood at 0.47%. The net NPA ratio improved by 10 basis points year-on-year and stands at 0.47%. We have a well-provided NPA book with PCR at 74.49%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrate the quality of our loan portfolio, the robustness and improvement in our underwriting processes, and improved collection efficiency. The bank remains well capitalized, and our capital adequacy ratio has improved by 38 basis points sequentially and by 77 basis points year on year, and stands at 14.63% against 14.25% as on 31st March 25. CET1 ratio has also improved by 85 basis points year on year to 11.10%, and both the ratios are well above regulatory requirements. Based on the current profitability and growth trajectory of a bank, we believe we have sufficient headroom to take care of requirements of business growth. Bank has raised, as you're all aware, equity capital of 25,000 crores during the current quarter, which will support additional loan growth of approximately 2.5 trillion rupees. I'm glad to share the progress we have made in the digital banking, which is an ongoing journey, and it continues to be an important customer acquisition engine for the bank across asset as well as liability products. The share of alternate channels in total transactions increased from 98.2% in Q1 FY25 to 98.6% in Q1 FY26. More than 9 crore customers have registered on YONO, with 66% of regular saving accounts opened through YONO in Q1 FY26. Our subsidiaries are consistently performing well and continue to create significant value for all the stakeholders. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and maintain leadership position in the respective businesses. The bank continues to report ROA and ROE greater than 1% and 19% respectively at the end of Q1 FY26. We reported total assets worth 67.69 trillion, total advances at 42.55 trillion, and total deposits amounting to 54.73 trillion. SBI continues to be the leader in all the risk-adjusted profitable lending and liability pools in India. Consequently, SBI's ROA above 1% is derived from the scalable fundamentals of banking, that is, improved business growth, controlled operating expenses, and maintaining robust credit quality. The bank's ROE profile is currently higher than its credit growth, implying CET1 accrual in the future. From this strong position, our goal is to consistently achieve a ROA of over 1% and ROE over 15% through the business cycles. To conclude, I thank you all for your continuous support of the bank. We consider it as a privilege to be able to play a role in driving the progress and contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open for taking your questions.
Thank you, Chairman, sir. We'll now move on to the media question and answer. To ensure a smooth and orderly session, questions will be taken in a sequential manner and individuals will be called by name to ask their questions. We kindly request everyone to follow the format and limit themselves to 2 questions focused on the results. If time permits, you may raise your hand to indicate interest and we will accommodate additional questions. Thank you for your cooperation. We will begin with Hansini from Money Control.
Hi, thank you. So overall, in terms of growth, 11% is very satisfactory. But when we look at corporate side alone, there has been a pullback in growth in particular segments like infra, telecom, road, aviation, tourism, etc. What is your view right now on the corporate lending space, particularly with respect to these segments where I called out? Where are you pulling back because you're believing that there is stress accumulation happening or avenues are not as attractive as you would want them to be?
The two, three reasons why the corporate growth looks a little muted in our books. One is there is some shift towards market instruments. We have seen that the utilization of working capital limits, which was 62% in Q1 of FY25, has come down to 58% now, which means that, and we also have seen that some of the large corporates accessing the CP market, basically to replace the working capital limits. And that is expected because there's good amount of liquidity, and in the CP a diversified participation what we have seen. Not necessarily that it's banks which are lending on the CP market. Essentially the mutual funds are very active on the CP, and the rates are much more affordable than the bank lending, obviously. That shift has happened, but I think these shifts keep happening on that. And once the rates stabilize on the bank side, they will come back to utilization. The second thing what is happening is in terms of some of the project, like we have very robust visibility on both on the pipelines in terms of proposals which are under discussion, and also sanctions but yet to be disbursed. We have almost 7 lakh crore worth, both segments together, proposals in pipeline as well as sanction but not disbursed. But the disbursements are taking time, while the repayments are actually active.
Right, we'll keep you updated with regard to the SBI presser. Bottom of your screen, you have your the latest update with regard to that presser, so stay tuned on that. But onto a quick check with regard to SBI's numbers, because the stock took a bit of a dive and thereafter has made a full recovery as would be expected. It was an inline set of numbers, nothing at all of worry as such from the numbers. The net interest income in line with expectations. Growth was approximately 0.8% on a sequential basis, around 11+% on a YOY basis. You saw other income which grew 55% YOY, which is what has aided the operating profit. So the operating profit was a beat by around 11%, and thereafter provisioning absolutely in line with the consensus estimates. Profitability got a lift because of other income and provisioning being in line and other income being above. You saw a lift with regard to where profitability is concerned. So that's how it played out. And the growth also was not as bad. It was okay, just about a sub 12% kind of growth. But let's discuss this a little bit further. We have Neeraj Diwan with us, independent market expert. Also joining us is Kunal Shah, senior tech and derivative analyst at Mirae Asset Sharekhan. Let me come to you first, Neeraj. With regard to SBI, how do you view the numbers? A 1.1% ROA was slightly impressive in a quarter like this, right?
Yeah, good afternoon. Yes, definitely the numbers have been in line, and 1.1% ROA is very good for PSU banks. And plus, there is the possibility for going ahead. That is what we need to now look into, because this quarter we're already into August, so we have to see what happens in the current quarter, in the following quarter, because the demand for credit has to go up. So that is what should happen now, with the interest rates lower, and with transmission of interest rate should happen now, and liquidity also is ample in the system. So going ahead, if demand picks up towards the festival season, I think the pressure in NIMs should also subside slowly, and you will get improvement getting ahead when credit demand picks up. I think that is what we need to look for now after the numbers have been declared today.
Okay. All right. Kunal, your quick view on SBI before I take your view on the indices as well as your topics.
I think SBI, if you look at in this volatile market, it has been only consolidating at higher levels. So clear-cut relative strength is visible. Now, till the time the stock is trading above 780, where the stock has taken multiple time supports, the view remains bullish. And the real momentum will start once we break the 20 DMA on the upside, which is at 810. Once that is taken out, then we will see momentum coming back, where SBI can go towards 840, 860 on the higher end.
Kunal, your picks for this afternoon?
So overall, we feel that the market still there is downside left on both the indices, Nifty and Bank Nifty. So the trend continues to be on the negative side. We expect Nifty to test 24,000 on the downside, which is where the 200 DMA for the Nifty index is placed. So we expect that to be tested. And even Bank Nifty continues to be as a sell on rise mode. The immediate support is at 54,700, which is the 100 DMA. And once that is taken on the downside, then you can expect further downside towards 54,000 mark. So overall, sell on rise mode for both the indices. Nifty, the resistance is 24,700. Till the time we are trading below this mark, the view remains negative. And for Bank Nifty, it is 55,700. Till the time we are trading this mark, the view remains negative. On stock specific, I have two ideas. One on the buy side. Buy side, I'll focus on NTPC. I think in this volatile market, this has been one of the stock where every dips has been bought into, and we expect further momentum to build up on next week. So this is a buy over here. Keep a stop loss of 320. Look for targets of 350 to 360 on the higher end in the upcoming week. The second is a sell, and the sell is on Amber Enterprise. The stock has given us a breakdown below the 20 DMA, and the structure is getting weaker and weaker day by day. So that is looking on the sell side. One can keep a stop loss of 7,700 on the upside and look for targets of 7,200 to 7,100 on the downside.
Okay, so that's all right. So those are the couple of picks coming through as well. A couple of gainers really standing out today. Kunal, let me stick with you. And NTPC is one of them. What are you seeing in terms of a trend? This one has been subdued for a while now. So what's the take?
I think that is what my first buy call was, NTPC, which when I said, so I think NTPC looks strong to me. 320 is a strong support for the stock. You can expect at least 350, 360 coming in the next week.
Okay, and what about a Kalyan? What's happening there, Neeraj? Give us your view. In your view, Neeraj?
Yeah, on Kalyan Jewellers?
Yeah.
Okay. So basically, I think it's jewelry stocks are one sector which I'm really not too positive, and I don't really track these stocks. So besides Titan in this segment, I am not really too comfortable in commenting on any other jewelry stock.
We'll come to you on Titan, but Kalyan is surely our stock of the day because of the reaction on the counter. And it's a stock in focus. Stock has faced pressure in trade today despite a decent Q1. What's putting pressure on the stock? Mahima is here to give us all of that. Mahima.
Right. So, as you rightly mentioned, the numbers were good. Overall, the quarter shaped up good in terms of the operational metrics also, there was no concern. But I think there are some concerns with regards to where commentary is concerned and the things that probably investors not happy with. The first one being higher capital infusion for the new pilot project. That is something that is on the cards and probably the street is not appreciating that. The second one being debt reduction has been put on a pause. Now, the year gone by, they have gone out and given a clear road as to how debt reduction will take place. But this quarter, they've said that debt reduction will be on a pause and other expenses plus interest and depreciation has gone up quite a bit. Let's try to understand each of these points as to how that's shaped up. In terms of the higher capital infusion, well, they are basically working on a pilot project called lean credit procurement, and this if they implement countrywide, they've gone ahead and said that that might drive higher margins and ROC, but will require a capital of around 1,500 to 2,000 odd crores. So that is one thing, and this will be done via equity and debt. Combination of both, the clarity is still not there on that. So if they go ahead and further infuse debt, that will only put pressure on their overall debt. In terms of the new strategy in the regional brands as well, here what they're doing is they'll be putting up regional brands together and opening 5 new stores in one particular state, and for that also they've said that they'll require around 300 crore of working capital. So that's also a big chunk. And in terms of where this amount will come from, that is, there's no clarity on that. Will it be through internal accruals or they'll be going ahead and borrowing? In terms of the new setup of park in Kerala, now they've received a land at a subsidized rate of 5 crore from the government to support the business. But they're going to set up a plant there where they're going to get suppliers that will work for them and also get hallmark done from there itself. Now, there's no clarity as to how much capital infusion they'll do here, but that's also that is also looking like a big project and might require capital going ahead. In terms of the debt reduction, they've said that they've pause the debt reduction for future, and we'll have to see as to how the capital infusion is done and whether that will lead to higher debt going forward or not. In terms of the overall expenses, ad expenses have gone up by 12%, other expenses up by 39%, interest cost has already inched up 22% a year-on-year basis, and depreciation has gone up 29%. This is despite of them shifting to an asset-light model is what we are seeing right now. Of course, they are in the transitioning phase still, but depreciation is going up. Lastly, in terms of where the numbers stand, of course, not a bad set of numbers as I mentioned earlier as well, but I think overall these are the three key reasons as to why probably investors are not liking. Of course, that's Soumit rightly mentioned in his khabar as well, heard of the street, that it might be on the cards that a possible broker could exit the counter.
Yes, a possible large AMC looking at a exit on this one was what Soumit had reported earlier today. Kunal, is that being indicated from the volumes that have come through today on Kalyan Jewellers? What are you seeing in terms of action, and what should an investor holding a Kalyan Jewellers as of yesterday do? Give us your perspective.
I think currently, overall, if I look at the long-term charts, the structure continues to be on the weaker side, where the correction which started from the top at 750 towards the mark of 420, this was the pullback which got over into the stock, and there is a resistance exactly faced at the mark of 600. So now till the time 600 is not taken out, the view continues to be on the negative side. It's a sell on rise mode. If you get any technical bounce, since the stock is already down by 8 to 9%, any technical bounce what you get could be an opportunity to exit. You can expect further lower levels. The next support on the downside is what I see around the zone of 500, 495. So the stock can slide down towards those marks.
Neeraj, your take on Titan? That was the view you wanted to give?
Yeah, I'm positive on Titan. Even kind of result they declared, a very good set of numbers, good growth, good margin improvement. And as we go towards the second half of the year, towards the festival season, I think the demand should pick up going ahead. So Titan should be one stock which can be kept in your portfolio to give a decent return for the rest of the year.
Buying at this level?
Yeah, I think even at these levels, one can get a decent return at good levels. Even after the little bit of, it would have shown a better improvement today if not for the kind of markets we are in. So the reaction today is not what these kind of results, would have got. But I think if markets improve a bit going ahead, I think they can get better returns from there.
And slightly on the back of the commentary as well, because going forward, Q2, Q3 might be under pressure, and this would be because of higher base in the earlier year of custom duty reduction and all those effects. So that could also be one of the possible reasons as to why we did not see a significant uptick in the counter as well. Now, another stock that is in focus is KRBL. The stock is up more than 12% as we speak. There you go, 15% on the charts there. And this is after posting a robust Q1 numbers. In fact, we spoke to KRBL CFO Ashish Jain about the company's revenue target going forward. Listen to what he had to say.
When we look at Basmati as a category, packaged Basmati is sold in the country in roughly 7 lakh outlets. Now, when you compare that with the reach that some of the more established consumer product categories have, it's really a fraction. Within that 7 lakh, we reach approximately 4 lakh outlets. So being market leaders, we are still not covering the entire base. So one of the initiatives that we're driving on the supply chain side is to grow coverage in terms of distribution. And that is happening across channels, general trade, modern trade, as well as e-commerce and Q-com. Now, from an efficiency perspective, see, while we continue to drive efficiency in the channel, the focus right now is on enhancing coverage. Yeah, so I mentioned earlier, we are looking at 6,000 crore plus revenue. As we stand at the end of Q1, we are broadly on track, and rest we'll see how the year goes.
All right, so that was the management of KRBL. Neeraj, any quick view on this counter, if at all?
I think, among the rice companies, this has done well over the years. And, if you see some, because, valuation-wise, I think the stock after the move today is not that cheap also, looking at results that they've declared. But, as a portfolio stock, you can ride the stock, some more momentum. But I won't advise really getting into it after the move today. But if you're already holding it, some more momentum, maybe there on the upside.
So that's with regards to where KRBL stands, but it's time to slip into a very short break, but we'll be right back with all the other action on the other side, so do stay tuned.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Okay, welcome back. Thanks for staying with us. Today, the big bull versus bear debate is going to be with regard to an LIC. Now, you saw a decent set of numbers, right, from LIC, and the growth was quite decent. It was much better than penciled in, at least maybe 5% better than what we had penciled in, and therefore growth in APE was strong. But really, what's the bear case? The bear case is that despite this near 10% growth that they've clocked with regard to APE, what they've done is they've been consistently losing market share. The base is high, but that is of course a concern. For how long can they consistently keep losing market share? Question will be, you want to reverse that and maybe at least hold market share if nothing else. Now the second piece is with regard to margins. Margin uptick was extremely sharp. From 13.9 it came in at 15.4%. Saw 150 basis point uptick in margins. Largely led by favorable product mix, lower expenses, all of those likely to be sustainable. So that's the bull case. But they have guided for a 20% margin, and some of the peers are doing much better than 20% in terms of margins. An HDFC Life does 26, so does an SBI Life 27, 28%, and therefore the hope is that that re-rates quickly. But it's looking difficult, especially at 15.4 on Q1. So that's the way one looks at it. Now the third piece is with regard to higher focus on non-par. That has really is what has pulled margins higher, the non-participating growth. But they've hinted this quarter that there's going to be a larger focus on participating products as well. They're going to launch a slew of new products. They believe the market needs it and it's a good time to launch is what they've said. So you might just start to see possible pressure with regard to where margins is concerned, even though they've maintained their guidance. Valuations are cheap. sub one time price to embedded value. In fact, it's trading at 0.74 times price to embedded value, which is extremely cheap in comparison to all the other life insurers in the country. But of course, it's a PSU, and the big overhang is the fact that the government of India still continues to hold over 95% in an LIC. That stake needs to come down eventually. Obviously, they can keep getting extensions, but that's the one piece. Now, last off, just on how analysts view this, they see a 19% upside. So they expect LIC to really do well. There are at least 15 plus buy calls, no sell calls with regard to where an LIC is concerned. Let me come to you, Neeraj. LIC, are you positive on this giant in the life insurance space?
Yeah, if you purely see on valuation as compared to other insurance companies, definitely there's a case to be positive on LIC. Second is that even if they are able to get the margin of 20% around that they are projecting, and then also you can see considerable improvement over the performance that you saw this quarter also, which is also decent. So purely on valuation and the potential, it's very attractive, and it's look a good investment bet. But the only issue, like you also mentioned, is a technical issue that they can be a supply from the government. So there can be some more divestment which may happen. So there will be huge supply which can come because of that. So I think that is one reason why the stock is trading at these kind of valuations. And till that thing is not out of the way, I think this this pressure will stay, and you may not get those kind of returns. But for 10 to 15% return, definitely it makes sense even at these prices.
With regards to where LIC stands, but shifting focus, an important word coming from Nadir Godrej, chairperson of Godrej Industries. We spoke to him about the innovative trends in the Indian chemical industry, with India emerging as a viable hub, and his views on India's response to US tariffs. Listen in and listen to what he actually had to say.
My first question coming to you is, today is the National Chemistry Day Summit. If you could tell us more about this event, what is it and what are the trends that you're picking up in terms of innovations?
Yes, we are at the National Chemistry Day Summit, where we have many people from the chemical industry. We had eminent keynote speakers like Professor M.M. Sharma and Naushad Forbes. Naushad Forbes is very passionate about increasing innovation in India. India spends much less on innovation than many other countries. Professor Sharma also emphasized that India needs to do much more on innovation. We have very few patents. We have very few R&D experts on the boards of companies, and all this could help India's chemical industry go further. It is a successful industry, but we have very little innovation. Very few new medicines have come out of India, or new chemical synthesis methods. So it is very important that we emphasize innovation, because if India is to become Viksit Bharat, the chemical industry is foundational, because all other industries need chemicals. And we need to take our chemical industry to one step higher. And the purpose of this seminar today, this conference, is to push the chemical industry to new heights.
Lots that is happening across, but now, sectors which do face global markets are facing headwinds, and that's coming in and getting me to my next question with regards to the way US has come in and slammed another 25% additional tariff, which brings it to 50%. India has responded that we will not give in. We have Prime Minister Narendra Modi, who has come out and said that he is ready to pay a personal price, and that's a strong message over Trump tariffs. What would you have to say in terms of what's happening and the stance that India has taken?
Well, India needs to keep negotiating with the United States. Obviously, if some kind of peace is achieved between Russia and Ukraine, things will be much easier for us. At the same time, this additional tariff will kick in after some days. So there could be hope to do something in the meantime. It's going to be very difficult to negotiate because India is likely to be very firm on the agricultural.
India will be firm on agriculture and a few other things as well, of course. And that's another Godrej, an important voice. But it's just 20 minutes left for the markets to shut. So we need to focus on a few stocks which are moving. And the one that is down and out in trade today, down 20% as we speak, if I'm not wrong, is PG Electroplast. Now, they've cut the guidance, I presume, 20% on 17 million shares traded already. Need I say more? No. Puneet Johnson to tell us why this has happened. Puneet, did this come out of the blue?
Well, definitely, Neeraj, because in the last quarter itself, they had given us strong guidance of 6,300 crores of revenue that they are expecting in this particular year. Now that's sharply cut for FY26. Now let me just put out the numbers for it. They're now estimating 5,700 crores to 5,800 crores in revenue. This was expected to be 6,300 crores in terms of percentage. Now the growth will be roughly between 17 to 19 versus 30% that they were earlier estimating, and this is subsequently put down because of the products business. Now the product business guidance includes the verticals like the air conditioners as well as the washing machine, and this largely seems to be coming from the AC business because the Q1 was so weak because of early onset of monsoons. PG Electroplast doesn't believe that in the next 3 quarters that the company will be able to recover the lost growth in Q1. So for the AC business, which is included in the products business, that guidance has been cut to 17% growth versus 35% growth. So it's a 50% cut in terms of growth guidance from the product business specifically, and that's where the pain point is coming in. They've retained the guidance for the TV segment and that stays at 850 crores in terms of revenue, but the pressure is largely coming in from the product business, which includes the AC vertical, and while they've not given any kind of quantification of which segment, this has to be the AC segment. Overall, in terms of Q1 numbers as well, the net profit is down 19% this particular quarter, and margins have also contracted by 180 basis points, but the company's con call is scheduled at 3 p.m. today, so there'll be some more updates coming in on what they're anticipating in terms of outlook, but largely the product business has taken the sheen of the stock, and any kind of growth aspirations has gone away. The one last thing I just wanted to mention is that the QIP was done at 700 rupees for the stock, so, and that was just a few months before, so it's definitely going to take the sheen of the stock, and whoever participated in that, the stock's gone to 1000 and is now back to a subpar of 600 levels. So that'll be something to watch out for.
Puneet, here's the question, because a lot of other stocks in the EMS space are down today. Now, my question to you is this presumably because of the sharp cut in PG alone, or is this whole feeling around what's happening with Apple, etc., and therefore some of the mobile makers, etc., would be down because Dixon, Cades, everything else is down today?
I think Neeraj is largely the export story that's getting hit now for someone like a Dixon specifically. Now with tariffs in the US, Motorola is one of the biggest clients, and that was going to be an export story of over 7,000 crores of revenue versus 1,500 crores of revenue they did last year from exports specifically for Dixon. Now with the tariffs amongst other factors, it could be under pressure that the growth guidance could be impacted. For PG, as of now, we're not seeing any impact on someone like an EPAC or an Amber as well, because they came out and they mentioned that while Q2 will be soft, there could be recovery in the second half, and specifically in Q4 because of the AC division of both these companies of Amber as well as EPAC. So there is where it lies, the pressure. Someone like a Sirma is up today because of the QIP getting launched, and Cades as well with the semiconductor business amongst others doing well. We are seeing some kind of pressure on the AC business verticals and those who operate in that segment, and PG is definitely leading the baton.
Okay. Keep an eye out for some of these for sure. Thanks a lot for that, Puneet. Now, Kunal, I'm first to you and then to Neeraj. Kunal, is there a trade here into any of these?
Yeah, I think definitely for the entire space where we have seen the bigger correction, I don't think any trade over here at the current levels. Specifically, if I would like to highlight over here PEL. I think here already there were signs of distribution at higher levels for the stock, and now the confirmation has kicked in. So probably we can see further downside over here. You can expect the stock to go towards the mark of at least 520 to 500 on the downside in the very short term. So still some more downside left for the stock. If anybody is holding long, I think although the stock is down 18.5%, but I think even at this level, if you get an exit point, it would be a good time to exit the stock.
And I wonder if you believe, Neeraj, that these dips are opportunities to buy, or are the valuations still prohibitive for some of these?
Actually, the kind of growth that they were showing in the last few quarters was tremendous. So every quarter they used to beat the guidance and show very good growth. So this is the first quarter after so many quarters that we got this kind of a disappointment. So it's better to wait and see, and I think listen to the con call also. Let there be detailed discussion with the management, and then let's take a call, because definitely valuation wise, they were trading at 70, 80 times. Now they would have come close to 55, 60 times 1 year forward. So depending on what guidance management gives for a longer term, I think one can take a call at what price it will make sense to buy the stock. I think for the time being, let's first hear the management, let's hear the con call, and then take a call on the stock. Let's not be in a hurry to jump into the stock, so it's fallen 20% today.
The view with regards to where PG Electroplast stands, a tad bit of recovery, down 19% still, tad bit of recovery from that 20% at least.
Well,
but
we thought Kalyan would be the stock of the day, but it turned out to be PG.
Exactly. But Kalyan also down 10%. So that's also quite significant. So broader markets most certainly under pressure for sure. But I think the one stock and the earning that we'll be focusing on today post market hours is going to be Tata Motors for sure. Weak Q1 sales is something that we know of, but we have Puneet joining us with more details as to what can you expect from Tata Motors earnings.
Not so much good news either here, similar to PG, because we're expecting the profits to fall by 31% according to Bloomberg consensus, and it has to be taken with a pinch of salt, because for the first time for Tata Motors, there's a range between brokers like Novama who anticipate profits to fall 40%. It's roughly about 2,600 crores, all the way up to 4,000 to 4,500 crores is the anticipation from varied analysts, and that's just because how uncertain this quarter is for Tata Motors. In terms of revenue as well, it's expected to fall 6%. EBITDA will collapse by 31% as well, and that's largely because of the JLR business as well as the uncertainty of tariffs in the US in Q1. So we will see that impact at the start of the quarter. Tata Motors did mention that they won't be shipping any more cars, at least in the start of April, and that's what they did. Post that, resumptions happened, but that is expected to have a 400 basis point impact on margins. But very interestingly, over the last month or so, there have been two critical updates that will be one of the most watched out in this particular quarter. So rather than the numbers, the commentary will be focused on two key updates. One will be on the appointment of Mr. PB Balaji as the new CEO of Jaguar and Land Rover from November. He's the current CFO, been with the company since November 2017, and this could be one of the biggest moves, the first Indian CEO of course, but one of the biggest moves in terms of turnaround, because he's been with JLR and seen the financials over the last 8 years. And the second will be the Iveco deal. They've just completed announced that acquisition of 4.5 billion euros that will boost the commercial vehicle division. And while there were some concerns on the ROCE falling from 40 to 20%, lately there has been chatter that this could actually be positive, because they have the engine business, and that's something that Tata Motors CV division outsources. So these two will be one of the key aspects to watch out for, but results largely expected weak for Q1 for Tata Motors.
Largely weak numbers is something that we can expect from Tata Motors. Kunal, any view on the charts quickly?
For Tata Motors, I think overall the view continues to be on the negative side. It is already on the larger term time frame. It has been trading in a low top, low bottom formation. So we expect this move to continue on the downside. It could test the support zone of at least 595 to 560 on the downside.
Okay. And Neeraj, your view on Tata Motors and any particular counter that you like in the space?
Tata Motors specifically has been subdued. The expectation is not good as far as results are concerned. So I think it'll be interesting to see what kind of a number they deliver, because it is coming with a very low expectation. So even inline numbers may help in making a bottom for the stock. So I think once the numbers are out, you can then take a call. If the numbers are inline or slightly better, then that would be a time to maybe look at the stock again for investment. And in the automobile space, I think two-wheeler space is one space where I'm positive on. Looking at the good monsoon, low inflation, low interest rates. So two-wheeler space is one space where I think there is opportunity, and going ahead, I think towards the festival season and second half of the year, I think they can do better.
Okay, all right. One more stock that is, seeing a significant amount of pressure today is Coforge. Now, it's let's try to pull that up. It's down by about 5.7, almost 6% as we speak, and this is on the back of Sabre. Now, that's its largest client reporting a weak set of numbers, and we have Jasmeet joining us to give us more context on that. Jasmeet, what are you picking up?
Well, right, yes, thank you for that. As we see, Coforge is under pressure. The stock is down almost 6% in trade today. This has come on the back of one of the largest clients of the company have reported the numbers overnight. While the stock is almost 35% down on the Nasdaq, and the management of Sabre has also reduced the guidance. So this creates uncertainty for the company. Now, when you look at the deal, the company had signed a multi-year deal back in the March, and the deal was worth $1.6 billion. While this deal is supposed to be executed over the 13-year span, which is a long-term deal. And when you look at the task for Coforge in between the deal would be to provide product delivery as well as the AI advanced resources. Now, when we speak to management, as for the management commented in the Q1, the deal ramp up is already in process, and as of Q2, the deal would still ramp up, and Q3 will see a stabilization in terms of employee hiring and the revenue adding up to the top line. When you look at the revenue of the company as per Q1, the revenue is up 8% while the margins saw slight pressure, and also the net profit is up 21%. As of now, there is no further news from the company. It's a wait and watch to see how this further impacts the company going forward.
Neeraj, views with regard to IT. Firstly, thank you so much, Jasmeet, for that. Neeraj, views with regard to IT and Coforge in particular?
I think IT, still, there is no clarity on, the kind of demand slowdown which may happen because of US. So I think there's still so much uncertainty there. So though my view is neutral now, I don't think there's any point selling your IT stocks now. If someone is holding, one should hold on to them. But to buy, maybe you need some sort of more clarity. But one advantage that they'll get is because rupee has weakened as compared to the dollar. So that may be of advantage to some of these companies. So I would say that looking at that, maybe Infosys, TCS, they can be considered. Like Coforge anyway is expensive stock. So any uncertainty or any order, losing of any order there or any slowdown can impact them harder than any of the other larger names. So but if one has to take a investment call, maybe the larger one like TCS or Infosys can make sense at these levels, especially looking at the kind of currency movement that you've seen.
Okay, all right. So that's with regard to IT. Now, very interesting note that came out earlier today was with regard to HSBC, and they've really picked 5 sectors where growth has seen more headwinds than anything else. So it's basically that some of these sectors are reeling under some bit of pressure where growth is concerned, but companies specifically seem to be doing okay. One is Trent. Compelling story offered due to Zudio's store additions as well as growth, while it slowed down, and even the guidance seems to suggest 25%, is not as bad. It's extremely strong compared to the way in which peers are growing. Number 2 is an Infosys, outperformed peers in Q1 FY26 and incrementally, according to them, could continue to do better. Valuations no longer a concern. INR weakness, in fact, will likely support. GCPL is the third one. Again, earnings came out, stands out in terms of innovation capability, gaining market share in the home insecticides business. The fourth one is SBI, again earnings candidate today. Strong balance sheet liquidity, better placed versus large private banks, valuations also decent. Phoenix Mills is the last one. Should benefit as it undergoes and refreshes its legacy malls, and the stock offers attractive valuations after the correction. Neeraj, any of these on your radar?
I think consumer stocks can talk about Godrej consumer. If you're talking about Godrej consumer products.
Yes, please, Neeraj.
Yeah,
GCPL.
I think consumer stocks can do well because, I feel that going ahead, that is what the expectation is, that demand should pick up closer to the festival season also. And we saw some volume growth also happening when they declared the results So I think if volumes are good, margins can pick up if demand is strong and if inflation is low. So I'm positive on the consumer space there. I think that can be one space which can be defensive, plus can give a decent return towards the festival season.
Okay, just before we take the BTST call, just some flashes on your screen. Just need to keep that in mind. It's a withdrawal of the 2020 Income Tax Bill 2025. Remember, I think this was slated to replace the Income Tax Bill 1961 to simplify, etc. Presumably, there have been multiple versions, and I think that in order to avoid the confusion of that, there is some change that is happening. So just a cursory check out there. Okay, closing strategies. And Kunal, if you had to place a BTST or STBT as the case may be, what would you choose right now?
Yeah, I think I'll definitely go with an STBT because the mid-cap index has broken the swing low, and that is where we see further pain point in the broader markets. The mid-cap index will test the 200 DMA on the downside, which is placed at 12,300. So here my bet is on CAMS on the sell side. Already the stock had witnessed a sharp correction from the high levels. It witnessed a minor pullback and now it is ready to go for another down move. So CAMS is a sell. 3740 is where it is currently trading. One can keep a stop loss of 3820 and one can look for targets on the downside. First would be 3650 and second would be 3620.
Okay, all right. So those are the picks that Kunal has for the closing strategies, where the closing strategies are concerned. But you know what? Family businesses are the backbone of our economies, and they shape industries, create livelihoods, and pass down more than just wealth. Today, we premiere a very important series, Building Legacy, that is a candidate of series that peels back the curtain on family-run enterprises from the boardroom to the balance sheet. The series explores what it takes to not only build a business but pass it on with industry stalwarts like Ajay Sriram, Sunil Kant, Munjal Anand Goenka, as well as Muthu Muragappa. Now, in our pilot episode, we explore strategies for introducing the next generation. Learn how successful families structure their businesses for longevity and navigate the sensitive topic of wealth division with we've got Janmejaya Sinha, who is the chairman at BCG India. Take a look at a snippet of that conversation.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Family businesses are not just important in India. If you look across the world, in Europe, family businesses are dominant. Why have they not actually captured the attention in India in the same way? Because we were so poor when we were coming out of our poverty, everyone wanted to hide their wealth. But if you really look at it, about 320 out of our top 500 companies are family owned.
Yeah. Yeah. So this is the thing. Family businesses, and if you speak to companies that are family owned, they will be very quick to say that yes, we are family owned, but we are professionally run. Is there a clear distinction between the two?
See, the term professionalization has often been misconstrued to say that the family will exit from the business and professionals will run it. But the entrepreneurial spirit, who took the risk, who bet the capital? That's an important question. Not who is managing it, but who actually risked it. And those were normally family businesses. Some Superman entrepreneur at some point started the business and grew it against the odds.
Okay, before we wrap up, a quick 30 seconds from both our guests. So, Neeraj, to you first. Okay, Neeraj is, we'll get to Neeraj in a moment. Kunal, I heard you say that because the mid-cap index has broken down, you'll obviously take a STBT and not a BTST. But at the lower levels, are there pockets that you would look to keep on your radar for buying? What are those?
Yeah, I think, definitely. If you look at this, I think one is the power space. I think that looks attractive. I have a key interest and eye on it. So your stocks like NTPC, Power Grid, these are some of the stocks that are there on my radar. That will be a buy opportunity. Even from the energy space, I think one counter which looks attractive to me is GSW Energy. I think overall the stock has consolidated in this weak market, and once the dust settles down, we will expect a sharp move on the upside. So these are some of the counters which are there in my radar. Once the dust settles down, these will be the counters which will start to outperform.
Okay, Kunal, thank you so much for taking out that time and giving us all those insights, and have a great weekend. Thank you so much, Neeraj, as well. We're nearing market close for this week for sure. Let's try to pull that up and see how markets are going to end this week. We'll also try to pull up the weekly charts for both Nifty as well as the Bank Nifty and broader markets as well, of course. Nifty 50 down by about 1% at the day's low point. This is the weekly chart, of course. Nifty ending with cuts of about 1.5%. Let's also try to pull up the Bank Nifty. Bank Nifty also trading lower in terms of the overall week, closing around 1.6% lower. The broader markets, let's try to pull that up. In terms of the mid-cap 150 and the small-cap 250, mid-cap 150 will be closing around 2.6% lower, largely led by today's move as well. The small-cap 250 as well, closing around 3.7% lower, right now trading around 1.5% lower. So again here, big moves coming in today, probably affecting the overall week's moves as well. Let's also try to pull up the Nifty heat map and see how shares are now closing by the end of the day. Indocin, the top loser, down by about 3.3%, followed by Bharti Enterprises, Shriram Finance, Tata Motors, M&M, Grasim on the back of its earnings, Hindalco as well as Kotak Mahindra Bank, Nestle, RIL, Axis Bank, all down by about 1 to 1.5%. There's NTPC, which is the top gainer, closing on 1.6% higher. Titan, another count on the back of earnings, closing 1.4% higher, and Dr. Reddy is also seeing gains of about 1%. But let's try to pull up the advanced decline ratio, because that's going to be interesting, because last 1 hour has seen significant amount of moves in the broader markets, and there you go, it's widened. 1600 odd declines versus that of 600 odd advances. So almost nearing that 3:1 ratio, just shy of that ratio. In terms of where the sectoral heat map is concerned, let's try to pull that up. Probably all sectors in red, and yes, red across the board there. Defense closing 2.5% lower. In fact, after this, we'll also try to pull up as to how defense has done the entire week if we can. Nifty Realty down by about 2.3%. Nifty Metal also seeing cuts of about 1.8%. Nifty Auto down 1.5%. Private banks also seeing pressure, down by about 1.3%. Pharma also down by about 1.3%. Nifty FMCG down by about 0.7% there, and there is Nifty IT also, which is down by about 1%. So pressure continues across sectors. Let's also try to pull up the BSE 500 and try to see how stocks have done today. KRBL, the top gainer there, closing about 15% higher almost there. GSFC, Global Health, Kalpataru Projects, GIC, all on the back of earnings doing well. But serious pressure in Kalyan Jewellers, down by about 10%. There's also PG Electroplast that we cannot forget, down by about almost 19%. Varroc Engineering, KIOCL, La Opala, Ramco as well as JSL all seeing cuts of about 8.5 to 6%. So this is with regards to where markets are concerned. Let's also try to pull up what to watch out for this weekend. Some earnings as well as some corporate action that we'll be able to see. We'll try to pull that up in a while. But we have Shreyansi joining us for a special segment where she'll come and tell us as to what you're supposed to do this weekend.
Well, absolutely, and the list is quite long. Let's take a look at this week's list then of Popcorn Pearls. The first one that you have is Andaz 2, yet another sequel making it to this list, but we'll talk about it in a bit. The second one is, of course, Weapons. It's a Freaky Friday, and we'll tell you about this one. But first, let's take a closer look at Andaz 2, because this is another sequel where you do have Sunil Darshan, who's back after 20 years, and he's making a comeback with this particular sequel. It's a remake of a 2003 Akshay Kumar film, and it's made with a budget of 30 crore thereabouts. So keep an eye on this one. The reviews are not that great, but let's see if the Sayara fever really rubs off. In fact, on this one, that's also got newcomers. Next one then is weapons, because as I mentioned, it is a Freaky Friday, and you do have Zach Kreger coming back with this one after Barbarian, and this one of course is bigger, it's more ambitious, it's starrier as well, made with a budget of about $38 million. So that is one that you're looking at, and this is also made from the same studio that was behind Conjuring and It, so keep an eye on this one. But of course it's Sayyara that we've got to talk about yet again. It's Bollywood's guiding star at this point in time, crossed 500 crore rupees in collections, which is almost unheard of for a movie with just newcomers. It's managed to be the second highest grossing film after Chhawa, which managed to rake in about 800 crores thereabout. Let's look at the next one as well, which is the list of OTT releases that you should be watching out for. The first one on this list is Salakar, which is set across 2 timelines. It's releasing on Jio Hotstar. It's got Naveen Kasturia, Moni Roy, as well as Mukesh Rishi. So keep an eye on this one, and this one is for the Money Heist fans. It's got probably the most daring diamond heists, and that is something that Netflix is covering with this one. So keep an eye on this one as well. But with that, we're completely out of time. Thank you so much for tuning in.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors, market regulator, securities and exchange.
Hello and welcome. You're watching Market Express and I'm your host Malika Mishra. This is a show where you get all your market related updates as well as national and international news, top stories and in the most fast and efficient manner. Let's dive straight in. Markets end at the day's low. Nifty ends below 24,400. Sensex was down almost 800 points. Bharti Airtel and HDFC Bank dragged the most. NTPC and Titan were the top contributors to the index. All sectors end in the red. Nifty, Defence and Realty dragged the most. 43 out of the 50 Nifty 50 stocks companies declined in the trade today. State Bank of India's Q1 FY26 results shined with net profit beating estimates driven by a 55% year-on-year surge in other income from treasury and forex gains. Net interest income met expectations but grew less than 1% quarter-on-quarter, reflecting deposit cost pressures. Operating profit exceeded forecasts by 11%, supported by robust non-interest income. Provisions aligned with estimates, while asset quality improved with gross NPAs at 2.07%. Life Insurance Corporation of India delivered a stellar Q1 FY26 with a 5% rise in net profit to 10,986 crore rupees and a 20.75% surge in value of new businesses to 1,944 crore rupees, beating estimates. The non-par product share in individual APE jumped to 30.34% from 23.94%, boosting VNB margins by 150 basis points to 15.4%. The expense ratio dropped to 10.47% from 11.87% earlier, and the management expects stronger growth in the second half of FY26. KRBL, India's top basmati rice exporter, delivered a stellar Q1 FY26 with net profit surging 74% to 151 crore rupees, fueled by a 98% jump in export revenue. Revenue rose 32% to 1,584 crore rupees, while EBITDA climbed 64.4% to 193 crore rupees, boosting margins to 12.2% from 9.8% due to lower basmati costs. Domestic sales grew 15% with a 200 basis point market share gain in Maharashtra as inventory and working capital days dropped significantly. Godrej Consumer Products reported a 10% year-on-year revenue rise in Q1 of FY26, driven by 5% volume growth in household insecticides, but EBITDA fell 4% to 695 crore, with margins contracting to 19% from 22% due to high cost inventory, price cuts in soaps, and competitive pressures in Indonesia. Net profit grew marginally by 0.4%. International revenue and EBITDA declined on flat volumes, and GCPL maintains guidance for mid to high single-digit India volume growth and double-digit EBITDA growth in the second half, expecting margin recovery. Jefferies maintained buy rating on Godrej, raising its target to 1,450 rupees, citing strong household insecticides and Africa growth despite soap declines. Morgan Stanley's overweight at 1,431 noted a margin miss but positive market share gains. Macquarie's neutral at 1,200 rupees flagged ongoing price competition in Indonesia and weak soap sales. Margins fell to 19% due to high cost inventory and competitive pressures. Cummins India delivered an exceptional Q1 FY26 with standalone net profit soaring 40% on a year-on-year basis, surpassing the 478 crore estimate. Revenue rose 27%, beating the 2,652 crore forecast, driven by 25% domestic sales growth and 34% export growth on a low base. EBITDA jumped 33% with margins expanding 116 basis points against expectations of contraction. Profitability was boosted by 44 crore rupees in exceptional gains, lower finance costs and higher other income. The company remains cautiously optimistic about sustained momentum. Ramratna Wires announced a 15 crore investment to expand into bulk molding compound production, targeting the automotive, electrical and construction sectors. This strategic move aims to capitalize on growing demand for lightweight, high-performance materials, complementing its existing portfolio of enameled copper wires and copper tubes. The expansion approved by the board aligns with the government's incentives like PLI and RIPS, boosting import substitution. Production is expected to commence by the third quarter of this financial year at its Bhiwadi, Rajasthan facility. Metropolis Healthcare posted a strong Q1 FY26 with consolidated net profit rising 19% on an annual basis to 45 crore rupees, exceeding the 42 crore rupee estimate. Revenue grew 23% to 386 crore, matching the 385 crore forecast, driven by 11% patient volume growth and 12% test volume growth. EBITDA increased 14%, beating the 85 crore estimate, though margins fell to 23% due to higher reagent costs. Now, B2C revenues grew 19%, B2B 29%, with specialty diagnostics and True Health leading. Zydus Life Sciences received its first notice of compliance from Health Canada for ZDS Varenicline tablets, a smoking cessation aid, marking its entry into Canada's prescription drug market. Now, Varenicline, a partial nicotinic acetoreceptor agonist, reduces nicotine cravings and withdrawal symptoms. The tablets to be manufactured at Zydus' facility in Ahmedabad targets a 15 million market. Now, this follows Zydus' 2023 US FDA approval for Varenicline. PTC India reported a 44% YOY surge in Q1 FY26 consolidated net profit to 195 crore rupees, beating estimates of 180 crore, driven by lower expenses and an 8% rise in trading income to 78 crore rupees. Revenue fell 12% to 4,009 crore rupees due to lower power tariffs. EBITDA grew 18% with margins expanding to 7%. Trading volume rose 13% with core margins at 3.37 paise per unit. Biocon reported a challenging first quarter FY26 with consolidated net profit dropping 95% YOY to 31 crore rupees, missing the 50 crore estimate due to higher other income in the base quarter. Revenue rose 15% to 3,942 crore, in line with expectations, driven by Biocon Biologics and Generics. EBITDA grew 21% with margins improving to 19% from 18%. Biocon raised 4,500 crore via QIP to increase its biologics stake and exit PE investors. Sai Life Sciences posted a stellar Q1 FY26, swinging to a net profit of 60.5 crore rupees from a 13.5 crore rupee loss last year, driven by a low base. Revenue soared 77.5% to 496 crore rupees, with EBITDA jumping to 121 crore rupees, boosting margins to 24.4% from 9.3% due to operating leverage and lower employee costs. Lower interest costs further fueled profits, with shares up 2% today, reflecting optimism in Sai's CDMO growth and new peptide research center. Gujarat State Fertilizers and Chemicals posted a robust Q1 FY26 with net profits soaring 58.7% to 139 crore rupees from 87.3 crore rupees year-on-year. Revenue edged up 1% to 2,184 crore rupees, while EBITDA jumped 75.5% to 193 crore rupees, boosting margins to 8.8% from 5.1%, driven by improved P&K fertilizer realizations and strong ammonia sales. Despite 73% drop in urea sales due to trial exclusions, industrial products remained profitable, though lower spreads hit volumes. Data Patterns Q1 FY26 results disappointed, with net profit dropping 22% to 25.5 crore rupees from 32.8 crore rupees year-on-year, missing estimates of 37.2 crore rupees. Revenue fell 4.6% to 99.3 crore rupees, hit by delays in customer approvals, while EBITDA declined 13.7% to 32.1 crore rupees, with margins shrinking to 32.3% from 35.7% earlier. Garden Breach Shipbuilders and Engineers delivered a robust first quarter of FY26, with net profit soaring 37.8% to 120 crore rupees from 87.2 crore rupees on a year-on-year basis, beating estimates. Revenue jumped 29.7% to 1,310 crore rupees, driven by advanced execution of P-17A frigates. EBITDA nearly doubled, up 98.9% to 112 crore rupees, with margins expanding 8.5% from 5.6% earlier. Star Cement delivered a stellar Q1 FY26, with net profit soaring to 98.5 crore rupees from 31 crore rupees year-on-year, beating estimates. Revenue surged 21.4% to 912 crore rupees, driven by strong demand in Northeast India. EBITDA nearly doubled to 228 crore rupees, boosting margins to 25% from 15.5%. AU Small Finance Bank has received RBI's in-principle approval to become a universal bank, the first such NOD since Bandhan Bank in 2014. The bank, which applied in July 2024, met stringent criteria including 5 years of strong performance and maintaining gross NPAs below 3% and net NPAs below 1% for 2 years. This milestone, post its Q1 of FY26 net profit of 581 crore rupees, allows AU to expand into larger loans and corporate banking. Coforge's stock plunged 5% today, down 17% over the past month after its key client Sabric Corporation reported disappointing Q2 results and slashed its FY25 guidance. Sabric, contributing significantly to Coforge's revenue, posted a 30% stock drop in the US after missing revenue and EBITDA targets, raising fears about the $1.56 billion 13-year deal signed in March for AI-driven product delivery. Investors worry Sabric's financial woes could delay execution and impact Coforge's near-term revenue despite its robust $1.55 billion order book. PG Electroplast trims FY26 outlook sharply. Revenue growth now seen at 17 to 19% versus 30% earlier. Product and electronics segments face steep downgrades. Net profit guidance slashed to 300 to 310 crore rupees from 405 crore rupees earlier. And major US retailers including Walmart, Amazon, Target and Gap have asked Indian textile and apparel exporters to hold shipments after Donald Trump doubled tariffs on these products. Exporters say higher duties could push up costs by 30 to 35%, with buyers unwilling to share the burden. The steep tariffs could cut US-bound orders by up to half, causing losses of up to $5 billion. Exporters fear losing business to Bangladesh and Vietnam, which face lower duties. Cabinet approves the revised income tax bill. The government has withdrawn the Income Tax Bill 2025, which was introduced in the Lok Sabha in February to replace the 1961 law. A revised version reflecting most recommendations of the Select Committee led by Baijayanth Pandey will be tabled on Monday, August 11th. The move is aimed at avoiding confusion from multiple drafts and ensuring the House considers a single and updated version. And OpenAI sees India as its fastest growing market and is set to bring more of its products here while keeping them affordable. CEO of the company, Sam Altman, says the demand for software is rising and artificial intelligence will help meet it, not take jobs. He also unveiled GPT-5, a more reliable, multilingual model that understands over a dozen Indian languages. Zepto has entered the online pharmacy space with the launch of Zepto Pharmacy, promising to deliver medicines in just 10 minutes. The service is now available in parts of Mumbai, Bengaluru, Delhi NCR, and Hyderabad after a year-long pilot to fine-tune operations. Co-founder Adit Palicha says the focus will be on maintaining high operational standards rather than rapid expansion. The move puts Zepto in direct competition with Tata 1mg, PharmEasy, Apollo 24/7 and other quick commerce players in the medicine delivery space. Rolls-Royce is looking to set up a maintenance, repair and overhaul facility in India for the AE 2100 engine used by the Indian Air Force. The move comes as the India-UK Free Trade Pact takes effect. The aerospace giant says the plan will help support and sustain the Air Force fleet and strengthen its defense ties with India. And rescue and relief efforts are intensifying in Uttarakhand's Uttarkashi district following flash floods in the Darhali and Harsan regions. State authorities have reported that 566 people have been successfully evacuated so far, with efforts underway to rescue nearly 300 more stranded individuals. The Indian Army is leading the search operations, deploying specialized equipment including dog squads, drones, and ground-penetrating radar. To oversee the massive operation, Director General of Police Deepam Seth visited Uttarkashi to assess the ongoing rescue and relief measures. Brazilian President and Prime Minister Narendra Modi have agreed to work on expanding the Mercosur-India trade agreement. In a phone call, they set a target to push bilateral trade beyond $20 billion by 2030. Both leaders discussed the global economic situation, opposed unilateral tariffs and by the US, and also stressed the need to defend multilateralism. Now, Lula will visit India in early 2026, with Brazil's vice president arriving in October to prepare for the trip. In a sharp reaction, the Election Commission of India has hit back at Congress leader Rahul Gandhi. The poll body criticized his recent presentation on alleged voter fraud, calling his analysis absurd. The commission has challenged Rahul Gandhi to either file a formal complaint under oath or issue an apology to the nation for what it calls misleading interpretations. Sources from the Election Commission stated that if Gandhi stands by his allegations, he should have no problem signing a declaration. If he fails to do so, it would prove that he himself does not believe in his own analysis. A large-scale anti-terrorist operation is underway in Jammu and Kashmir's Kulgam district, and it has now entered its 8th day. This has become one of the longest security operations in the region in recent memory. Hundreds of troops, including special forces, are engaged in a fierce gun battle with terrorists who are believed to be well-trained in jungle warfare and are deeply entrenched in a dense forest. Security forces are treading carefully, utilizing drones and attack helicopters to neutralize the hiding militants. US President Donald Trump has ruled out trade negotiations with India until the ongoing tariff dispute is resolved. His decision follows the US doubling tariffs on Indian imports to 50%, citing national security concerns linked to India's oil purchases from Russia. When asked whether he expected talks to resume, Trump responded, "No, not until we get it resolved." President Donald Trump is demanding that Intel CEO resign immediately, calling him highly conflicted over his investments in Chinese firms. Lawmakers, including Senator Tom Cotton, have raised national security concerns about Tan's ties. In response, Tan said Intel is actively engaging with the US administration to clarify the facts. Israel's security cabinet has approved a plan to take over Gaza City. Prime Minister Benjamin Netanyahu's office confirmed the move aiming to defeat Hamas. The plan includes disarming Hamas and freeing hostages. This move may displace 1 million Palestinians. The UN warns of catastrophic consequences. Israel's military chief opposed the plan, citing risks to hostages. And that's a wrap on Market Express, but do stay tuned to NDTV Profit as we have Profit 360 lined up for you right on the other side.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
The Nifty declines for the sixth week in a row. Broader markets extend losses for the third straight week. All sectoral indices also close lower. SBI ends flat after net interest income and provisioning come in line with estimates. Operating profit beats expectations. Other income lifts profitability. The Cabinet approves a revised income tax bill and formally withdraws the previous version introduced back in February. Sources say it will incorporate recommendations from the Select Committee and introduce it in the Parliament on the 11th of August. Godrej Industries, Nadir Godrej expects AI to lead job cuts even in the FMCG sector, hinting at fewer opportunities, says that the Godrej won't hire and fire. Bajaj Auto expects rare earth export curbs to have a 40 to 50% impact of its EV production in the second quarter, highlights intense competition in the lower end segment of EVs. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. Benchmark indices gave up previous session's gains to close 1% lower today. The markets were dragged down by tariff-related concerns and foreign fund outflows. Now, the Sensex fell over 780 points while the Nifty dropped to 24,360, down more than 230 points. All sectors closed in the red, with realty, pharma and auto down almost 2%. But for a more detailed roundup, let me go to my colleague Harsh, who's going to join us with all of the details. Harsh, over to you.
Well, we closed a Friday where the Nifty was down 1% in trade. So the benchmarks clearly reeled under pressure and the move yesterday was quickly reversed. At the start of trade today itself, we sustained for a very long period in a very range-bound fashion, and thereafter we closed nearly 1% lower. So pressure evident even within the advanced decline, just 9 advances within the Nifty 50. Now it's the 6th straight week when the Nifty has closed in the red. So markets clearly moving in that direction and pressure is evident. When you're looking at the Bank Nifty as well, that too was pressured in trade today. In fact, all sectoral indices were in the red.
We cut across to the press conference by the cabinet at this point of time.
परिवारों को कैसे हम इंसुलेट करके रखें, उनके ऊपर कोई नेगेटिव इम्पैक्ट ना पड़े, ये सोच के ये फैसला लिया गया। 30,000 करोड़ रुपीस अप्रूव किए हैं, जो कि सीधा मिडिल क्लास परिवारों के जेब से बचेंगे, जो कि उनके परिवारों में एक खुशी दौड़ेगी। तीसरा बड़ा फैसला लिया गया कि राज्य सरकारों के जो टेक्निकल एजुकेशन के इंस्टीट्यूशंस हैं, उनको सपोर्ट करना, उसमें ट्रांसफॉर्मेशन लाना, उसके लिए 4,200 करोड़ रुपए का एक प्रोग्राम सैंक्शन हुआ है। हम सब जानते हैं IIT IIM का एक सिस्टम है, बहुत एक उसका एक लेवल विश्व भर में जाना माना जाता है। NITs का सिस्टम है, दुनिया भर में उसको माना जाता है, मान्यता प्राप्त है। जो राज्य सरकारों के टेक्निकल इंस्टीट्यूशंस हैं, उनमें गुणवत्ता कैसे आए, क्वालिटी कैसे आए, कैसे इम्प्रूवमेंट आए, तो 175 इंजीनियरिंग इंस्टीट्यूशंस एंड 100 पॉलिटेक्निक्स देश भर में, जिसमें करीब 7.5 लाख स्टूडेंट्स एंड 13,000 फैकल्टी मेंबर्स को बेनिफिट मिलेगा, उसके लिए ये प्रोग्राम बनाया है। 5 पिलर्स है इस प्रोग्राम के। सबसे पहला होगा अपग्रेडेशन ऑफ द क्लासरूम्स, लेबोरेटरीज, इंफ्रास्ट्रक्चर, और जिससे कि उनका ओवरऑल क्वालिटी में इंप्रूवमेंट आए। दूसरा, इंटर्नशिप और प्लेसमेंट सर्विसेज में बहुत फोकस किया है इसमें। जैसे IT सिस्टम है, तो IT सिस्टम में प्लेसमेंट का एक अपने आप में एक मैकेनिज्म बना हुआ है, जिससे कि इंडस्ट्री आती है, इंडस्ट्री के साथ एक कोलैबोरेटिव वे में एक डिस्कशन रहता है। वैसा ही सिस्टम स्टेट के इंस्टीट्यूशंस में बने, वो यहाँ पे इंट्रोड्यूस किया जाएगा। तीसरा, इंक्यूबेशन सेंटर्स, जो कि जैसे IIT मद्रास का हम सब ने देखा, बहुत ही अच्छा इंक्यूबेशन सेंटर है। IIT दिल्ली में भी बहुत अच्छा है। वैसे ही इनोवेशन के हब्स को हम स्टेट गवर्नमेंट के इंस्टीट्यूशंस में कैसे डेवलप करें, वो इस प्रोग्राम का एक बड़ा हिस्सा रहेगा। वो इनोवेशन का एक बड़ा हिस्सा रहेगा। फिर गवर्नेंस कैसे सुधार हो, जैसे बोर्ड ऑफ गवर्नेंस का सिस्टम है IITs में। IIT का प्रैक्टिकली सारे 99.9% फैसले बोर्ड ऑफ गवर्नर्स के लेवल पे होते हैं। तो राज्य सरकारों में भी कैसे डिपार्टमेंट ऑफ हायर एजुकेशन और डिपार्टमेंट ऑफ टेक्निकल एजुकेशन से बाहर आकर एक ऑटोनोमस वे में एजुकेशनल इंस्टीट्यूशंस में डिसीजन मेकिंग हो पाए, वैसे गवर्नेंस के मैकेनिज्म्स। फिर फिफ्थ, जो ग्लोबल बेस्ट प्रैक्टिसेस है, उनमें से बहुत सारी बेस्ट प्रैक्टिसेस IITs में, NITs में, उनको कैसे हम स्टेट गवर्नमेंट के इंस्टीट्यूशंस में लाएं। ये फंडिंग जो होगी वो परफॉर्मेंस लिंक्ड फंडिंग होगी, और जो अचीवमेंट आएगा उसके बेसिस पे इंस्टीट्यूशंस को और फंड्स दिए जाएंगे। काफ़ी ऑब्जेक्टिव वे में इसका एवेल्युएशन किया जाएगा, डेटा ड्रिवन गवर्नेंस रहेगी। चौथा आज का फैसला है साथियों, नॉर्थ ईस्ट का। आप सब जानते हैं कि 11 वर्षों पहले नॉर्थ ईस्ट में एक के बाद एक डिस्प्यूट्स, वायलेंस, एजिटेशंस, एक सीरीज ऑफ एजिटेशंस चलता रहता था। नॉर्थ ईस्ट में इन्वेस्टमेंट कैसे जाएगा, शांति रहे, लॉ एंड ऑर्डर मेंटेन हो, बड़ा एक चैलेंज था। इन 11 वर्षों में प्रधानमंत्री श्री नरेंद्र मोदी जी के नेतृत्व में नॉर्थ ईस्ट में एक के बाद एक डायलॉग के थ्रू, आपस में बैठ के बातचीत के थ्रू, बैठ के समस्या को समाधान करने की भावना के साथ जो डिस्कशंस हुए, उसके थ्रू सीरीज ऑफ मेमोरेंडम ऑफ सेटलमेंट हुए और उसके कारण कई ऐसे ग्रुप्स जो कि मेन स्ट्रीम से बाहर थे, एजिटेशन का रास्ता उठाए हुए थे, वायलेंस में लिप्त थे, वो सब एक नॉर्मल मेन स्ट्रीम में आए। कई सारे एग्जाम्पल्स हैं। उन सब के कारण करीब करीब 10,000 कैडर्स ने सरेंडर करके मेन स्ट्रीम में जुड़े इन 11 वर्षों में। यूपीए के टाइम में 500, 550, 600 करोड़ का कुछ ओवरऑल वहां पे ग्रांट जाता था, न उसका इम्प्लीमेंटेशन होता था ढंग से, केवल एक खाना पूर्ति जैसा था। एनडीए में इन 11 वर्षों में मेमोरेंडम होना, बातचीत और एकदम रियलिस्टिक प्रैक्टिकल तरीके से बातचीत, फिर उनके लिए स्पेशल पैकेज बनना, उस पैकेज का इम्प्लीमेंटेशन होना और इम्प्लीमेंटेशन के बाद में उसका फॉलोअप, रिजल्ट मेन स्ट्रीम में इंटीग्रेट करना और उनकी सोसाइटी के हर आयाम को और उनके जो विशेष रिक्वायरमेंट्स हैं उनको ध्यान में रखते हुए ये सारे प्रोग्राम्स बने। तो अभी रिसेंट टाइम्स में 4 और नए मेमोरेंडम ऑफ सेटलमेंट हुए हैं असम और त्रिपुरा में। उन चारों के लिए स्पेशल डेवलपमेंट पैकेज बनाए, वो आज कैबिनेट में अप्रूव हुआ। इसमें टोटल 7,250 करोड़ रुपीस का ये पैकेज है, जिसमें से 4,250 करोड़ रुपीस सेंट्रल गवर्नमेंट से आएंगे और 3,000 करोड़ रुपीस स्टेट गवर्नमेंट के। इस 4,250 करोड़ रुपीस में बेसिकली ये जो 4 कंपोनेंट्स हैं वो आपके सामने हैं। सबसे पहला आसाम में है, आदिवासी ग्रुप्स ऑफ आसाम के साथ। फिर दूसरा है असम में ही दिमासा नेशनल लिबरेशन आर्मी और दिमासा पीपल सुप्रीम काउंसिल के बारे में के साथ। तीसरा अगेन यूनाइटेड लिबरेशन फ्रंट ऑफ आसाम के साथ, उनके कुछ ग्रुप्स थे उनके साथ। और चौथा ऑल त्रिपुरा टाइगर फोर्स और नेशनल लिबरेशन फ्रंट ऑफ त्रिपुरा। इन चारों के साथ जो डिस्कशन होके जो मेमोरेंडम ऑफ सेटलमेंट बना, उसके हिसाब से ये प्रपोजल्स अप्रूव हुए। और ये प्रपोजल, इसमें कई तरह के काम लिए जाएंगे। कनेक्टिविटी के काम होंगे, एजुकेशन के काम होंगे, हेल्थ केयर से रिलेटेड काम होंगे, स्पोर्ट्स और जो इंडिजिनस मेडिसिन है, इंडिजिनस स्पोर्ट्स हैं, उन सब का ध्यान दिया जाएगा। और विशेषकर जो कल्चरल
Right, there you heard it, Ashwini Vaishnav at the cabinet briefing saying that the cabinet has in fact approved a substantial fund. We're talking 30,000 crore to compensate India's state-run oil marketing companies for losses that were incurred on the sale of domestic liquefied petroleum gas. Let me quickly bring in Yogesh Patil of Dollard Capital joining me on the phone line. Yogesh, take us through, your sense or your perspective on this move, obviously responding to a pretty industry-wide cumulative under-recoveries between April to December 2024.
Yeah, first of all, good afternoon. And this is a positive news overall for the oil marketing companies. This decision was pending since announcement of ₹2 per litre excise duty hike in the first week of April. Our Honorable Minister, Oil Minister, that time communicated that the excise duty hike will be utilized for the compensation of domestic LPG cylinder losses. And last year, to our understanding, OMCs have incurred closer to 40,000 crore total under recoveries on the domestic LPG cylinder. Considering the market share of HPCL, BPCL, IOCL, they are in the range of 27% and 46% respectively. They have taken up much of the burden in FY25. Now the government has decided to pay them a 30,000 crore amount of LPG under recovery that would be a compensation. This indicates the 75% of the total under recovery they will receive as a compensation. And this is a completely positive development for all these OMCs, HP, BP, IOC. And this amount will help them to reduce the debt burden. So net debt will definitely come down of the oil marketing companies, and it will definitely improve the equity value. So to our understanding, equity values of these HPCL, BPCL and IOCL will improve by 29 rupees per share in case of HPCL, BPCL 14 rupees per share, and in case of IOCL it will be a 7 rupees per share kind of a positive impact. To give you a precise number, HPCL will benefit 7% in terms of their equity value improvement, BPCL would be in the range of 4 to 5% and IOCL closer to 5%.
Right, Yogesh, do you expect this move to fully contain the potential LPG price hikes for Indian consumers over the next 1 to 2 years, or do you think that there is a potential for global price shocks to still necessitate further government interventions like this?
To my limited understanding, after reading the flash on the screens, I believe this is a one-time kind of a compensation. Now looking into the upcoming or forward propane or LPG prices, global LPG prices, they are on the downward trajectory. So it is unlikely that the government will come again and give another or next support to the oil marketing companies, because just sitting in the month of August only, from the next month, September 2025, we expect the LPG under recoveries will be below 50 rupees per cylinder, which were exactly more than 150 rupees per cylinder in the first quarter of FY26. So the kind of a reduction you can see, and that generally hardly requires any kind of a government support or compensation. So yeah.
Right, Yogesh Patil of Daulat Capital, thank you so much for putting that in perspective. Remember, this is the update that's coming in right now. The Union Cabinet approving a substantial fund that's estimated at 30,000 crore to compensate India's state-run oil marketing on LPG, those companies. This move responds to, like we have been saying, industry-wide cumulative under-recoveries of about 30,000 crore. We're talking between April to December 2024, which has been a direct result of elevated international LPG prices and the government's policy of keeping retail LPG rates affordable for households despite global volatility. And let's now dive into our earnings coverage. First up is the State Bank of India's strong operating performance and loan growth that rose the bank's standalone net profit by 13%. However, increase in provisions and tepid profitability capped the lender's overall gains. But let's go across to my colleague Harsh for a detailed analysis.
Well, SBI posted an inline set overall. In fact, the beat on the profitability was led by other income. Other income grew 55% on a YOY basis at 17,000 crore odd. So it was a very, very strong number that SBI posted on the other income front. The net interest income was largely in line. The margin came down by around 10 basis points on a sequential basis. So from 3%, it's come down to 2.9% now. So you continue to see margin compression on an SBI. Now the question is, for how long does it go on for? With regard to operating profit, that was a beat because of other income. OPEX was largely steady, single-digit growth on a YOY basis. And you saw, therefore, operating profit came in much better than estimates, around 11% beat on the operating profit front. It came in at around 30,000 crore odd versus the 27,000 crore number that was penciled in by the street. You're also seeing provisioning absolutely in line at 4,500 crore. Slippages were contained, and largely agri and seasonality hits SBI in Q1 of every FY, and therefore you saw that come in as well. So normalized levels on those counts, and therefore your profit after tax was above only because of the other income. That was what led the beat with regard to earnings. So overall, that's how it panned out. Your NPA ratios were absolutely flat, 12% growth on both advances and deposits. Advances growth of sub 1% on a sequential basis. Deposit growth was decent versus what was penciled in. That's broadly the take. 1.14% on the ROA count as well versus the 0.97% that the consensus was working with.
Right. right, Harsh, thanks so much for that. Meanwhile, C.S. Sethi, the chairman of SBI, expects the corporate loan book to grow by 10% in the next 2 quarters. He gave this outlook during the post-results press conference. Let's listen in.
When we look at our pipeline and also the disbursement pattern which we are expecting, that gives a confidence. Around 10% is something what we should be reaching the corporate book. Asset quality is holding up well. And if you see, all segments of our retail personal loan, we maintained the stellar asset quality. And I believe that auto may not really be picking up because at least in Q2, going forward, maybe during festival season, auto sales, if they pick up, the auto loan segment also will pick up. Otherwise, home loan, we will continue to have a robust growth rates. And we are seeing both in terms of application sourcing and sanctions is robust there across the geographies. Unsecured personal loan, what we call express credit, is something what we want to grow, and I think the festival demand will make it, get into growth mode.
Meanwhile, LIC gained almost 3% after first quarter results beat estimates on all fronts. CEO and MD Doraiswamy expects the second half of the year to be better and said that the increasing trend in sales will help growth. Let's listen in.
Second half, naturally, growth has to be better because of the low base last year. We had gone into degrowth from October last year, so we expect that the trend that we maintain and the increased focus that we are giving on number of sales will certainly look at enhancing the growth in number of sales in the second half. That is something which we expect to happen. We are also bringing in a lot of new products which are also we are trying to bring in to see that every aspiration of the customer is met. So some innovation in products also is something which will be helping us in showing the improvement in numbers. Looking at improving quarter on quarter, whatever has been, what we have already achieved is something which will be a benchmark for us to exceed. So we are certainly looking at a VNB margin for the year which will be slightly more than what it was in the last year for the full year.
Now, meanwhile, shares of AU Small Finance Bank were in focus today as the stock opened 7.5% higher. The uptick comes on the back of RBI's approval to grant the bank a universal banking license. This is the first universal bank clearance since Bandhan Bank got its RBI preliminary nod in April 2014. So for consumers, this now means that the bank can offer a wide range of financial services and products under one roof without the restrictions, unlike a small finance bank. My colleague Vishwanath spoke to Sanjay Agarwal, MD and CEO of AU Small Finance Bank, and he said that the RBI's nod actually puts it on the top of the league. Let's listen in.
In terms of the business model, now you've said earlier that for the next 3 to 5 years you're going to continue doing what you're doing, and then maybe look at other, the previous lot of bank licenses that went out. Some of the lenders took some decisions which did not pan out very well. How are you seeing that journey of transitioning to the universal bank and your business model?
I think not much will be done. If you ask me, we are a scheduled commercial bank. We are 100% compliant with all regulatory requirements. I think this license will do a couple of things for us. One, I think the momentum will be in our favor because I have seen much curiosity from last night that who is AU, what is AU, what they do, whether now they are a full-fledged bank. I think the customer attraction towards us will go up. That eventually will help us to reduce our cost of money, can have more opportunity around our asset build-up. So that will happen, in my opinion, very quickly, And second, I think over the period, when I am with this status of universal bank, with this kind of legacy of maybe around 30 years, people will react very differently with us. As of now, we have to struggle a lot in terms of explaining us. So I think that will ease up a lot of things internally. We are moving towards Mumbai, So Mumbai is the heart of the whole banking as such, right? So we'll be operating more over from Mumbai. So I think pan-India opportunity, going even beyond India, and beyond, even the present structure. So I think I would say that still very early time to react me on that, but it makes us on the top of the league.
Now, after IT, FMCG is another sector that is staring at potential job losses because of artificial intelligence. Nadir Godrej, the chairperson of Godrej Industries Group, says AI will lead to job cuts in the FMCG sector, but the company will hire only as per its needs. Listen into a snippet of this exclusive conversation.
It's entirely possible, but we are not clearly seeing that as yet. We are also working on AI, and it is possible that the number of jobs will be taken away, but it's also possible that there will be adequate growth coming out of AI and productivity increases. If it is followed by greater demand, then the total number of jobs will be unaffected. This has usually happened in most technological revolutions. Of course, we can't be sure it will be the same this time, because AI can replace many, many different human abilities. So it is very hard to predict what will actually happen.
Meanwhile, US President Donald Trump has once again upped the ante against India, and responding to a reporter's question, he has asserted that the US will not be engaging in trade talks with India until the tariff issue is resolved. Let's listen into that exchange.
Just to follow up on the India tariffs, do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
Right. This is meanwhile, as we have been seeing that India has refused to back down. But moving on, OpenAI has officially launched ChatGPT-5, the newest version of its advanced AI chatbot. This comes with significant upgrades that are already generating buzz. Touted as OpenAI's most powerful language model yet, GPT-5 promises a faster, smarter and more user-friendly ChatGPT experience. Let's take a look at this package to learn more about it.
Talking to AI has always felt a bit, robotic. But that's quickly changing with the arrival of OpenAI's ChatGPT-5. Now it can handle much longer conversations, remembers discussion, and picks up right where you left off. Also, no more fiddling with modes, as ChatGPT-5 switches between quick replies and deep reasoning on its own. It's also multimodal, so it understands not just text, but images and voice as well. If you want a particular personality, you've got options like robot, listener, nerd, and more. OpenAI offers ChatGPT-5 with both free and paid options. The free plan gives you basic access to GPT-5's features such as text, voice, and image understanding, ideal for casual users. For those needing more, the Plus plan costs around 2,000 rupees per month, which unlocks extended usage, advanced voice features, and other perks. In fact, Sam Altman also said that India is OpenAI's biggest market. Meanwhile, Elon Musk's team is preparing to launch Grok 5 before year-end. Smarter bots, bigger markets. AI isn't just the future anymore. It's happening right now.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release.
Hello and welcome. Thanks for tuning in to KYC. I'm Harsh Saita and today we're going to be speaking with Kalpataru Projects. It's a strong set of Q1 numbers. It's a very strong FY26 guidance as well that they are penciling in. But here's what I want to know about Kalpataru Projects. And more so, just trying to understand whether this entire TND space could well be something that you could bet on in a safe manner and still get a good growth, and which players could you bet on? But you know, Kalpataru Projects in particular, there have been payment delays that the company has witnessed. So I want to understand whether this can change, this can reverse. Are there any specific segments where they are witnessing this? So that's the other piece. And how much of this is caused by government? What are they doing to shift away from government contracts? So that's the first part. Second, as a result of this, working capital needs are inherently higher. Mind you, in general, in engineering, procurement and construction companies, you will have higher working capital requirements because you will have amounts, chunky amounts stuck up in working capital. That is normal, and therefore your return ratios matter far more. So yes, you will have working capital needs which are inherently higher, yes,
but will they continue to increase every year? Is that something that you as an investor should pencil into the cash flow, which will keep a lid with regard to cash flow from operations growing at the same clip as EBITDA will? So that's what I'd want to really understand. The third piece is with regard to water business. Will you see a slowdown with regard to water business? Because this is more government, less private generally. So I want to know if they will ease their focus on the water business at all. They're also doing divestment of non-core, and I'll talk a little bit about that as well. The fourth piece is oil and gas. Now, within the oil and gas space, they're doing a lot of contracts which are export focused and export oriented. That's what they are focusing on. So I'd want to know whether the margins here are better and how large the opportunity is. So if we roll forward, margins in oil and gas versus the blended margin is what I'd want to know. So there are two key factors within Kalpataru projects that I want to talk about. One is the margin number. The second is the ROC. Can the ROC go up, and can the margin number creep up? That's the guidance, and where will that lever come from? So these are the two pieces, and I've just kind of combined the two into one. What stops you from growing at roughly 20% odd? The order book is quite healthy, nearly 3 times book to bill is what they're currently at, and therefore given that, you'd want that they can grow at a 20% plus clip for a prolonged period of time. Plus all of the verticals that they have are strong growing as well. They're well in vogue. Oil and gas is well in vogue. Transmission is well in vogue. So you've got those levers to kind of kickstart and keep growth coming. Debt direction, where do we go in terms of that? And last part is selling of non-core assets. They have some non-core assets on their balance sheet, and in order to improve their ROCs, what they're doing is they're trying to sell some of that. So some of those metrics will start to play out in coming years. How much of that comes onto the balance sheet as cash is what I'd want to also understand. But we'll start off with about the company, and we're missing Anushi today, who generally tracks EPC, but let me do the best I can. Let me start off by explaining what exactly does Kalpataru Projects do. It's a leading global EPC player, EPC full form on your screen. Put it in a nutshell, it executes infrastructure, energy projects in 75 countries. It focuses on power T&D, which is transmission and distribution, buildings, water, oil and gas, railways and urban infra. Again, railways and urban infra is a very interesting high growth tilt to the business. Asset light model is what it focuses on. It scales by managing complex projects and not really owning the asset. So they don't do as much of build, own, operate and the like. So that's not really the model that they follow. They generally follow a model where they receive the money upfront and hand over the asset to the government. That's how they prefer playing this. Let me start off also by explaining what are the types of projects that they take on. So first, within the power T&D space, you'll see the various verticals come on the yellow band on top, and then you'll see a description here. In the power T&D space, they build transmission lines, substations, from engineering to installation. They do in-house design, manufacturing, testing of towers as well as equipment. In terms of building and factory, which is their second vertical, they construct residential, industrial, airports, data centers and factories, of course. And outside of that, they offer design, build and not just construction. So they also offer that part of the service. In terms of water and irrigation, of course, some part of the contracts here are government predominantly. They lay water pipelines, install treatment, storage, they manage supply. They also handle O&M for water systems. So some of these are of course valuable. Oil and gas. Now this is the new possible vertical where there could be strong growth, especially from the export opportunity. So they are installing pipelines, refinery facilities, terminals, compressor stations, all of that. In terms of railways, electrification, track links, signaling, station development, all of that is what they do. That's the broad brief with regard to the services they provide. Let's talk about the order book now. It's at around 65,000 crore, Q1 FY26 of course. It's at an all-time high. Domestic is roughly 59% odd. 41% is international. And here's the order book to bill. That's the more important ratio. And I'm going to talk about that only till FY25. So that's the broad brief with regard to book to bill, nearly 3 times, and has been the case for the last 3 years. So they've consistently maintained that. That's the run rate at which they've been going. Let me talk about order book mix also, because that will give you a tilt with regard to margins, and we'll discuss margins just for a little bit. You look at the power T&D, this is roughly 41% of the current book size of around 65,000 crore. So around 41% is power T&D. That part of the 65,000 crore, so that part is slightly higher and better margin. Building and factory is 22%. That is also better margin. So around 63% of the book is those two. Then you have water, which is 15%. Oil and gas, which is 12%. Oil and gas reportedly has the best margin, but of course that question I'm going to pose with the company. And urban infra and railways is around 10% odd. So that's broadly the mix of the order book. In terms of water, 15% of the book, the margins may compress a bit, and that's likely more so because it's government tilted. So you want to take care of that part, and I want to see as to what the commentary says as well. Let's talk a bit about the business model. And the business model in terms of manufacturing, in-house key component manufacturing of transmission towers, scaffoldings, etc. They have a facility in Raipur and Gandhinagar in India for this. Project execution, well, they have a central project management office in Mumbai, and then they have project teams all over at project sites which manage the project. Last off, there's sales and customers, of course. They sell EPC contracts to governments, PSUs, large private developers and international agencies. They do claim high repeat customers due to track record as well as relationships. So that's the broad brief with regard to a Kalpataru Projects International. Now let me talk about the metrics that we will discuss on a Kalpataru projects. We'll start off with the income statement. We'll thereafter look at the balance sheet, cash flow and return ratios. We'll then look at shareholding patterns, street cred, valuation, street coverage, and they've guided also on a couple of factors. We'll talk about that as well. Let me start off with the income statement. Now you look at the top line and the growth there. It's been around 15% 3-year CAGR. The EBITDA is up by around 13 odd percent. Margins are largely steady state between 8 and 9% over the last 4 financial years. FY22 9, FY23 9, 8 and 8 for FY24 and 25. And therefore you're seeing a bit of compression on the profitability. So we're not seeing profits grow at that 15% clip as the top line. It's just a 2% profit growth on a CAGR basis. So you want to see more on that profitability number. Now let's talk about the Q1 FY26 numbers. And this is really strong coming in from a Kalpataru. The net profit stood at 200 crore for Q1 FY26. I'm going to pull out the top line number as well in just a minute. So your top line has grown 35%, mind you, on a YOY basis. Your EBITDA is also up a very, very solid 39%. So you're seeing strong growth across the board where a Kalpataru projects stands, 38.6%. Your margins have come in at 8.5% versus an 8.3% same time last year. So your margins have inched up, and that has aided profitability in a very, very strong fashion. In fact, this will mean that FY26 will be a standout year, and we'll dive deeper and understand whether that is actually possible or not. But given the last 3-year performance, we've given this a neutral. We want to wait and watch as to what the guidance is with regard to margin uptick and profitability going forward. But very, very likely there could be a bit of turnaround here. But we've been cautious on this one. Let's look at the balance sheet. Equity, roughly a total equity of around 6,500 crore. It's a 20,000 crore market cap company. It's trading at around 3 times book. Your borrowing is around 4,000 crore, but cash bank balance is around 1,800 crore. And I'm sure a large part of that profit as well would have likely come into this cash balance at the end of FY25. You want to keep your eye out on that as well, because that will mean your net debt has come down. And it has. Your net debt to equity has come down to around 0.3 to 0.2 times roughly at the end of FY25. That will likely continue to come down. We'll understand the debt picture better going forward. Let me talk about the cash flow now. So we've given the balance sheet on neutral as well. Want to see more work being done. Even though the net debt to equity has come off, I want also an outlook on the debt. Cash flow. This is where there's been some bit of pain. Your operating cash flow to EBITDA stands at just about 50%. You want this to likely get better, right? And maybe EBITDA is not the right metric because interest cost is also extremely elevated. But even on the overall numbers, you want operating cash flow to improve. The receivables keep a lid and the working capital keeps a lid on operating cash flow. Again, EBITDA, you have interest taxes that you need to discount for when you do CFO to EBITDA, and therefore, and because this is slightly more capex heavy and slightly higher interest cost that it incurs, therefore the CFO to EBITDA number has squeezed. The net cash flow though remains intact, and that is because of the equity raise it has done last year. It also did its IPO a couple of years back, and it also has done a couple of debt raises and debt repayments as well. So you want to know some of those things when you're looking at the net cash flow picture. The return ratios. The return ratios look all right. The ROC number is roughly 16 odd %. And as I did mention, there is a possibility for a positive bias to return ratios, but they've been stable. I'll give them that credit. So therefore, the thumbs up. Let's look at shareholding now. Promoters, roughly 33.5% currently. So we've given this a neutral. FIs have increased their stake. FY23 to FY25, they've really increased their stake. DIS 2, the stake has gone up. Public also, the stake has largely been steady state. So that's the broader picture with regard to shareholding. Neutral on this one. Street cred, 1 month stock price action is -6, 6 months is +8, year to date is -15, 1 year is -10. So shareholders haven't exactly made the best returns. The 1 year shareholder is under some bit of pressure. But since 2023, the stock has more than doubled. So over slightly stretched periods of time, of course, we've seen a better performance from Kalpataru than in the near term. So that's the other thing, and therefore we've given this one a neutral as well. Longer term, okay, but shorter term, some bit of pressure coming in on shareholders. Let's talk about valuations now. And Kalpataru Projects currently trades at around 30 times earnings. KEC, which is its competitor, trades at around 38. And Transrail, which is purely T&D, trades at around 30. You've got 1 year forward, those numbers changing dramatically because of the growth tailwind that's there. Broadly, we've given this a neutral. 2 reasons. One, a 21 times high growth business definitely looks good, but you want to see what happens to the debt picture as well. You want to see what happens to the cash flow picture as well, and whether margins can inch up and the return ratios can inch up. So some of those factors need to be kept in mind. Those are a work in progress, and therefore keeping those in mind along with valuations, you want to be cautious. That's why the neutral. In terms of analyst recommendations, there are 15 buy calls, there are 2 hold calls, no sell calls. There is a 19% return potential, which the average Bloomberg analyst expects from this one. 17 analysts track it. So surely not looking bad, a clear thumbs up with regard to this one as well. Let's stack up all of those 8 metrics and give Kalpataru Projects its KYC rating. That's how it stacks up. Cash flow, a bit poor, right? So we've given that a thumbs down. Other than that, everything looks okay. It's all in place, and therefore gets a 5 out of 8 on our KYC rating. Now let's go across to management. Let's speak with Mr. Amit Uplenchwar, who's going to be joining us, who's a director at Kalpataru Projects. Welcome, sir. I'm Harsh here. Good speaking with you. Let me start off with working capital. That's the one possible drag on your return ratios. But talk to us about the business itself. Is working capital just a part of the business that you do, and therefore it has to be factored in from an investor lens, or would you look to optimize it? And are there levers to optimize it? And if so, how much?
So, good morning, Harsh.
Good morning.
Thank you very much for having me on your show.
Thank you.
Very, very interesting question. as you follow the EPC business cyclically, you should look at this lens from a constrained perspective. Has cash flow ever constrained the growth of KPIL? And the answer is no, right? If you look at our metrics, today, if you look at amongst our peer group, we are keeping our net working capital days at less than 100, which is at our scale and size with a diversified order book and sectoral as well as geographical spread. I think it's one of the best in the industry. We've also kept our interest cost as a part of our revenue under 2%, which again amongst the entire industry is one of the lowest, which shows a very, very strong balance sheet and extremely low levels of debt in relation to our business. If you look at our third metrics, which is debt to equity on a standalone basis and on a consolidated basis, today we are at less than 0.47 of our debt to equity, and on a standalone even lower, which is again one of the lowest in the industry to have a near debt-free status on a standalone basis. And we have, like you correctly mentioned on your show, we've had a 15% CAGR over the last several years. And in this year, in Q1, we've done our highest ever revenue at 35% levels of growth on revenue, both on standalone and console, with pretty much keeping the debt levels at the same that we've been doing. So we've factored the growth through the similar balance sheet levels of debt. So I would say this is one of the best and the strongest balance sheets in the industry ever, and cash flow has never been a constraint for us, with enough and more headroom to grow in the future.
Point taken, sir. So on your cash flow from operations, what should be the pre-cash flow from operations on your PBT number, what should be the drag of working capital that one should pencil in annually? So
I think, Harsh, let's look at this question in a different light, right? Today, as a company which is having 65,000+ crores of order book in hand, and on a lighter note, in this uncertain world, the only certainty that we've provided over the last several years is a very, very stable financial performance in terms of profitability, right? So we are doing close to, last year we were at 4.5% PBT thereabouts. We've already inched up beyond 5 this year, and we've guided at the beginning of the year to go close to 5.5, which is 100 basis point expansion on our PBT levels. And the kind of revenues that we are doing, I think this is one of the highest amongst the peer group if you do a comparison. At 5.5% close to PBT FY26 closing, I think would be one of the best PBT in the industry at that scale.
No, sir, I completely take your point. I completely take your point on that. Right, sir, let me switch focus. Let me talk about water for a bit. Is there a thought process behind how you will bid for projects within water, keeping in mind what you've just told me, that the PBT margin of around 5.5%, does water fit the bill there? And will you be very, very selective there? And therefore, where does the water mix stand maybe a couple of years from now? Will it come off? Will it stay steady state?
So, Harsh, again, a very interesting question. I think you analyzed our company. You probably know the numbers better than I do in the way you ask the questions. But in terms of water, we've got 9,000 crores thereabouts of order book that we have on hand. Right? Water is a beyond 5.5.
With the benefit of hindsight, I'm sorry I'm going before the 20% blending target which we've achieved 5 years in advance. The first target was 10%. And I can share with you some of my anxiety when I was associated with this program, when I got the petroleum and natural gas ministry, I was assigned to it, that even when it came to the 10% biofuel blending, I used to have some doubts a little, because we had to achieve it by 2022, I think. And I came on board in 2021 and I said, will we be able to do it? Because my own conditioning was in the pre-2014 period. But no, lo and behold, we got that target 5 months in advance. Then we set ourselves a target of 20%. And now I come to where you asked me, we did that 5 years in advance. But I don't think it is just, Kushan, I don't think it's just the achievement of the target. You can sometimes meet your overall goals, but how you do it. I want to draw your attention to 2 or 3 major changes. One is the diversification of the feed. Earlier, going by the Brazilian experience, Brazil is a country 3 times our land area, 1/6 our population, with 22% of the world's freshwater reserves. For them, sugar is not a problem. And Brazil can, with a little bit of effort, they can increase the area under acreage many times. But we have 6 times the population, 1/3 their area. We have to look at ethanol blending, or I'll come to biogas, I'll come to green hydrogen, with a different set of challenges. And I think a lot of people who said that, you have to look at food security, I used to think even then that that was a baloney argument. And now I'm convinced even more. Because in India's case, if you go down the biofuel, who are the beneficiaries? Your farmers, your agricultural sector. What do you save? I'm not just talking about environmental plus points. I'm talking about something else. You save foreign exchange. What did we save? 1,40,000 crores. What did you do? You gave, where did you give the money? You gave 1,20,000 crores or thereabouts to your farmers. And at a time when the rural sector is in, I wouldn't say distress, they were, you used to hear about these challenges, you used to hear about farmers having to face existential. We did a lot of things. We tried to put more money into the farmers' hands. MSP has gone up many times, more crops have come under it. But the biofuels program, excuse me.
Guys. Sorry, sir. Sorry about that, sir.
No, don't worry. But I think he was vying for attention, but I think I've got the floor. So, no. Suddenly you find that when you discuss agrarian issues, the ethanol blending program or the biofuels program has become a very integral part of that. I shudder to think what would happen. I know there is an attempt going on at vilification. I mean, Kushan, you and I have been around a long time. Your father and I used to belong to a different era when we were in the university. We grew up in different time. But now there are vested interests, economic interests. So there's vilification. I saw that vilification campaign even when we were dealing with compressed biogas. अरे ये ठीक नहीं है, वो ठीक नहीं है, गाड़ी बैठ जाएगी, दाम बढ़ जाएगा. अरे भाई, have faith. If you have faith in yourself, you have faith in your biomass, in your agriculture, you have faith in your urja data, annadata, you will find that things will work out. Prices of CNG, when they became high, people told me the manufacturers will not manufacture cars. You have an embarrassment of riches. You have got 113 CBG plants. I'm not trying to digress. I'm just trying to show the nature of the vilification campaign. You have another 113 plants operational CBG, another 78 coming. Ethanol, I stopped counting. And they're coming up every day. Today I had a colleague of mine said कि हमारा एक बहुत बड़ा ethanol plant तैयार हो गया. Will you please come to inaugurate it? So ethanol is now got diversified feeds. I have a situation where from 0% use of maize a few years ago, we're at about 40% maize utilization. When they talk of sugar, they don't realize we're not using sugar as in syrup. We are using what is called C-heavy molasses. After you take the sugar syrup out of the cane, then you निचोड़ने को क्या कहते हैं, wrench it, then you get B-heavy molasses. Then when nothing is left ready and you nichodo it more, then you get C-heavy molasses. So you have C-heavy molasses. Our plant in Panipat, the IOCL plant, is making second generation ethanol from Parali, agricultural waste. Today, and we have a system of giving good news in the cabinet. Today, I mentioned that yesterday or the day before, Corsair, which is the clean air environmental arm of ICAO, International Civil Aviation Organization, they have certified the use of used cooking oil in the Panipat refinery to make sustainable aviation fuel. We are making ethanol from broken food grain. So I think this is a program which has taken off, and no matter what these entrenched lobbies, I just tell them one thing. I lived in Brazil. The same car manufacturers were operating in Brazil, German, Japanese, the same operating here. Brazil has been on E27 or ethanol mixed in the basic blend up to 27%. Let's stop complaining long back. Yes, the calorific value, the performance of a car may be 1% or 2%, maximum 3% less. In the last 5 years, have I ever heard of an engine failure? And you've seen these, motivated trolls on social media. They will say that if you put E20, which is available in, God knows, it's come in every petrol pump. We have 88,000 pumps in India. E20 is available in every pump, basic feed. In about 400 pumps, we are selling E100 to encourage, it's a chicken and egg story. You make the fuel available, then they make the car for it. The car says, I can't come till the fuel is available. We are going to transfer this. Look, just now we are in a happy situation of having done E20 several years in advance, 5 or 6 years in advance. As we proceed, I am very sure, and we have comfort level with the ecosystem, the feed and everything, we will gradually raise it. What percentage? I'm not a soothsayer. I'm essentially a incrementalist, so we will see how it goes up. But I think the country is yearning for it. Is it more expensive? Arey bhai, suno to sahi.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Almost about 2 lakh people have received the notices. Artificial intelligence or technology has made things very easy to send out notices quickly. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है.
I think for the last 7-8 years, everybody's file is opened and they are sending blast messages. 18 to 24% is the interest and almost 25% to 100% 10% is the penalty. A lot of people say that I didn't know they were fake, I did with a good generosity. If you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
They say tax is one of two things in life that is unavoidable, inescapable. That hasn't stopped people from trying. For years, some people have approached tax paying with the tagline immortalized by Amitabh and Shah Rukh. Dawn ko pakadna mushkil hi nahi, namumkin hai. But the problem is that the long arm of the taxman has in fact gotten more efficient. Over the past few months, thousands of notices have been sent out seeking explanation for some inconsistencies. Some of that has to do with rent paid. Other notices are because of tax breaks that were claimed for donations to political parties. And still more because of credit card spends. If you've got such a notice or could potentially get one, this conversation is for you. This is MoneyWise on NDTV Profit, and my name is Alex Matthew. Join me today is Abhishek Mehta, who's a chartered accountant and who has his own firm. Abhishek, thanks so much for joining me today. Absolute pleasure having you. And in fact, I've met a few people who've gotten such notices. They've all come to me and said, what do I do? What do I do? The question is, why do you get it in the first place? Have you heard of a lot?
Yes. So I think this year, almost about 2 lakh people have received the notices. But let me go back a bit. Out of 8 crore people who are filing the returns, income tax considers 99% of them as genuine. That's why we call them as a self-assessment tax. And there are only a couple of 1 or 2% people who try to get these notices. So about 1 to 2 lakh people have got notices on 5 or 7 major reasons. One of them is people who have bought properties. Second is capital gains on F&O, equity shares. Third is political donation. There's a huge drive going against the political donation. Fourth is your credit card spends. Fifth is cash deposits. And sixth is a lot of people have some foreign assets which they are not declaring while filing the returns. And because of a good exchange information with the department and abroad departments, income tax department is getting a lot of asset information of the foreign assets which people are holding. So that is why income tax is sending out these notices and trying to get the exact source of the money from where this is coming.
Let me clarify, is this driven by actual people or is this automated messaging that is going out if certain triggers have been hit? And I'm talking about use of artificial intelligence, use of your annual income statement and all of the data now that the income tax department is pulling.
So almost 70 to 90% is getting automated.
Sure.
Use of artificial intelligence or technology has made things very easy to send out notices quickly. But what income tax is also doing is first they are giving them a chance that, if you want to revise your return, go for an ITRU and revise your return. Because if you know that I've done something wrong, a chance is being given by the income tax department and they are not just starting the scrutiny. And when people are not responding or people are responding that, no, I am correct. And that is the time when they start with the scrutiny process.
And it can get pretty lengthy. It can go all the way to court. We'll discuss a couple of those instances where the claimant or the taxpayer has actually won a case in court. And that happens more often than you would think. But let's talk about some of these instances, right? And one of the most interesting ones that I thought was interesting was the political donations, because people have been claiming, and I do not know what section, you'll be able to tell me, but people have been claiming these donations, but there are also scenarios where I've heard of fake donations being made, a certain cut being taken and money being returned for a receipt that says that you've made a donation. Is this something that occurs?
Yes. So I think most of the political donations, usually when income tax knows that if somebody is an employee and they are doing political donations, there will be very rare chances. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Because section 80 GGC, which allows political donation exemption, doesn't have a higher limit. So somebody earning 20 lakhs, a lot of time also does a 10 lakh political donation and try to claim the entire exemption.
What is the section about first, before we get into why people are getting these notices? What is the section about?
So section is pretty easy. So any any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
Okay.
So if I'm earning 20 lakhs and I say that I have donated to a X party 20-30 lakh bucks, I can claim the entire exemption.
There's no limit.
There's no limit at all. So people have been using this, tool to evade a lot of taxes, especially employees, because that's where the major taxes are cut. And that's the income tax department has started a very big drive to catch these people. And most of these political parties are not genuine.
But tell me something, and we'll discuss this specific case that stood out in the sale of a house and between a husband and a wife. So the question that I have is that if you have done such a donation, knowing full well that you are getting a tax break and the donation is actually being returned to you after this cut, how does that stand up in the court of law? And I'm saying that ultimately, okay, these are so-called fake political parties, but they are registered as political parties. They've got the certification and they're giving you a receipt. How would it hold up in the court of law?
So it doesn't hold up because what happens is first they arrest these political parties.
Okay.
And then they take statement from them that whatever donations have come, the cash was returned back to them. So they have a proper written statement. So when you go to the court of law and try to challenge this, even I can say, I didn't know they were fake. A lot of people say that I didn't know they were fake. I did with a good generosity.
Yeah.
It doesn't hold up too much.
Because you've proven that you've gotten the money back.
Yes. In fact, you will get into more trouble because then they will call you for statement and various things will start and people don't want to get into that zone. So better to pay off and, or go to appeal, and if there is some amnesty scheme coming, pay the tax and get yourself free out of that.
Especially if it's a large amount of money. Right?
Yes.
Would there be the payment of an interest on tax due in such a situation?
Yes, there will be a penalty also and there will be interest
How
also.
does that work?
18 to 24% is the interest and almost 25% to 100% is the penalty on the amount of tax which you tried to evade.
Wow. No, but I'm saying in this case, somebody's gotten a notice and suppose they've done this. Even in that case, if they go back and say, okay, hey, you know what, you mentioned...
Yes, ITRU. You can file a revised return, yes.
So in that case also...
You have to pay the penalty also, the interest also. Both things you have to pay.
How is it determined?
So whatever the amount was there, suppose it was a 17-18 donation.
Yeah.
So almost 8 years have been. So as per 8 years, you have to pay 18% interest on the tax component plus 25% of that amount additional has to be paid as a penalty.
Wow,
to the income tax department.
And as a chartered accountant, your advice would be that if you have engaged in this, you should go out and pay that up.
100%. Most of the people, what they are doing is they are just trying to play with the time so that if some amnesty scheme comes, they will file. Because in amnesty scheme, what happens is a lot of time you are getting some rebate on the interest and the penalty side. So people are a lot of time waiting for that amnesty scheme and trying to just take more time, replying the notices or probably filing an appeal. So that's the only... Eventually, you'll have to pay. There's no way out. You cannot say...
And this is only one of several instances where people are getting these notices.
Yes,
so
yes.
The second, incidentally, is where there is credit card spend that is scrutinized.
Yes.
Now, this is an interesting thing because you and I both know there are so many videos out there that talk about how to generate points quickly, and people tend to pay for their family. Right? So if you are booking flight tickets for your family or you're booking a hotel for your family, you pay and it all gets paid to you eventually. So is that the kind of thing that can cause you to get a tax notice?
Yes. So mostly people who have done a credit card swipe of more than 10 lakhs are getting these kind of notices where they have been told to know the source of the income. So how did they make the payment? So if you have made a payment of 20 lakhs on the credit card, they're asking for the source.
Sure.
So if you have used your friends, if I am booking for you supposedly that ticket, you or me are not related. And if you are sending me some money, that might get taxed as an income.
All right. So that's credit cards. And so therefore have your rationale or your reasons ready for why you've spent more than 10 lakhs, right? Or very large amount. You mentioned capital gains arising out of futures and options.
Yes.
Why is this problematic?
Because what happens in capital gain, the premiums are very less. In case of FNOs, the premiums are very less, but the turnover is very high. So when your turnover is very high, obviously it gets red flagged. And that's the time when income tax starts sending more notices. So people tend to avoid taxes on their capital gains or on their FNO income. They try to give it in the capital gain. Whereas FNO, even a 1 rupee income, it should be clubbed in a business income. It's a business income purely, and people don't want to go to that route because like you are an employee, so you don't want to file a business income.
So the simple rule here is that if you are engaged in futures and options trading, and if you are making even a single rupee of income, then you need to go into the relevant ITR form and file as business income and not any other. And if you don't do this, then you will likely get a notice for previous year where you filed it under the wrong section, right?
Yes.
Okay. You mentioned sale of houses, and we'll talk about this in more detail. So actually, before we get to that, let's talk about the foreign ownership.
Yes.
You mentioned that as well. And this has to do, as you've pointed out, with ESOPs that you might have gotten in companies abroad. Is that what you're saying?
So a lot of times in India, like the holding companies are outside. So people get ESOPs of their holding companies, which probably might be US, Canada, or any European countries. And they don't show it in India. Whereas you have to compulsorily, if you have even 1 rupee as a foreign asset, you have to compulsorily declare it in the FATCA, and people avoid it. So that is where a lot of income tax notices have started.
Sorry, you mentioned FATCA. What is FATCA?
Foreign asset declaration. Basically, if you have a bank account in US, you have a bank account in UK, a lot of time also what's happened, like an employee of TCS might go for a year to UK, so he might have some bank account there. Which is still active. He has come back to India, there would be some 100, 200 pounds left there. But he has to declare it in India. Even if there is a 100 pound, if you hold any foreign asset, you have to declare.
And then?
But majority of the notices are being issued for the ESOPs. Because if ESOP was issued in foreign, what happens is people don't pay tax in India. They should be taxed as perquisites. So, but people try to avoid those taxes by not showing it that they got some ESOPs or they have some bank accounts in Singapore, US, and they try to avoid all these gaps. But luckily, with the kind of exchange of information which today Income Tax Department has, it's very high, and they are getting all those statements, all those
So just a clarification on this. It is relevant that you have ESOPs if they were issued in a year when you were a resident of India.
Yes.
Is that right? If they were issued in a year or vested in a year when you were not a resident of India, does the rule still apply?
Still applies, but you have to show it in your income tax. You have come down to India, you still hold some stocks in US, so you have to declare that in your income tax. If you're not declaring, then that's the issue.
What are the implications from a tax perspective on declaration?
So what government will try to do is they will find out how did you purchase these ESOPs. So if you were in India at that time and your ESOPs were granted, did you pay the tax or not? You were in US, the ESOPs were granted, you can provide the explanation and get out of it. But that's where government is trying to catch people where they were in India, they were granted ESOPs outside, or probably somebody sold their ESOPs. But they didn't show it at capital gains because there's almost 20% tax on that. And that is the time when income tax starts sending the notices.
So it's a matter of dotting your I's and crossing your T's. I nearly said the opposite thing, but anyway, lucky that my brain is not playing tricks on me. But having said that, let's talk about one more, which is you said cash deposits.
Yes.
I don't know how many people are doing that. I haven't heard of many now doing cash deposits. Does it still happen?
But a lot of business people keep withdrawing cash and depositing cash, and if the cash deposit is more than 5-10 lakhs, income tax is just trying to ask them what is the source of this cash. Because if supposedly you sold some property, you got 5-10 lakhs cash and you're trying to deposit that, then income tax will come to know, because you have to have a source of that cash, whether it came from selling some gold, whether it came from, whatever source. But
people have been selling vegetables or claiming to have sold vegetables and using that as...
so they are showing it as agriculture income. But if you're showing an agriculture income, you have to have the receipts of the agriculture income. You have to have the land in your name, or probably an agreement which states that that land has been rented out.
So I can't grow cabbages in my balcony and sell them and use that as...
What would be the amount of that? 10,000, 20,000?
They're very good cabbages, Abhishek.
But if you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
That's a good point. Okay, so you need to have valid proof of having generated that kind of cash, right? Okay, let's talk about the last thing, because that will lead us to the next leg of this conversation, which is how to deal with the sale of real estate.
Sale also and purchase
And
also.
purchase.
Yes.
So why could people be getting notices for sale and purchase of real estate?
So for purchase, mostly it's again what's the source. And especially NRI people have received a lot of notices. What they had done is in the earlier 7-8 years, they had sent money probably from Dubai. They were working in Dubai, Europe, US, Canada, anywhere. And they were sending money to India and purchasing these properties. Income tax have started initiating the notices. Why? Because their Indian income is zero, which is true. But they want to still know the source of income, that how did they get that 1 crore or 2 crore to purchase the property. So a lot of NRI people have started receiving notices on the purchase of property. Even though the source is legitimate, they still want to go inside and in depth and check if there is any hanky-pankiness in purchasing this property, whether the individual was actually an NRI at the time when he sent that money from any part of the country. That is why income tax is behind people who are purchasing properties in larger chunks.
Now, this NRI situation is quite problematic because when you are a buyer from an NRI, the onus is on you as the buyer to deduct tax. Is that right? And if you don't deduct tax because the individual has not told you that they are NRI, which they should be doing, then you can be liable and you can have to pay a penalty. Is that right?
That's right. You have to deduct about 12.5% in TDS
of
today.
the total amount?
Of the total amount. So if an NRI probably purchased a property at 4 crores, he's selling at 5 crores, but the 12.5% will be deducted at the entire proceeds of 5 crores.
You as a buyer can get a notice from the tax department asking you to explain why you did not collect
Yes.
TDS.
If I have sent the money in his NRE or NRO account and I have not deducted the TDS at the right rate. So if the property was, the NRI was holding the property for less than 24 months, I had to deduct 30%.
Sure.
If he holded the property for more than 24 months, I had to deduct 12.5% plus surcharge plus cess.
Right.
And if I don't do that, then I'm in problem and income tax TDS department might start prosecution against me.
And you could have to pay penalties on the amount that you... What are the kind of penalties you would have to pay?
Again, 100% of the entire amount. So
100% of the entire amount?
Yes, it can go 100 to 200% is the penalties which are range of... And problem is that in income tax, there is very less arrest. But in TDS, if you try to play around with TDS, the chances of arrest is very high.
Okay, so... Therefore, when you are buying a house from anybody and it's a secondary sale, obviously when you're dealing with a developer, you don't have to deal with this. You need to ask whether they are NRI. But if they are not forthright with that information, is there a way for you to check that they are NRI?
See, mostly how do we check is that are we sending the money to his savings account or are we sending it to the NRE?
How do you know
account?
the difference?
When he sends the check that you need to transfer to this account, so obviously the account type is written that this is an NRE, NRO or a savings account. So that is the time 90% of the times we come to know whether this guy is actually an NRI or an
Is
individual.
it possible that they give you an Indian bank account to transfer it and they can still be an NRI?
Yes, that is possible.
So and then you're still liable to pay TDS? I mean not TDS but collect TDS?
Yes, but mostly I will not come to know. If somebody is lying to me, I will not come to know.
So then what is your defense? I'm saying what is your defense as a buyer, as a buyer from an NRI if they do not disclose to you because they don't want that tax to be deducted, so they don't inform you. What is your defense?
So I think when such notices come, you can actually reply to them stating that the buyer didn't inform us that he was an NRI or an NRE, NRO account holder. He gave us a savings account and we transferred the money to the savings account. So now the prosecution will be started against the NRI person.
Hopefully.
Yes, because he gave the wrong bank details to get the money transferred.
So that if the wrong bank details are given, that is there any other way to check if a person is NRI?
Not much, whether he's an NRI, NRI, because every year the status can change. It's not like a passport, whether he has an Indian passport, whether he's a, some foreign passport or other than different passports. But in PAN, it's very difficult to know whether that person is resident.
No, exactly,
or not
because you need to have spent a certain amount of time in India. If you've not, then you effectively in that financial year become NRI. Right? So so it's complicated. So therefore, viewers should bear this in mind. If somebody is giving you an NRE, NRO account, then of course you need to be collecting tax or deducting tax at source. If they're giving you a savings bank account, then that is your defense. And that's the only thing that I can say.
Just one hack for the NRIs who are selling their property and giving the NRE NRO account, they can apply for a lower TDS deduction certificate.
I do want to talk about a few ways in which people should, because I got an interesting query. Okay, so the query that I got, and this is not related to tax notices, is related to sale of property. The query I got was, if you are selling a house that was redeveloped, does the value at redevelopment count as your starting point for the calculation of capital gains tax, or does the original cost of the property get calculated? And how do you choose between the indexation benefit at 20% or 12.5% flat rate?
Right. So the answer to this is, you will fall into one of the three buckets. The first bucket is, did you purchase the original house before 1st April 2001? Or you purchased the original house between 2001 and 2024, 23rd July 24, and whether you purchased it afterwards. In the first case, if you have purchased the house before 2001, what will happen is you have to calculate an FMV, which is a fair market value as on 1st April 2001.
That's when the index starts.
That's where the indexation starts. And from there, you can calculate how much is your index cost. Now for benefit, what is indexation? Basically, government says that whatever the inflation rate is every year, let's increase your price of the property by that much rate. So almost about 4 to 5% is the annual indexation. So if you have bought something at 100 rupees in 2001, today it costs about 200 or 250 rupees as per the index cost. And if you sell it at 300 bucks, so government say only pay on this difference.
Between 200 and 300. 200 so 100 rupees and 300. Not 200 rupees.
Yes. So you have two options. Either if you have purchased for 100 and sold it for 300, you pay 12.5% without claiming any indexation benefit, or you pay 20% with indexation benefit.
So the simple answer, I think, in this case would be to calculate the two and see whichever is less, you pay that.
Yes.
Right? Now, a couple more things, because there was an interesting story recently about a couple that went all the way to court to settle a dispute because the wife sold a property and used the proceeds of that property to buy a property from her husband.
Yes.
And avoided paying any capital gains tax.
Right.
And the tax department was like, hey, that's not allowed. But the court allowed it.
Yes. So that was a very interesting case. What that lady did was, she got a gift from her husband, a house. Okay. When you get a gift, now whenever I sell that house, because it's a gift and from a husband, it's completely tax-free, first thing. Now when I sell the house, I will have to pay the capital gain. So the wife had to pay the capital gain tax. She sold 2 houses. She got about 6 crores in receipts. Now what she did is, her husband holded one more house, which she bought from the husband itself, and paid the husband 6 crores and claimed the entire deduction under section 54, and that the capital gain came to 0. Now what happened in this case is, assessing officer first rejected this claim. She went to CIT appeals. Again, CIT appeals rejected the claim. Then she went to ITAT. Luckily, ITAT allowed this and said this is proper. Why? Because she has purchased the property properly.
So transfer of ownership takes place.
The transfer of ownership is there. Stamp duty has been paid. Payment has been made properly. Then why she should not be allowed the deduction under section 54?
So this is a loophole that has been used, and it has been used effectively. I wonder if legislation will come in to correct this.
Yes.
So that's one thing to bear in mind. The last thing I want to talk about, because we were talking about it on the way to studio, is that there are certain things that you can do to reduce the capital gains that you pay at the end. And one important point that you made was, you can actually save the receipts from anything that you spend on beautifying the house, including furniture and structural repair. How does that work? It's through the life cycle of the house.
Yes. So when you calculate the capital gains, what happens is you have to reduce 2-3 expenses. The first expense is your cost of acquisition. That's the first expense you have to deduct while calculating the capital gain. The second is whatever charges have been incurred while selling. So if you have paid any society transfer fees, you have paid your brokerage, all those expenses can be claimed to reduce your capital gain. And the third is your cost of improvement. So if you have spent anything on your house to improve the house, basically your furniture, painting and all these things, you can claim that as well in the deduction while calculating your capital gains. Only thing to keep in mind is you have to have your proper bank statements where you show that the payments were made and the bills of these house improvements, and then you can easily claim all these expenses while calculating your capital gains.
Another reason for you to keep a good file with all of your receipts, as painful as it sounds. Thank you so much for joining me today, Abhishek. Absolute pleasure having you.
Thank you so much.
Well, this has been a fascinating conversation. You can always talk a little bit more about taxes, and I'm sure you would like to hear more on the subject as well. Let us know what you think and what you'd like to listen to. Thanks so much for tuning in. This is NDTV Profit.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, रबर टेलिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a
Hello and welcome to NDTV Profit. So we're here at State Bank of India after the bank has announced its Q1 results, and I have the pleasure of talking to Mr. C.S. Sethi, the chairman of the bank. Mr. Sethi, welcome to this conversation. I'll start this with the first question on profitability. You've reported a 13% increase, year-on-year increase on the net profit side, while the NII remains flat-ish. You've seen that growth come in because of the non-interest income. Can you tell us a little bit more about how this profitability is coming through for SBI?
The growth obviously, supported by the treasury gains, and we, as you know, we have the largest securities book, right? So